Well, hello everybody. How are we all doing? First things first, let's address the big ass elephant in the room. Enchanté, Rich. Look at that
Hello.
snazzy setup.
Not done yet. Not done. Still working on it. There's still
Not
a
done
whole bunch of
doing.
stuff that needs to go here, and there's some paintings that need to go here, and the whole shebang. And then we'll see. I've got a really nice carpet as well, upon which I can slide up and down.
Ooh, very nice.
Very
Dude, it looks
nice.
sick. Yeah, it looks sick. I love the LEDs as well. Proper vibing.
It's the same one from downstairs, but
Yeah, I
I,
thought it
I
was.
forgot to get the tape that you put against the wall to make it stick, so it's loose.
Uh, you know what? I've got the so you can't see it, but I've got a radiator to the right hand side of my room, and it's just so you know how you have like the L brackets like that on a radiator that like you hook the
Yep.
radiator onto. Well, I've actually just put the LED across the hooks for the rad, and it's not stuck to anything because I can't find any like double sided sticky tape. So behind my couch here it's not stuck to anything. It's literally just sort of like
I don't know.
put across.
I don't know. You could if I move the camera up, you can see it. Like it's just hanging on the railing section there at the top. We're replacing the railings as well because this is like an old one, but it's just hanging from there. And if you look, you can see just behind the curtain. There's like a little blue light that's just
Oh
popping
yeah,
right there. You
yeah.
can see it. And then that's the one that goes behind the painting. It goes down here, somewhere around there. But yeah, I have to keep it like this for now because I can't get the color right. I can't have the lighting just doesn't wanna do what I want it to do. So
Yeah.
it just brightens everything up, and I think it's because this wall is so blue. So the camera just kind of automatically brightens everything up because it seems like it sees this blue as very dark. When this
Yeah.
blue is like a turquoise blue, it's actually quite a bit lighter. So the camera is not doing it justice. So I think once I've put paintings up over here to kind of break a little bit, I'm also putting up paneling as well. So there's some
Yeah, nice.
paneling that I
Yeah.
need to do. Just
Dude,
getting,
so you know Richard Wells' background?
yeah, something
Some
like that, but only
yeah,
a few strips here.
that'd be nice.
Yes. So it should break the blue, and like you can see my forehead bright. Look how bright I am. I know I'm white, but like, dude,
I know I'm white, I'm not that white.
look, you can. I swear, I do get in the sun, dude. Like I promise.
Dude, I
Anyway,
remember when I had my old camera, I would literally look like this. I'd literally look like that.
yeah,
That
dude,
and
it
the
looks like you've never had sun ever. So cold.
literally that and the fact that there'd be nothing on there wouldn't be a couch, there'd be nothing on the back wall. It would look awful, and you know, ooh, that feels dark now. Once you start like, once you start adding to it, like already, you know, you've got like that sort of, should we call it a template?
Yes.
You've got that sort of
Yes.
template office, so you're not so bad. But once you start like, once you start seeing what you want, you know, you be sitting there on stream, you'd be like, oh, actually, it would look nicer if that was there, or if, look, I could add that here and look better on camera. Like now, like I can zoom out on my camera. Oh no, that's moved down. I wish I
I
could
was
do
about
this.
to say that's not zooming.
I wish I could do this remotely. Like I can zoom out like that, and it looks just a bit crap
A
because
bit dark.
there's too much in now. Whereas if I zoom in a bit, let me get the correct zoom. Oh, that
You
feels too
get to
close.
see a lot of your face.
You get to see a whole lot of Will.
Very much a lot of will.
Very much a lot of Will. You know, it's a little bit more like you start working out what you want to see on your camera.
Mm, very true. Anyway, enough of that. Let's clap hands and then let's start the day. It is Monday today, guys. It is a brand new week of trading. You'll notice that the thumbnail is saying that today is Fetcher Vote Nomination Day. When I applied for the thumbnails, that was what was going to happen today. And I see this morning that it's been moved to Tuesday.
Fair.
So I'm like, when did this happen? I'm literally looking at the screen now. I'll bring my screen up now.
I was gonna say, I've literally just brought it up now.
It was Monday. It was Monday 2 weeks ago when I applied for the thumbnails. It was Monday. And now it's here.
The nomination
on
vote,
Tuesday.
tentative Tuesday.
What the hell? All right. So that just means that today's discussion point is going to become tomorrow's, and tomorrow's discussion point is going to become today's. So, hello to everybody. Okay, I need the camera to angle a bit.
I've messed about with my Zoom, and now I feel just too close. Yeah, now I can't seem to get it right. Okay, I think we're back. That's a bit better. You guys can't exactly see my freckles now. It's not so bad.
I think that will I have to do. Maybe I need to sit back. Yeah, I'll sit back. All right. So for this week, let's just go through what is the news events for this week. I think that would help everybody out a little bit, because we're doing Mondays. Mondays is, let's not call it predictions, but it's like our outlook for the week. We've already had CPI and PPI on the Chinese yuan. That was already this morning. Both came out positive. For the rest of today, there shouldn't be any high impact news, bar the typical Trump tweet, typical. We have core CPI month on month, and CPI year on year tomorrow at 12:30 GMT. And then we also have the Fed chair nomination vote day, which was supposed to be today, but it's going to happen tomorrow. That is tentative. Do assume that this is going to be a little bit later in the day. No restrictions on trading this event because it's tentative. However, core PPI month on month, as well as core CPI month on month, year on year, these ones are all restricted for the high stakes traders. 2 minutes before, 2 minutes after the red folder news, you cannot open up a new position. Anyway, then on Wednesday, we have very little apart from PPI month on month and core PPI month on USD. That would be again at 12:30 GMT on Wednesday. So apart from that, not much. Thursday, we have the CHF bank holiday, which is the whole day. We're also seeing GDP month on month on pound. And then we have French and German bank holidays as well. So this might be a little bit of a tumultuous up and down day. And then we have core retail sales month on month, as well as retail sales again at 12:30 GMT on the dollar. And then on Friday, quiet. Quite quiet. So overall, not a massively heavy news week, at least scheduled news, let's rather say. But news from the unexpected realm of Trump, the orange or the tangerine tweet terrorist Trump. Yeah, so do be careful of any of that. I've already seen this morning, 11 hours ago, that Trump basically said he's read the response from the representatives of Iran, and he's not happy with the information. He's just like, it's unacceptable. So when Trump wakes up, do be careful. He tends to squawk, say some stuff. Yes. Anyway.
Yeah, he tends to choose violence.
Yes. He wakes up in the morning and goes, I can't do the Trump voice. I'm just going to go and screw everybody over because I'm a gigantic big baby.
No, it's because he's amazing and he's the best president since presidents have ever been presidents, and he's the only president that anyone will ever need, and he deserves to stay president forever.
Can't argue against that logic at all.
I know.
Shall we have a look at the markets? Or shall we say hello to everybody first?
Let's have a chat with everyone. Let's see what everyone's up to while I try and make my computer work, because my computer, just like Little Britain, wants to say no. So while computer's saying
no,
while computer's saying no, let's have a catch up with chat. But first things first, guys. Before we do have a catch up with chat, make sure that you smash that like button And make sure you subscribe to the channel if you haven't already. We got 106,000 subscribers, dude. That is sick. It's awesome to see that we're growing consistently. It's not just guys, let's get to 100. Guys, let's get to 100. We get to 100, we stop trying. No, 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 no. We are going straight up. What's the next goal? Half a mil? Is that next one? Is it a million?
125, and then from 125 it's 200. We do like round numbers. It's 200, and then it's
No, I mean for the play button.
Oh, for the play button, it's 1
Isn't
mil.
It is. Oh, okay. That's okay. Let's go 125.
Yeah. you get a silver one at 100K, and then you get a golden one at 1 million, and then you get a diamond one at 10 million.
10. Oh, guys, can you imagine 10 million subscribers? Yeah. Oh, that'd be sick. That'd be so cool. Sheesh. Anyway, yeah, guys, let's get to 125. I feel like 125 is just it's reachable. You know, I think 1 million is a bit of a trek away. So, guys, make sure you thumbs up, share the video, or share the channel, and make sure let's try and get to 125.
Yeah, let's do that. All right, learn more. 3501. Hi. Good morning.
Hello there.
MD, nice. I am new, your broker. Thank you very much for joining us.
Oh, awesome stuff.
Adia, free funded account, please. Sure, why not?
Yeah, of course.
Badri, we've got a heart. Thank you very much. We heart you too, mate. Or madam, or miss, or sir, or doesn't matter. Hello to you. Shaw saying hello, sir. Hello to you. We've got Henry out. Good evening. Good evening to you, Henry. We've got Danielle saying good morning, fellas. Good morning. How are you?
Good morning.
Got Felix in going good morning. Good morning to you, Sir Felix. Mixie asking, where has Jonathan gone? Jonathan is no longer streaming with the 5ers. He has moved on in his career, let's put it like that. He has decided to go a different direction. He's still within trading, but he's not with the 5ers streaming anymore. But you do have us here to keep you company. We've got Azrael Trades. Good morning, guys. Good morning to you. Henry, blue. Yes, very much blue. It's, like I said, it's not reflecting the kind of blue it's supposed to be. It's nice and blue. We've got Omos. What? Omaxo. Omaxo. I almost say Omos. Omaxo. Good morning, Rich. Good morning, Will. Good morning to you, sir. Rehan saying, 3 years experience market analysis. Could you please help? Not entirely sure with what you want our help with. I mean, if you've got 3 years of market analysis experience, you don't really need us, do you? Yo. Yes.
Everybody needs us.
Getting personal with Will.
Yeah,
you can see whether or not Will has cleaned his nose.
Yeah. Tell me if I've got anything in my teeth.
Dude, you just blinded me how white your teeth are.
Oh, thank you.
See, I'm not always trolling. I'm always nice. I'm sometimes nice.
The filter works.
Rihanna asking, do I need just one account? Dude, you only ever need one account. However, if you want more accounts, they can't harm, can they? Lucas Trader saying, I achieved a 15% profit on a high stakes program, but the company didn't monitor my profit. And now instead of a funded account, they're giving me a phase 2 account requiring a 20% profit. So was that your first phase? Did you make 15% during the first phase? So how it works is this. When you reach 10%, that's all it is. Phase 1, 10%. Phase 2, 10%. It's not really necessary. So 8%, 10%. Sorry, wait. Let me start again. 10% is the drawdown. You need 8% for phase 1, and then 5% for phase 2 with the old program. The new program requires you to make 10%. Okay. So even if you make 15% phase 1, it makes no difference. It will only look at the 10%. Then it will be evaluated. Then they'll go over to phase 2, and then your phase 2, you need to make the rest of the profit. So. And saying the company didn't monitor your profit, it's all logged. So if you go into the hub, all of that information is there. It's logged.
it's not like we're monitoring it either. It's automatically logged. It's not like we're like,
Yeah.
okay. It's not like we do journaling at the end of the day, right? Let's go through all thousands and thousands and thousands of traders and just log their trades. It's all automatic.
So if you had an open trade, that one would have to be closed, and once it's closed, then it gets logged automatically.
Yeah.
Okay.
Although there may be a bit of delay, because I remember I was trading a few months ago, I think it was, and I think there was a bit of I think it was like a few hours delay, for it
Syncing,
to log, for it to sync into the dashboard. So just don't go thinking that, oh, I've just closed an EU buy for like $3,000 profit, and then you look at it and it's like, why isn't it in my dashboard? But like, just bro, chill. It will sync. It may just take a little bit of time.
Just take some time. But they definitely, everything gets checked. Everything is monitored. If you have open, closed trades, in profit, drawdown, doesn't matter. All of that information is logged, and then they look at the capital amount to see how close or how far you are from the target. If you made 15% from phase one, that extra 5% means nothing. You only needed 10%. So once you reach 10%, you close all of the trades. You've made 10%. It doesn't roll over to phase two. Phase two, you start off with a new account that needs to be, for you to make 5% again to reach profit. The phase one doesn't roll over to phase two. And then once you've made 5% in phase two, you will only then get your funded account. It's not a one phase pass, it's a two phase pass. The high stakes.
Yes.
Unbiased trader, good morning all. Rich and Will, good morning to you. Abradolf Linkler, hi everyone without one E. EVRY1.
Beyond the new.
Personal trader, crypto, Richard is in the ocean. Yes, I do like the
Under the sea.
Imagine saying that in North Korea, Richard. GG's your whole bloodline. Yeah, that's probably true.
Wait, what did you say again? Remind me.
The teeth comment.
Oh, I see. Right. Okay, that's fair.
It's not clearly stated on the website that I must report my profits to the company. Monitoring progress or losses should be responsible, but it is.
Yeah, no, it is. No, it is. Lucas.
Yeah,
you don't have to
report it. It's automatically done.
I mean, we recommend you report it to your journal, but
but
that's just to be a profitable trader. You don't have to report it to the company. Every time, how much effort that would be for the company to like receive a report from every trade that they had. Oh,
yeah.
Imagine the ball ache that would be.
Yeah, but no, Lucas Trader, I don't know if you've read the T's and C's to that point. It's automatically done. You don't need to input it yourself. It is automatically done. However, if there are discrepancies between what happened between your MetaTrader and the hub, all you need to do is contact help@the5ers.com. Just tell them your query. They will go through it and they will see where something went wrong, if something went wrong. But in this case, you don't. I think there's just a bit of a misunderstanding. You don't need to monitor the progress and losses and then tell them, hey, look, I had profits this day and then a loss on this day. It's automatically done. Literally, it's automatically done. Smash that like button. Yes, do.
Yes. That's it.
Shh. Yeah. Oh, mate.
Joe is so funny. Like, people are probably thinking, what the hell just happened? Like, what just happened there? Sometimes we do things in the back end, and you know when you both think about one thing and you both take an action, you both do something, and you're like
simultaneously.
Yeah, and you're like but like
that's why I didn't say anything.
You guys in the front end, like you viewers, don't see that. Me and Rich just look at each other like, oh.
It's funny because one of us is like reading ahead and the other one's like bringing up comments as they come. And then you're just like, this one. I was like, okay. Anyway, sure. Hi to you. Henry's saying, organize a giveaway celebration for 125K. You might see a uptick. Yeah, we probably will be doing something ever so often, milestone-wise. But we have a really, really big, probably the biggest prop event that the 5ers has ever had on the live stream. We're going to have in the next month or so. So we're working really hard on that in the background, and I'm pretty sure that that is probably going to lead to us reaching 125K in any way. So I can't divulge anything right now, but what I can say is that we are going to have a massive event. And I genuinely mean massive. And not only that, there's going to be, what do we call it? Audience participation. So there's something very interesting that's going to come into play in the next month or so. And the audience, you guys, get to participate. And I mean genuinely participate. It's really fun. So yeah, we've had a lot of meetings. We've had a lot of discussions. And finally, it is now all moving forward, steam ahead. So yes.
Awesome.
The Girish saying, good day, boys. Good day to you, sir.
How is that?
Kosh here.
Kush, yeah. Hello, Kush. Kush. I'm gonna go.
Kaush.
Oh, it could be Kaush.
I don't know. Well, do let us know where we need to break up the syllables.
Yeah. I'm gonna go with Kaush.
Roland FX saying it is strange how Jonathan left 5ers just before the payout delays issue started. Don't read too deeply into it, Roland. He had already decided quite a while before then. You'll notice that he was the stream manager, and in February I became the stream manager. So this was already a decision that came a while ago. He just needed a replacement. So don't read too much into it. Don't put any like tinfoil hats on and say, ooh, it's related. It's not even remotely related. But yeah, Jonathan is doing well, I believe. He's going on with his career, just moving upwards and forwards. So yeah. Thank you, Shaw. What's the Band-Aid for?
We love you too. Oh, yeah, fair point. Maybe you fix his heart.
Yeah, it's true. Coach saying, just found you guys been looking for a credible prop firm. Well,
welcome.
You will find no better prop firm on earth than the 5ers. So welcome.
Absolutely.
And I would say enjoy your time here, because that's what this is all about. This whole stream is about trying to be entertaining. It's trying to give information. It's trying to just be, what do you call it? Just a good factor in the trading.
Yeah, exactly. Yeah, just a healthy space. A healthy space for people to be. There's lots of influencers out there. There's lots of people out there that have healthy communities, of course. However, it's nice to have a prop with a healthy community, and just to be someone here with a healthy space and a good vibe. Yeah, Will, what's your teeth whitening routine?
It's called brushing your teeth every day and flossing.
Twice a day, brother. Twice a day.
And banana peel. He takes banana peel across his face as well.
Dude, that's the first time I've properly been complimented on my teeth. That's sick. Thank you very much. Guys, you're making me blush. Come on.
We can't see it because it's so dark in your room there. Benjamin.
Do I need to brighten it?
No, dude, it's good. It's good.
Oh, okay.
Can you please address the payout delays, please? Benjamin, yes. So the payout delays was due to a payment provider that we have that had some issues. It's not the 5ers itself. It is a third party that is responsible for doing payments from the 5ers to the 5ers clients. So there was an issue with them. That has been sorted. Now there's only a backlog. So there's a backlog of payments that need to be made to individuals. You'll notice that a lot of people are also mentioning that they've already received their payments. It's just the backlogging. So you're in a queue. It's going to happen. Just be patient. That is all. Lucas, I reached the necessary profit to have my account funded. All my orders were placed manually. My dashboard hasn't been updated, and now I haven't received my funded account. So, Lucas, like I said, reach out to help@the5ers.com. They can assist you with your account queries. So they should be able to give you all of the details that you so need. All I'm going to say is that if you have passed phase 1, the high stakes is a 2-phase account, meaning there's 2 phases. First phase, you must make 10%. Second phase, you must make 5% if it's a new account. If it's one of the older accounts, it's 8% for phase 1 and 5% for phase 2. High stakes is a 2-phase. You need to pass both phases, and then only will you have a funded account. It's not a 1-phase. So even if you make 15% in the first phase, it doesn't matter. You only needed the 10 for phase 1, and then you still need to do phase 2. So like I say, reach out to help@the5ers.com, tell them your query, and they will assist you.
Yeah, boy.
Herman, good morning, guys. Hope everything is proper. Yep, everything is proper.
Perfect, my man. What's going on?
I don't know.
You okay?
Yeah. Sorry, I was just reading.
Real quiet. I was like, has he frozen? I'm just skipping. So guys, like, we don't mean to miss some of your comments, but some of you are really chatting, and there's over 100 of you watching right now. So we want to get straight into the chart. So I'm just going to go skip through. We got some real enthusiastic people in here. Hi, hello, how you doing? Remy joining in as well. Hello. Smash the like button. Absolutely. Make sure you smash that like button. Like I said, though, guys, we're going to jump straight into the markets.
Yeah, let's get into the markets.
Wait, you guys are brushing your teeth? Why has no one told me? Oh, my God.
I love this. I love the fact that there's audience participation.
Yeah, yeah, fair. Where was that? There it is. Audience participation in quotes. Not a good one.
I can't put it any other way without giving away what it is, Felix. So the problem is if I go ahead and say it is.
I think it was the quotations just made it look really illegitimate.
Yeah.
Like illegitimate.
Audience participation.
We're definitely going to have audience participation. No, guys, we actually are going to have audience participation.
Trading competition with the audience, Henry? ?
Dude, how sick would that be? But you just know that everyone would just full-fledged it. Like they would just like sledgehammer full weight swing it.
Once again, Lucas, high stakes is a 2-phase program. If you've only passed 1 phase, like I said, just go and read the T's and C's. You'll see high stakes is a 2-phase. You need to pass both phases. If you made 15%, which is the amount that you need to make, you still need to make another 5% in phase 2. I don't know how to explain this to you otherwise. It's 2 phases. So you pass phase 1. Congratulations. You didn't need to make 15%. You only needed to make 10%. You still need to pass phase 2. So if you've already contacted support and they've told you that you need to make phase 2, just go and read the T's and C's. High stakes is 2 phases. We have 3 different accounts. A 1-phase, which is the pro growth and the hyper growth, which is a 1-phase account. The high stakes is a 2-phase evaluation account. You need to pass both phases in order to get a funded account. And then you have the bootcamp, which is a 3-phase, 1, 2, 3 phases that you need to pass before you get a funded account. So the company is not going to swindle you to try and get your money out of you. They're telling you that you only passed phase 1. You still need to pass phase 2. You need to make 5% in phase 2. Just read the T's and C's. It's all there. Like, it's all there. Straight up.
It's probably one of the most in-your-face ones as well. Anyway, guys, you know, we're gonna move on from that. I feel like we've really explained the mustache off that now. So let's jump straight. We'll let chat help you out with that one. Yeah, let's jump straight into the markets, guys. Rich, what are you seeing today?
I was having a look at NASDAQ as always. We're starting to. I don't know. Okay, I'm going to go over to the hourly and you kind of like see what I mean. So if I just remove that. We had a very bullish day on Friday, very nicely bullish. The whole day, just from open all the way to the end of the day, was just bullish, 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 bullish. And then coming into this morning, we did wick into a new all-time high, and then we kind of slowed down. So, as always, you'll see that if we have reached a new all-time high, the Tokyo session seems to be a little bit more flat these last few days. So, well, last few weeks, 3 weeks or so. I'm just looking to see for a bit of a pullback on NASDAQ before we potentially start pushing up again. And the thing is, you get most of your movements just before the New York session opens up in any way, whether it's a bit of a pullback or a continuation. I just want to see how deep of a pullback we can get on NASDAQ before we start going long. I don't know if we have ended our super run that we've had. So 11 days, 1 day bullish, bearish, 2 days bearish. But in general, it's still very bullish. So like they say, don't step in front of a moving train. In this case, I think NASDAQ is still quite bullish. I want to see a pullback, though. So that's what I'm seeing on NASDAQ. I'm looking at a bit of a pullback. How deep that pullback is, I'm not entirely sure. I think we can potentially come back to this area over here, which was on Friday the largest bearish action that we've seen. And it also happens to coincide with the previous day, Thursday's highs. So if we can get back to this area to pick up some orders and then start going bullish again during the New York session, that would be great. As it stands right now, it is a little bit flat. So you can see the price action in this area over here is very, very flat. We did, with the new London session opening up, we did get a nice bearish candle there. However, no real follow-up. We do have the open of the day or the low of the day down here. Let's just pull a box through. We do have the low of the day, which was the open basically. So from open, wicked down and tried to pick up, made a new all-time high, and has since then just been kind of flat in between. I want to see us break through, push a little bit lower, pick up some orders, and then potentially start picking up again. How deep this pullback is going to be is really going to depend on if there's going to be any news today that's going to come out. I don't really see us having a super, super deep pullback, but we'll see what happens there. That's what I've been looking at right now.
I rate that. Yeah, nice. I rate that. On oh, I haven't got my screen. Let me show you my screen. There we go. Why do I freeze every time? Oh, I'm not freezing as bad. Okay. I'm still freezing though. Yeah, just not as bad. Proper. Okay.
There we go.
Right.
Much better.
There we go. Sweet. So, let me clear my throat. Right. Let's just mark out the Asia high and low, GU, EU, Asia high and low. Asia high and low. I'm going to buy a new PC. I think I've decided, guys. Let me know if anyone recommends any specific PCs that I can look into. They've got to have... got to be capable of multitasking.
I think that's user issue.
And I mean... You can't see
Are you rubbing your tummy at the same time that you're tapping your head? Can't see your hand.
Yes, though. FYI, guys, I was rubbing my tummy as well.
I'm going to, while you're doing that, I'm going to set up a NASDAQ short, just a quick little scalp.
Nice. There we go. So we're looking at the gap on gold as well, which is rather interesting. I'm going to go to here. The reason I'm not filling the whole gap is because we've already had this bit mitigated. So we've already had this bit tested. I want to see the fill of the rest of it now. Let's have a look, see what we're doing on the 4 hour. Now, the reason, again, guys, if you remember what I was talking about, was 4 hour is sort of my weekly. I'll take a look at the 4 hour on a Monday. And then what I'll do is I'll go from there, 4 hour, down to the 1 hour, down to the 15-minute, down to the 5. That's what I do on a Monday. From Monday onwards, because what I like to do on the 4 hour is mark out where potentially I could be interested in. What I mark out then below, once I've marked out on the 4-hour, Monday, Tuesday, Wednesday, Thursday, Friday, I don't trade Fridays anyway, but Monday to Thursday, I'll usually then trade from 1 hour down. So on the 4-hour, let's mark out potential areas of interest.
Can't wait for Dirk to be here.
Yeah. Simple thing first is mark out the low, mark out the high, mark out consolidations, and then mark out areas of potential resistance. Or de la resistance. I'm so sorry if that was an awful French accent. Anyway, so now that we've got that,
skill issue.
Yeah, 100%. Yeah, can't follow that. Nope. I have not got skills to pay the bills.
You do. Of course you do.
Yeah, fair. I mean, I suppose at the moment I do. I haven't said that they're coming back. I didn't in the first quarter. First quarter of the year, I was eating out of food banks. I did not have the skills to pay the bills.
Said the person who was living in Hong Kong for 6 months.
Yeah, fair point. That's probably why. Yeah, that's probably why. It's so expensive over there.
Sorry, guys. I need to relocate countries so I can actually eat.
Yeah, dude. If I went to like Thailand or something where it was super cheap, it probably would have been a bit better. Yeah, what's that?
It's a baguette, and it looks like somebody who's playing like paddle.
Oh,
or tennis.
Oh, I was gonna say I can see the baguette.
Well, I think it looks like a paddle. Yeah, it does look like a paddle. I'm just not. It could be somebody that's about to throw a ball.
Yeah, that was kind of my first thought. It was someone throwing a ball, to be fair.
Big red ball.
Big red ball. Clifford the big red dog. Anyway. Apparently we're really side questing today, aren't we?
Okay. He's throwing a baguette at you. What is that?
That makes more sense.
It's the Muffin Man throwing a bunch of muffins. It's like, oh man, do you ever run out of muffins? No, I am the Muffin Man. I work at the muffin factory. And throwing a muffin.
Do you know the Muffin Man? The Muffin Man. The Muffin Man!
Who lives in Drury Lane. The Muffin. Well, she's married to the Muffin Man.
Adolf Linkler is now the Baguette Man.
Yeah. Well, he is French, so...
That is true.
1 and 2 makes 3.
Quick maths lesson, guys, with Richard Butler, everybody.
1 and 2 makes 3.
Right. Anyway, we've got consolidation. We're slowly breaking through. Potential pullback into a zone of interest. A couple of different areas that we could be interested in here. We've got this consolidation area here. This sort of, do we call it a demand zone potentially? It's just a zone of consolidation that we broke through. There's a potential break and retest area of this. And a lot of people struggle to see this on the 4-hour, I feel. They see that we've had consolidation. They've seen a reaction to the consolidation. And then they see a complete reversal. Show us your Hello, CC.
Hello, CC.
Hello, CC. Hello there. Anyway, so once they see the reaction from it, they usually sort of invalidate all this. They usually think, okay, this has had a reaction from. What they fail to realize is that it's been a break of this high, break and close above, pull back, and this then becomes an area of interest. That is so squiggly. Let me try and clear some of this up. What they fail to realize then is this becomes an area of interest for a break and retest. Now, if this was on the 5-minute, usually people would take a bit more interest in this. Because it's the 4-hour, people forget that this price action still exists, and this is still valid price. So now that we've got this area here, so area 1, potentially, pull back into, continue up. Area 2, pull back into this area, continue lower into maybe a deeper zone, being, I know what to get Richard for his birthday present. What? Here. Fair.
I was about to say, CC, you ain't never taming this. Like, I've tried. My wife has tried. It doesn't work.
Hairdressers have quit their occupation due to Rich.
Can you talk like Elmo from Sesame Street? I'm pretty sure I can.
Yeah. Which one's that?
Hello, mister.
Oh, is that Elmo? That's the red one, isn't it?
Yeah.
Yeah, I thought so. Yeah. Okay. See. I know. I'm not that sort of technologically, socially, and TV inept. So, like I was saying, we will get through this analysis eventually. I promise. Yeah, like I was saying, we could look at coming down. This area here is a really nice area for me to take interest into. I don't want to be selling from this area. I want to be looking. Definitely an
Stop
RTX.
getting so distracted, Will. Carry on with you. I'm engaging. I'm
Not
engaging
bringing
the chat.
interesting comments up then. This area here would be a really interesting point of interest for me. I want to be seeing buys from this zone. Buys. Yes. Could have put a text box on, but I decided to draw it. So yeah, I want to be seeing buys from this area. Why? Because we've got area of interest here, which is break and retest. We've got an imbalance here. We've also got this sort of this base area. It's like a let's call it a double base, because it's not a consolidation, but I feel like it's not a base for Rich, because I feel like Rich would call a base a single candle. So I'm going to call it a double base. We're going to.
This is on the 4-hourly.
Yeah.
That move led to a new high being made, so not quite. The
Well, I'm going to
the base is after the new high has already been created.
So this would be a base.
If there was a strong continuation, yes.
Fair. Got you. Well, I'm patent pending this as a double base. That's what we're calling it now.
4-hourly double base.
4-hourly double base. We'll
up like this.
Yeah. Bum 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 bum. We'll see if there's any validity in it as the coming weeks and months go on. But this is a double base. We've got this area break and retest. We've got this imbalance zone here. Plus, we've got this disrespect of this low, followed up by this massive movement up. And then, if we can pull back and sort of shift and what is that? Shift and continue to the high, or to the higher side, to the bullish momentum. Anyway, I'm going to delete all this absolute magnificent artwork. No, I'm not. I'm going to try and try again. There we go. So that's what I'm seeing as we drop down onto that was just one time frame. Oh my God. Come on, Will, speed up. As we drop down onto the 1-hourly time frame, literally the exact same, except what we're going to do now is just mark out the more interesting areas, the sexier areas, should we call it. Now, that for me is going to be especially areas of consolidation. Not quite session highs yet. That'll be on the 15-minute, but mostly areas of consolidation and areas of interest. So this to me is the 4-hour break and retest that I just marked out. This here is the low, the double base that I marked out. So now this is a 15-minute consolidation before the move higher. And we've also got this area here, which is the 4-hour imbalance, or it's the sort of fair value gap, if you want to call it. So that's what I'm looking at now. What do we want to see? We've got this consolidation here. We've broken and closed below. What can we see? I want to see a pullback back up to this area, and then a continuation lower, a continuation into some form of area. Have you seen these programs where there's someone talking on TV and then you've just got the sign language in the bottom right hand corner? I feel like that's Rich. Like, he's bringing up comments and being like, "Oh, thank you very much." Oh. And then he's catching my eye every now and then because I'm looking at the charts.
I'm not trying to distract you, mate. I'm
making me giggle.
Yeah, I'm just trying to interact. And if someone says they love us, then hearts, bro, or like this one, or like that one, or like this one. Yuki.
Bosh, you do you, boo.
This one is a bit wonky. It's a wonky heart.
The heart isn't.
One of the valves are not working that well.
Oh dear. Go get that checked.
Heart disease. Should check it.
Yeah, I'd go check that out, mate. Anyway, so we have also got a gap here as well. I want to see a pullback up into this area before then a continuation down into an area of interest. Where are we going to target? Not too sure yet. Possibly this high. Although I want to see what happens at this consolidation, because this consolidation may be the reaction which breaks and continues above, which means that we do get the continuation pattern that I wanted to see. We just don't come as low as I initially wanted to. So we've got to trade what we see, not trade what we want to see. You guys would have seen that got clipped on the 5ers. Broken heart. You guys saw on the 5ers that was posted of me. It was clipped from a live stream from last week of me saying, guys, you got to trade what you see, not what you want to see. It's good to understand what your strategy is saying. It's good to look at the markets and say, right, okay, I want to see price come down into a large area of interest, maybe a pullback so I can sell into it, and then maybe some consolidation, break and close above, and continuation higher. That's what I want to see, right? Okay, now I know I want to see. That's what my strategy says. Now I need to trade what I actually see. And right now I'm not actually seeing anything. So therefore I got to wait until I actually see what I want to see. And once I actually see what I want to see, that's when you can execute with confidence. And I feel like that's where a lot of people struggle when it comes to their trading strategy and actually, trading with confidence and not closing early, not revenge trading, not tilting, not over risking. It comes through being patient, and it's a big part of it as well, patience. Anyway, as we move down onto the 15-minute, we probably won't need to go down onto the 5 just yet, because the 15 will probably show everything we need. We do have, now we can start looking at potentially session highs and session lows. So I'm just going to go check my indicator on real quick, mark out Tokyo high, Tokyo low. Let's try that again. Let's mark out Tokyo high. There we go, Tokyo low. Bosh. There we go, perfect. Now we can get rid of the indicator. Boom. So now that we see this, we're currently within a range at the moment. We are on a downtrend. Easiest way is go from the high down to the low. And if you put a ball at the top and it rolls down, you're in downtrend. Cool. So now that we've identified that we're in a downtrend, what we can actually do is say, right, okay, if we buy this now with counter trend trading, although the higher time frame is technically looking more bullish. So what do we wait for? We can't buy this because there's no indication that this could go up. We've got consolidation on the 15-minute here, probably on the 5-minute as well. I will touch on the 5-minute briefly, but we probably don't need to yet. So we've got this consolidation here. We've had the break and close below. We could either wait for something up here and then sell down, or we can wait for something up here and then sell down. Then you are following the trend of the market being sells and being bearish. So you're then trend is friend. You're then on side with the market until you get into your area of interest, and then lower time frame price shifts to the bull side. Then you are trend following with your higher time frame. What am I doing? There we go. Then you're shifting your trend to the higher time frame and the lower time frame to be on momentum with both. When you come to India, Davis, very soon I got to pick up a cow.
No, dude.
Or is he in Africa?
It's in Africa, mate. Come on.
It is in Africa. Never mind. I'm not coming to India. I'm coming to Africa first. I got to pick up a cow from Africa.
And the cow's baby.
And I have now
the
got
little
a
calf. You need the little calf as well. You've got the cow and the calf. You're gonna have both.
I have got the cow
and if you're lucky enough, you might get a bull as well.
That, you know what? That would be good. A bull calf would be good. That would be good. I don't actually know if he's in chat. Yeah, I haven't seen him in a while. Let me know if I got a bull, and let me know if bull means more money than a cow. What's the female cow called?
A cow.
It is just yeah. Would you have a sheep? A female sheep's called a ewe.
Yes, but that's a sheep.
Yeah, well,
we're talking about cows here, mate.
No, you see my point though. A cow is it's like a chicken. You got a cock and a hen, But it's still called a
I'm
chicken.
pretty sure that it's not a chicken. I'm pretty sure it's just a cow, mate.
No. Right, so guys, I'll speak to the more educated out there. Oh man. Anyway, so yeah. So did I say that was on Geo? This is on gold, by the way, guys. I don't actually know if I specified what pair this is.
For everybody in chat right now, I sincerely apologize for Will's lack of attention. I am partly to blame for that.
In all fairness, I'm not feeling on form today, so I am trying, but you know, ADHD is probably kicking in quite a bit here.
I'm just giggling, mate. I'm just giggling.
Yeah.
Do you want me to take another pair for a little while?
No, I'm gonna finich gold. I'm on the
and
five.
Then you can try and distract me with chat. See if that works.
I'm gonna go sleep after this. Yeah, I'm gonna go sip some coffee and try not to, you know, bounce off the walls and go through a window or something. Anyway, so on the 5 minute now, we are seeing price is consolidating quite considerably. We've got this range now that we know where the session low is, we know where the session high is. We've also got this sort of consolidation range here. It's not looking too great. That's why I said the momentum isn't quite there. We are in a downtrend. I'd love to see a pullback before a continuation lower. However, if we can get this break and close below, there is potential that we could scalp short this down to this low, but it all depends on what happens on price first. You know, something like that would be nice. So in the ideal world, I think this would be really nice price action as we look at the 5 minute time frame. But right now, I'm really not seeing anything. You know, there's potential that this could start moving up, but as you go into the 50-minute time frame, you can see that we are still consolidating here. We have tapped into a higher zone of consolidation. But honestly, my nice area of interest would be if we can buy up to the sort of 47.03 level and then sell down somewhere over the rainbow, somewhere like 45.86. If we can sell down into that area, then jobs are good. But that's my analysis on gold. I don't even know if anyone probably understood anything I just said then.
Well, you did your best, and that's all we can ever ask of you, Will.
If anyone actually managed to like keep up with any of that, then dude, I'm impressed.
There was somebody who asked about pound CAD. There we go. Ivani. Oh, Ivan. Is it Ivan or Ivani?
I'm going to go with...
I don't know which portion is the name and which portion is the surname.
I'm going to... Oh, that's a good question.
Ivani... Is it Kiritsa?
I was going to say it could be Ivani Kiritsa. Or it could be...
might just be singular name. Well, I'm just going to say Ivan.
I'm going to go with Ivan.
Please let us know if that is your full name or if it is just your, name and surname, or what you would like for us to call you, because I don't want to offend anybody by mispronouncing the names. Anyway, I will kindly have a look at GBP CAD for you. So let's bring up my screen. All right, Will. Challenge for you. You can try and distract me as much as you want.
It's not going to be difficult.
I'll show you how a non-ADHD brain operates.
Why? Who's coming on?
LJ.
Hang on a minute. Don't give me that bullshit. I know that LJ's as ADHD as I am sometimes.
Dude, I think pretty much everybody has some semblance of autism of some sort. And
I'm just like a hyper ADHD, whereas I think LJ is just like he's just like hyper focused, but then hyper distracted at the same time. Like I remember we had this conversation. In fact, I'm pretty sure we had it on stream, where we were chatting about, LJ being a little bit organized chaos. He's a bit all over.
He is definitely organized chaos.
Yeah. And I feel like, me and LJ are pretty matched that way. We're just we hate the simplicity in life. We like it. We just create chaos for ourselves.
The infamous trader asking what happened to your chart, the gray. It's Will is going through something. I don't know, he doesn't have a lot of light in his life.
Million faces.
Where in my case, I'm jovial and blue. Not blue as in like, I like, just like blue. Ocean. You play cricket? Yes, I do. Look at this. Like me setting you a challenge to distract me and then chat distracts me.
Joe,
I don't play cricket, but coming from South Africa, we have a big cricket culture as well. So
I used to play cricket as a kid. I used to love cricket. Wasn't
why
the best.
did you also have a wooden friend that lied?
Okay.
Jiminy Cricket.
Oh, okay. Right, okay.
Anyway.
Where is that going?
Word association. Anyway, pound CAD. So pound CAD, this is the daily chart. This is all the way back in October 2025, so it's a fair few months ago. We had the high basically for that whole year, for 2025, 2024, 2023 as well. So you can almost consider this like an all-time high, but I don't like looking at Forex account or Forex pairs as an all-time high. I don't know. There's just something about a Forex pair and achieving an all-time high status that to me just seems weird. Assets, yes. Bonds, yes. That kind of like stuff, all-time highs. But like, anyway. So since October 2025, we've effectively come down into an area of consolidation. Try to push out back to consolidation, try to push back up again. But you can clearly see with this that since October, we've had lower highs at the extremes. So we're not talking intraday, we're talking just on the day itself. So high, lower high, and so on and so forth, and then lower lows as well. So on the daily time frame since October, it does seem as though we've had a slightly bearish outlook, even though you've had long periods of consolidation on the daily time frame. So consolidation here, consolidation in this section over here, breakthrough, consolidation, break. Here you had a nice downward trend for a few weeks. So January this year until all the way down to March. So 3 months of downward price action. And since then, we've gone into bullish price action as well. Now, I'm mentioning this to you so that I can mention this. We've had strong bullish days since March. So March had very strong days, attempted a pullback, very strong day, and continuation pushing up. And then we had multiple days of bullish price action, creating a new high over this period that we've had. We've come down from that high into quite a long stretch of almost 2 weeks of just sideways price action. So if I go down to the 4-hourly, you'll see it right here. Very, very slow. So this was April the 19th. This whole section here is basically just consolidation. We had an attempt at a break roughly around the 4th of May, which failed, and then since then we started pushing up with momentum. Now, this line that you see here is a bit of a area of resistance, or initially. So initially it started out as a order block, pushing price lower, volumetric reaction, pushing price lower. We came back to it. We failed to break through, pushed away from it, came back again, failed. And then when we eventually broke through it, it was volumetrically breaking through that area. We almost came back down to test this area, which is now an area of support at this point. So we almost came back down to test this area of support. We started pushing up. We came back down again, tried to break through, sort of just wicked, tried again. So a little bit of consolidation, I wouldn't say consolidation, but a little bit of a attempt to break above, which failed, and then a continuation lower, but immediately back into this area of consolidation. So in my mind, GBP CAD should be a bit more bullish, considering that when we had this break, it was nice and volumetric. We did make a new high when we had the break of this area of support, well, what was an area of resistance. But when we came back again pushing lower, we went straight into consolidation. And now we're starting to increase again with a bit of bullish momentum over the last few days. What is this? Since the 4th, so since last week, we have been pushing bullishly. A strong attempt at this area of support. So it was resistance, broke through again, came back to retest and started pushing up. I like the fact that we were trying to push up. So today we had the gap. We opened up quite a bit lower, and since then we have gone into a little bit of sideways price action, even though we had a nice bullish 4-hourly candle. Back down to the hourly, same idea. We had that area of consolidation on Thursday going into Friday. And then since the whole of Friday was a nice bullish day, we would expect a day like today, if we didn't have the gap, to be either slight bit of pullback or a bit of a consolidative day. However, what you can see here is, if I just have the drawing at the right area, is if you have the high of Thursday and you pull it all the way through, you basically have an area where price reversed at, came back to an area of into an area of consolidation, which was a support point, pushed away from it, and then when we reached the same area as that Thursday's high, we had another attempt to try and push price lower, and then price absolutely flew up from there. Now, this was Friday, so this was NFP that led. I wouldn't say NFP actually led to this, but like the runoff led to this. And then since then, we came back down and we're struggling here. I would like to see price push up again to come and test last week's highs on GBP CAD. And if that is broken through, then this channel, which if we just go to the left, you'll see this high that we had here would be the next area of call. And then above that, we have another high point a little bit higher to potentially come and test. So I do think that there is a potential chance for us to break this channel that we had here, at least the upper limits of the channel. Hello, Dirk.
Hello, boys. How was it?
How are you?
Sorry.
Same.
I was just about to say not to share.
Hello, Dirk. Dirk ends up dying on stream.
I think I need to be caffeinated more here.
You need to make that coffee a little bit more Irish, I think, may it clear your throat right up.
I think that's what made him cough.
You just exposed Dirk.
Nothing better than a nice shot of whiskey in my coffee on Monday morning at 11 a.m.
As I go to work.
Yeah, let's get to it. Yeah.
I mean, to be fair, there's nothing that screams finance guy more than whiskey in your coffee on the way to the finance job at like 8 o'clock in the morning.
That's true. That's true. Yeah.
Amongst other things, but the whiskey and the coffee, I think we can.
Depending, you can always see how the P&L is currently.
Yeah, literally.
It depends on how much Irish goes into your coffee.
Yeah.
When you look at the P&L, you're like, this is a two-shot
deeply underwater. It's more like, how much coffee do you want into your whiskey?
It's like, how much blood do you want in your alcohol stream?
Really.
That's the question.
No, still, it would be something. Later, I pick my daughter up from school, and I come there like, smelling like a liquor cabinet.
And then if they want to pull you over, then you're like, no. I'm a trader. And they're like, we understand.
We understand.
Yeah.
Okay.
We understand.
Sorry, have you been drinking? I've been working. What do you do for work? I work in finance. That makes sense. On you go, sir. Right, drive safe. Good luck in the markets later.
Do you need a police escort?
Yeah.
Sirens in front and sirens behind you, just escorting you home. Very important person traveling on the roads right now.
New York Open in 10 minutes. You going to get home in time?
But other than that, I'm pretty good. Yeah, finally solved my MQL5 problems. Have everything running. Now it's just a matter of finding a good balance between expectancy and return on investment. And then I can finally push that stuff live on my leftover evaluation account for the 5ers.
Beautiful. That's what we like to
Nice.
hear, Dirk, my friend.
Yeah.
What led to the revelation of MQL5 breakthrough? What was it?
Chat GPT.
No.
Claude code.
Claude Code, of course, helped fix the bugs when we went into the depths of MQL5, which are very shallow for me, where I didn't know what to do anymore. But
Ankle deep.
to my surprise, because I'm working on lower time scales with this one, so on 15 minutes, and when I backtest this whole thing in MQL5, I do a realistic tick-by-tick backtest. And
Okay.
it was surprising. Before I was working with another broker on this strategy, and the backtest there totally different than the one I got on the 5ers, which showed like, even like small differences in the data in the individual ticks can like lead to totally unexpected outcomes. So I had to export, how do I put this that everybody understand it? So I'm working with a KNN nearest structure here. And for that, I built up basically a library of chart patterns, like thousands and thousands of chart patterns. And on every close of every 50-minute bar, the indicator basically looks, does this structure look like something I've seen in the past? And if it does, how confident am I that the same is going to happen? And if there's a high confidence, which is for me above 83%, it's going to project and tell me basically, hey, this is a good time to go long, this is a good time to go short. And by the way, the percentage hit rate that you hit something like 2 or 3 ATR is like at 70% for the structure, for example. And if everything aligns, it's going to be translated into a trade. But getting MQL5 to accept my patterns library and getting MT5 to use the same ATR calculation method that I used, for example, on PineScript, that was another beast. So, but I found good settings that also survive, like Monte Carlo simulations, for example, and any kind of forward testing. Now it's just a matter of doing the same for other Forex pairs, because then my goal is to kind of build up a portfolio structure. Because if you just do it on in individual Forex pair, you end up like with one trade a month and an expectancy of like 2.5 or 3 pips net, which is leading to something like, oh, wow, I earned like 2% in 2 years or something. Why didn't I invest just in treasuries, And but I'm nosy to see like how is the portfolio effect going to be if you try to also harvest something like correlation patterns, for example, between pairs. But that's still a little bit. I was actually last week on Friday, I was hoping, hey, maybe I can get this thing started on Monday already and show it off, but not quite yet there. So it's going to probably still need another work or two of work.
The fact that you're talking about pattern recognition of in the thousands and then using a, let's say, what is it, kernel-based predictive model?
Yeah, basically, yeah.
Is really cool, because I've looked at the kernel-based predictive models, like the AI learning for it, but the problem is because of the discrepancies in data feeds, it might work if you, in this case, if you use it on TradingView, you might see one thing, and when you want to implement it in, for argument's sake, in QL5, which is MetaTrader, it just doesn't work. It just doesn't see the same information. So I like the fact that you're trying to teach it to learn on the account and on the platform that you're actually going to be using for trading.
You have
I
to
think
do
a lot
that.
of because I think people look at it like, oh, it works on TradingView. Why does it not work on MetaTrader? That's because the information is not the same. The data feed is not the same. Where it gets its information from is not the same.
It's data feed, plus also for PineScript calculates on every bar closed the whole indicator new, which is not in Python. That's what PineScript does. Python doesn't do that. Python works usually with vector-based databases, and so you get different results. But that's kind of the learning you have, when you get into algo trading, like along the way. Oh, this is how it works. Then you know for the next time. And it's always fascinating, like you say, how much data actually influences the outcome. So you really have to optimize it on exactly the data stream you want to use later for live streaming, but not over optimize. You always have to have this validation set that you don't run into the trap of over optimizing things, curve fitting.
It's the same thing with the strategy. It's like realizing at some point you just kind of need to accept that the strategy is going to provide you, I don't know, like 62%. And you trying to get that extra 2 or 3% out of it to push it up to 65% is not worth it.
Yeah. Exactly.
It's just not worth it to try and optimize it. So you kind of get to a point where like, this should satisfy, and then you just move on.
And that's expectancy, by the end of the day. If I see
Yes.
like expectancy is like in a good positive, at a good positive value, I don't really care about the hit rate, for example.
MK90, hey, good morning, y'all. Passed my phase 1. Congratulations to you, my friend.
Nice.
Sharan is saying, how are you today?
I'm very well. How are you?
Yo, my guys. Why so serious?
I'm sorry, did you not hear?
got these scars.
Yeah, did you not see me just attempting to do a gold analysis? You cannot call us serious.
No. Yeah, Will was struggling because a certain somebody who shall remain unnamed kept distracting him
Okay.
with chat stuff, and
I thought
we have no idea who this person is. This person is dead.
standing naked in the doorway or something.
Something like that, yeah. Metaphorically. Ewan, leave my office.
You want to put some bloody clothes on.
Anyway, I see LJ is in the background, but he's not yet on, so maybe he's setting everything up. Will, I'm assuming you need to hop out, friend?
Oh yeah, 10:10. Look at that. I have indeed got to hop out. You trying to get rid of me, Rich, are you?
No.
Choo-choo.
No. However, as they say in Afrikaans, laat jou voete ras.
Same.
Yes. Meaning, let your feet make noise. Laat jou voete ras. Literally means to walk.
No,
Lass deine Füße rasen. Sounds in German.
Yeah.
Little bit.
Rasen.
Yeah.
Or if they say in English, bugger off.
Yeah. Bugger off, mate.
Anyway, yeah, guys, I have actually got to pop off. So, guys, I'm gonna love you and leave you. Make sure you smash that like button. Make sure you share the stream, and make sure that you subscribe to the channel if you haven't already. Make sure you look after these guys and ask them all sorts of fantastic questions. Dirk, I shall see y'all later, my friend.
Peace out.
Don't let the
Schmiert.
bed distract you too much. Peace.
Cheers.
Bye-bye.
So for everybody that's still in chat, on Thursday, we will have our very first official trivia day, where we will have a giveaway for the top 3 on the leaderboard for Thursday. So on Thursday, myself and LJ will be doing a little giveaway. 3 bootcamp accounts, 20Ks,
Ooh,
for
nice.
the top 3 for the trivia. The trivia is going to be simple. We are going to give you guys a few questions. You just need to answer in chat on the day, A, B, C, or D, and then whomever is A, correct, and B, the fastest, is going to be the ones at the top of the leaderboard, and then those top 3 will get a bootcamp account. What we will also do is, if you have won a bootcamp account this month, or let's say on Thursday, if you are in the top 3 again, the next time we have the trivia day, you will not get an account. It will be the next person. It's just to make sure that, let's say it's Dirk. Dirk is the absolute wealth of knowledge around trading, and he's also super fast with his fingers, and he just has, I don't know, all of the answers, and he does so every single week. It might be a little bit unfair to everybody else to have Dirk constantly being the winner. So if you have won an account this month, you will go onto a list where the list basically says, listen, you're not eligible, even though you are the number 1. So I will be keeping track of that, so you guys can just ensure, please participate still, like Henry or Aberdorf Linkler. If you guys are really fast and you just, you're just really smart and you get it done, please participate. It's still engaging, it's still a lot of fun, and you might learn something, I don't know. And then, yeah, we'll see everybody on Thursday for that. Just waiting for LJ to rock.
Yeah, he was
I can go
texting.
have
It's
lunch.
like difficulties with his camera that is acting up again. Those
Oh, I didn't even check
damn
what's happening.
Australian cameras,
Oh, horrible.
Too hot.
It's too hot there. Well,
hot
technically,
there.
it's cooling down like crazy now.
Oh yeah, they're well, not quite. Yeah, no, they are approaching winter time. Correct. Yeah. Here it should be warm. It was on the weekend, but now it's like down to 12 degrees again. So on the weekend it was shorts for me. Today it's like pulli, scarf, and all these beautiful things again. So have you guys been trading anything? I heard something about gold.
Yeah, he was trying to analyze gold, but I kept distracting him. So every time he gets into a sentence, all I do is I just bring up a comment like this, and then he reads the comment, and then he's like, anyway, and then he starts off again. It's just funny.
Yeah, I think gold, we are still in the same pattern. We've seen for a while
Yeah.
this kind of compression zone again, however you want to draw it. It's not like really science, more like a gut feel and waiting for the breakout. We're trading around bull market support band somewhere around the 8 weeks moving average, probably somewhere around still a little bit above the 200 weeks moving average, 200 days moving average. So for me, I really want to see the breakout first, either to the upside or downside. Typical where you could play like a long straddle if you're trading options right now. Buy that one for low volatility and then participate on that. Actually, if I want to look for trades right now, I would rather look like on the shorter time frame there than on the longer time frame, but also nothing really aligning. So for me, the only trade I've took this morning was this one here, along in Bitcoin at around 80,725. So a little bit in profit right now, but that one is going to take a little bit longer, which is based on not technical analysis. This is based on what is going on in terms of open interest in the crypto markets. Open interest means, by the way, for those of you who do not know this, what is the amount of total leverage positions in the market. So how many people, for example, have open Bitcoin perpetual futures contracts, long or short, with leverage? Like leverage meaning you have 10K in your account, you open a 50K position, then you're leveraged by 1 to 5. So it doesn't take into account price or volume or something like this. What is interesting, this data is actually available on TradingView. You cannot get this data for Forex, for example, or for gold or something for free. That's notoriously difficult to get that. But from Binance, for example, for Bitcoin, you can get that on TradingView. And what's quite interesting always is when you see, for example, a period, so the purple means we had long leverage positions liquidated in this case. So we have a open interest that's declining and price is falling. That means long positions are force liquidated. We all know that. You get liquidated on your account and you almost always get out at unfavorable prices because everybody needs to get out of a door at the same time. Same is true when you see those orange bars, for example, or orange zones. This is exactly what happens on the short side then. And usually, eventually, this marks, so to say, turnaround points in the market. Now, I would never use this as a sole indicator. You can do that for a long-only strategy, by the way. So that is on the hourly, not on the 15 minutes. Yields quite good results over 1.5 years, or 2.5 years, sorry, it is 133%. That beats buy and hold already. However, I like to use that on the 15-minute chart with... let me hide this, where I look at these zones when we come out of long liquidation areas, or there was a nice short liquidation one, also was that one here, at the beginning of May. So when we see like, okay, open interest is, or like we don't have this liquidation events anymore, so this orange area, and then we have a nice first bearish bar coming out of a structure, then you very often see a continuation of price eventually, and same to the upside. So that's really nice. This is also why I like to trade cryptocurrencies, because I have this information there without having to see it through, I need to buy this from this exchange, I need to go to CME and pay like $2,000 to get open interest on this option, or euro dollar futures, and so on and so forth. And it's all there, in this case, ingrained in TradingView already. Just, this is like based, because I saw this morning aligning with some other stuff on Bitcoin. So I thought, well, that's a good long trade here to hold, probably for something like 24 hours. Seems like price wants to go higher again there. Other than that,
So you're in
much
that
deep.
trade
I'm
currently?
in that trade right now currently.
Oh.
Yeah. And but it's more of a it's not really a swing trade if you hold it 24 hours, in my opinion. It's still something like a scalp trade. But behind that, there's like a rule book, so to say. I know precisely, based on what is happening right now, what are the chances, for example, we reach like a 1 ATR, 2 ATR, and 3 ATR. I know for the 2 ATR, for example, the chance is somewhere around 79% around the next 24 hours. So it's good to be in this. It's nothing I would do in a leveraged way, by the way. So this is 1-to-1 leverage. Because if you do it with too much leverage, I can show you this on the 1 hourly, for example, on the one I just showed you, the back test. So this is with 1-to-1 leverage. And there's like a sweet spot. So if I tell him, hey, you need to use 300% of a capital, 1-to-1-to-3 leverage, it goes up to 600%. But let's be honest, for crypto traders, 1-to-3 leverage is boring. So if I go up to 1-to-10 leverage, this happens. You're liquidated. Because there's always going to be this one trade, where what is statistically plausible doesn't happen, and it's going to liquidate your account. This is exactly why people, even with good strategies, not only on crypto, this accounts for every market, in my opinion, that use too high leverage eventually get liquidated. Because they have a good running strategy, but they are like, I cannot accept. I only earn like 100% per year. I want to earn that per week, and then maybe it even works for a week, but eventually you'll destroy your account. So take
That
it
sounds
conservatively.
crazy to me. Somebody wanting 100% a week.
Well, I've seen it all when it comes, especially to cryptos. No, yeah. But even with 1-to-3 leverage, 600%. I wouldn't rely, by the way, on the trading view backtest. Yeah, this needs to be validated.
No, obviously,
proper
yeah.
pricing, out of sample backtest and so on and so forth. But it gives the first indication of maybe there's something. Maybe there's a statistical edge. Still good, especially if you compare it like to something like what is buy and hold here. Where do we have that? So first of all, this I want to see here, margin called 0. That's important. And where's buy and hold? Annualized return 129% is of course nice too. Buy and hold, where's buy and hold? I don't know. Somewhere in between here is also buy and hold, which I think is like 84% for this time.
There we go. Right in front of you now.
Yeah,
8,495.
hiding right in front of me.
Buy and hold returns versus buy and hold percentage gain.
Yeah. So quite nice in my opinion. Definitely something worthwhile further investigating, and also something I want to talk on my new video tomorrow about. I recorded this video today, then I discovered, wow, that's great. It's basically just me 20 minutes talking because I picked the wrong screen to record. So I'll have to do it all over again later, but it doesn't really matter. And for us here, also, of course, crypto is not so important because we are mainly focused on what's going on the currency markets. And talking about currencies, the master is back. How you doing, mate?
How we doing? Good morning, afternoon, evening, wherever you are. Happy Monday. How we doing? Had to reinstall all my camera drivers. Sorry about that. And then restart.
What camera are you using?
Just the same one. It's like a J Burroughs, I don't know, whatever the type name is. I forget. But,
Bought on Temu.
I bought it off
The Australian version of Temu.
Aussie Express.
Emu. Yeah, it's Emu. It's without the T.
Temu made.
Yeah,
Look,
Emu.
it's not a expensive one, but it's like $70. Like,
Well, it's okay.
it's reasonable enough. Yeah. So, but yeah, I don't know. It just started playing up. So no idea.
Dracula. But he doesn't live on blood. He lives on pips that he's sucking.
He lives on
off the mouth.
soda. I want
Yes.
to drink a soda.
I'm definitely white.
Anyway.
Pale enough. So
With LJ
Saying
here,
something
I am
like that.
going to hop out, and you guys can go ahead and enjoy each other's company. Monday, LJ and Dirk back at it again. 2 hours of absolute macro and fundamental shenanigans. Right, guys. See you in
Later.
an hour and 40 minutes.
Peace. Easy.
Bye-bye.
See you, Rich.
So here we are
That's...
again.
Here we are. How we doing?
Oh, not too shabby. Pretty good.
Good
Like
to hear.
my back tests going into the right direction. So I'm confident, like I said in the beginning of the stream, like another 1 or 2 weeks, and I finally can launch my expert advisor on trading
Yeah.
automated. Yeah, finally going into the right direction. So maybe I can, finally translate what I do on crypto also to Forex, at least when it comes to scalping. That would be nice.
That'll be good. That'll be good. So progress then, good progress. You're feeling confident.
Yeah.
Very nice. Good to hear. Love to hear it.
And how about you? What insane deals
yeah,
did you do today already?
Hey?
What insane deals did you do already today?
I mean, take a guess. Yes, I did buy up earlier
lower.
in the day after the gap lower. Typical. Dude, I've been playing that same trade week in, week out now. I'm only mad that I missed it last Monday, right? Because I was busy, unfortunately. Because last Monday was actually quite a bigger run than typical. So I didn't get in right on the bottoms after open. Let me share my screen, actually. Here we are. Here we go. So I got in the afternoon, slightly towards Asia. So this is like 4 p.m. my time. So that was the morning. Obviously, ran right up. I got up, where is it, about 11 here. So I already missed that drive higher. But then we kept trailing off. I was like, okay, we still got the gap up there. We've come right down to those bottoms. Jumped in through here. And then TP'd up here just below round number at 80. So
Nice.
117.
Wow. Done for the day. Go back to bed.
79. Yeah. And then I also took a position on the Aussie, since the Aussie was holding up a little bit better overall as far as the drawdown to the lows. So I figured like I'll just split it between the two, and same deal. So yeah, now I'm not sure where to go from here, but that was a good trade
Very good trader. Very good.
this afternoon. So yes,
That's really like something I hear you talking about over and over again, like rinse and repeat. That you like to take the trade the gaps, no? Like that we return or close the gap eventually in the beginning of a London session, or when is that?
It depends. Like the past couple times, normally we end up filling that through Asia, typically. So we'll normally like take the whole run up and then sort of just consolidate up through here. So we get the whole way and then sort of just chop around here, and then either London, another dip down, then drive higher, or London into New York takes us back to the lows, right? But yeah, it's been a consistent pattern, consistent theme. Trump sort of positive through the week, coming into Friday, either straight negative or some little drips of hope. Then we get the weekend. Typically something goes on. Come into Monday, we gap lower, rinse, repeat the cycle week in, week out. So yeah, it's been quite good. And then I did also have a NASDAQ trade, which I actually accidentally left in from last week.
Okay.
But it was up by the highs, which I forgot to close. And then that got tapped out once we gapped down this morning. That was just a little sort of scalp kind of esque trade going into the close after we hit those highs with that the wick coming down there. I thought we'd actually get the drive lower, but we just sat sideways into a close. And then I actually forgot about it. Came back to the market at like 6:51. Obviously, trading ends at 6:50 for closure for indices. So I was like, oh well, I'll just hold it. We'll see what happens coming into Monday. I was like, I wasn't too worried. I was like, okay, I don't think we're exactly going to gap higher. I don't think a deal's going to be done over the weekend. So that worked out. Saturday, I did actually take a Bitcoin trade, which is abnormal. It was just a small one through here, but I saw we had rounded out through this. I was doing some other work, some like back testing stuff. So I happened to be looking at what's it called, TradingView at the time, and then I was just scrolling through stuff, and then saw Bitcoin come down through there. We were starting to rally up. We had this structure sort of come in, bit of a head and shoulders-esque type thing. There was this kind of cluster area that we came down from, so I feel like, oh, Let's take a trade there. I never trade on the weekend. I'm normally trying not to trade.
Interesting.
But do everything else. So.
I didn't trade that exact structure, but I also did some trades in Bitcoin. Like this one, well, this was Wednesday. I didn't see anything really like on Friday, but I had this one that was also on Saturday. This one, which was last night, which I missed out on. And then just a while ago today, I got into this one at around 80,850. Let me see precisely where my entry was.
Nice.
Oh, God. No, this one I see, 80,730 I got in. So that should, if things go like they go normally, should also play out nicely in the next hours. If we like go below somewhere the area of like 8,400, so around here, I would think about closing that position eventually. This is solely based on confluence plus like that we saw liquidation events in Bitcoin. So a lot of long liquidations, this purple stuff here. I told it to the audience and to Richard already earlier. This is the nice thing about cryptocurrencies, because you get this data actually from Binance, for example, on TradingView open interest, which is, if you would want this for Forex or gold or something, you either pay a lot of money or you have to live with like trying to artificially construct this, which is not a good solution normally.
Yeah, exactly. Yeah. So let me just.
The first time I see you taking a trade in Bitcoin, man.
Yeah, no, I mean, an actual trade, right? Like typically, if I'm gonna buy Bitcoin, I'm gonna take it, hold it.
Yeah.
It'll be months, years. Typically nothing less than 3-4 months at the least, right? But yeah, I just happened to see it, and I was like, "Well, it's right there. I might as well." Like, I never trade on the weekend. Primarily because if I start trading on the weekend, it's just never stop, right?
Yeah, I know what you mean.
Yeah, it was right there. So I didn't actually look at it. Like, I just took it. I took it on the Saturday. It cleared on the Sunday for me, my time. So, it was good. I actually forgot about it. Had a look on Sunday night. I was sitting there watching like Netflix and stuff with my partner. I was like, "Oh, I came in. Cool."
But sometimes it's better like this, if you like set, and I mean, you have your stop loss, you have your take profit, obviously, in there, and you just forget about it. Obviously, if it's like something like NASDAQ, that you forget over the weekend or something, there's a little bit of more risk. When it comes to cryptocurrencies, that's the nice thing, that you have 24/7, 365 days trading. Although I understand it can be dangerous. Like my wife also always rolls her eyes when I start looking at charts on the weekend. But it's, I told her, this is what you married. You gotta live with this until the day I die, probably.
Yeah, exactly. Like, if you got to tolerate it or figure out how to. Otherwise, no shot. So, but yeah, that's about where I am. As far as where we are now, I'm in a bit of a toss-up. I mean, obviously, it appears very much we're getting this retracement here for currencies. Makes sense, right? Kind of close that gap. You tend to come off. Question is, once we come down somewhere through here, say, as we've got this 200 moving average rising through the 15-minute, we got the 50 and the 100 kind of banded about here. There's a bit of a confluence sort of cluster through there. So some kind of 50% retracement or 60 1.8 extension or something. But then do we drive higher, continue that, or back down? I'm a bit split on the dollar at the moment. Obviously, we've got a lot of stuff going on this week. We've got the Trump and Xi meeting happening on Thursday, Friday. We've got Kevin Warsh taking over from Jerome Powell. We've got a bunch of the US data coming out, including CPI. So, and that's all in amongst the talks with the in the Middle East, right, with Iran. So it's a little iffy.
feels
I'm not
like
so sure where to take an exact position right now.
more dangerous to trade than actually last week, with the NFPs coming out
Yeah.
and so on, which were surprisingly good, if you want to believe the data, which I don't, honestly speaking, anymore. At least the state data, NFP is something else with a Joel Chop
Payroll.
report, because that is, to my knowledge at least, separate from the official data from the government. But yeah, I agree with you. We are somewhere in the mix, which is also typical for a week like this ahead with all the things happening. And yeah, probably if the week plays out, like you said before, like it did in the past weeks, as we progress through the week, things are getting slightly more positive again. And maybe then we have the next news bomb, exploding again on the weekend. Like what was it this morning? Like that the offer Iran made, whatever offer that was, there are no details yet, is unacceptable. Probably was an offer like Trump, and so yeah, that's the game that's played at the moment. Additionally, to I think the CPI is not even the most important data, honestly speaking. Maybe in the conjunction with Kevin Walsh, but I don't see there any surprises outside what is the expectancy. I think 3.4%. 3.4% for that. For core inflation, they don't have a expected rate, at least not on TradingView. And I think the more interesting thing is actually going to be the meeting with Xi. So that's actually the one where I really would like to be in the room and, kind of spy on them, what's like being told between the lines. I mean, actually, Donald Trump cannot do between the lines, obviously, but I think with Xi, probably he's a little bit more careful, I think same as Vladimir Putin, he sees Xi like not completely on eye level. Nobody is for Trump, of course, but maybe he's not going to play these games of hentak, to be dominant.
Yeah.
He likes to play with other leaders.
Yeah. He sees them as a compatriot or something, or like a
smart guy.
someone in his sphere. Like I don't know the quite.
Yeah,
right word.
I know what you mean. Like almost
in
at his level,
manner.
but not quite.
Yeah.
Like he's the pope, and they are like a bishop or something.
Yeah. So I think, I agree with you. The CPI, obviously, so inflation data is going to be skewed as well from the war and everything going on. There may be some look at some of what kind of effect that has had or not had so far, and then obviously people trying to extrapolate that further. If somehow the war starts to degrade and we go back to a kinetic situation once again. But yeah, I think it'll be mostly looks past. I think producer price index probably actually slightly more important overall, what they're actually paying for things. And then it's pretty much the Trump Xi meeting, because obviously this seems very much there's other tangential tie-ins with him starting to throw around tariffs again, just like we had with Europe. And whether he goes from ending the war to going back to slapping tariffs on people left, right, and center, right? Once this is sort of settled. Yeah. And I wouldn't be surprised if he does try and press like Xi, or press the meeting a little bit, like be a bit more heavy-handed, given he probably feels like he's in a good position now, especially with markets being calm, oil's come off a bit, stock market all-time highs. He'll be like, okay, I can put the foot down right now and then see how far I can push. Right? That's what he tends to do. So I wouldn't be surprised if we get something like that. And like you were saying, positioning for currencies, it's been quite quiet. We've been pretty chill. So this is aggregate core USD CFTC positions. So basically we've come right down on the US dollar longs that we had. So there is definitely a path to see the US dollar actually come up from here. Hence, that would be if Trump does, be more heavy-handed, we might actually see that come back into vogue. Right now, we're pretty chill and everyone's ignoring the war. Other thing with this is the 1 week expiry implied volatility. Again, we've dropped right down. We saw dollar yen pick right up. Previously, that's when we had the intervention stuff going on. It's now dropped right back down again. This is looking very chill given the current state of things.
Yeah.
So basically, we're very susceptible to things kicking off and all of this rising very rapidly. And then this is the 1 month as well. So you can see back here, this is just before the war. Same deal over here on the 1 week. And we shot right up. So we could see, I mean, we're not going to go up to those highs again, but maybe come up, part of the way. So, there's plays like the Aussie dollar, which I think are very susceptible. So this is basically this sort of line shifting around through here is the positioning for the Aussie. So net Aussie longs have grown 10x since January, right? And I think we're pretty much through the whole raising rates kind of phase. We've got the budget announcement for Australia tomorrow as well. There's going to be changes to capital gains tax and a bunch of things coming through there. So overall, I think the Aussie is probably most susceptible to that drawdown. One, it already has that risk-off type element to it, just in general, plus the positioning itself right now is very stacked. So Aussie could get absolutely hammered if we do see something go sideways, put it that way. So definitely keeping eyes on that to see if we get some kind of topping through here, fail to make any new highs, and start rotating much lower. So you probably got a pretty quick path all the way down to about 71.50 from where we are, about 100 points.
I mean, it kind of feeds into what we've been saying for example, for euro dollar. Also, every time we go up to these levels above 118, approach 120, that's pretty much where it's like set, extremely difficult to overcome this. And this, despite this basically risk-on environment we have now. I mean, if we look at the NASDAQ, where we are trading against now, it's like unbelievable.
No,
I would like somebody who's like the classical technical analyst who believes like everything is in price. We don't need fundamentals. We don't need sentiment, geopolitical things, and so on to describe things, to explain something like this. This is like a fat tail playing out, a positive fat tail, of course, in this case, playing out in real time.
Yeah, I don't know if I put it on my PC. I've actually got where I suspect a lot of this has actually come through is from the changes to the SLR that we spoke about a while ago.
Yeah.
So there's definitely been players taking advantage of that, and that seems to be pumping everything so much further to this degree. Because on top of that as well, we have right up here, goes back into where we're very susceptible to a pullback. Everyone is very much long. No one is pricing downside at all right now through options and everything. So, where does the roundabout stop, right? Like, do we push on to 30K and then have a little gasp and then crash out?
The problem is also, if you're trying to trade something like this, and I know it's like, it's like this type of strategy right now, market phase, where everybody is suddenly a genius because everybody, only picks long trades, and it doesn't really matter when you buy them. They seem to always play out, and there's nothing wrong with this. Don't misunderstand me. But very quickly we can see what we sometimes see, for example, on gold, where we then suddenly have a day like this one here, where we have a price range. Thank you for changing to my screen. Of within 1 day of 20%. Now, this is probably not going to be the case for the NASDAQ, but nonetheless, of course, we still can have price swings of several percents there. And that's not too uncommon, And once this happens, we'll have that situation that I described earlier on Bitcoin. Then we have the liquidation events where everybody's long, needs to get out of a long position. How do you get out of a long position? You have to place a sell order, or your broker places the sell order for you if you don't have enough money on your account anymore. Everybody has to do that at the same time, especially in retail. And then we see price very quickly going down by something. Let's say it does that here. It's not uncommon, that we see like a pullback of 10% or something like this, which would be like somewhere 26. I think last week we were talking about 26,500 points. They're not uncommon, but then the thing flips to the opposite again. Then you'll have this chance again of, you know what, this is nice. You know, I'm getting a discount right now, basically of 10%. I should go into the markets. But then you have a situation again that people will tell you, no, it's going down to 23 or 24 or something like this. I'm going to wait. And whenever I hear something like this, you know, I get the strong impulse already of buying. Or, you know, when we see that to the top selling. Now, I'm not selling any stocks at the moment, being said that, because I want to hold on to them for long term. But I remember when I last time, a couple of weeks ago, told you guys, you know, I started buying NVIDIA in the 170s. We had comments there like, oh, that's too high, you know, it's going down. Because we had this phase prior to that where we dropped from almost 200 down to 165. And now I have an average entry into NVIDIA of around about $180, and just because, you know, I was brave enough to buy that, which was based on the analysis LJ shared with us on tech stocks being rather cheap. But you have to be flexible, you know, you have to be flexible to change your opinion if, like, things speak against your narratives. And I think this is a thing, understandably, a lot of traders struggle with, including myself, because that's the downside of having done this for such a long time. You know, I'm pretty confident when I make a trading decision, especially longer term, I'm quite confident about why I do this. And when I have somebody approaching and playing the devil's advocate, saying, yeah, but have you thought of this or that? My first reaction is always like, hey, what do you know? You know? But in the case of LJ, for example, I know he's like knowledge level, at least at my level already. So, of course, I take it more serious what he presents me. And this is what made me convinced that I should do the opposite of my opinion and not wait until the autumn to get into tech stocks again. So thank you. Next time we see each other, I'm going to buy you Foster's.
Yeah. No, not a Foster's. Anything but a Foster's. Anything else.
Yeah, for gold also, I mean, we said this earlier, we're kind of caught in the middle, and I think it's pretty much the same picture when I look at US dollar denominated pairs, maybe with the exception of Aussie dollar. Somewhere in the middle. So really for swing trading, longer term positioning, I really would like to see either us attacking 120 again, then I would look for short entries, or somewhere down in the 114s for swing trades, that is, guys. Yeah? And of course, not for intraday trades, something completely different there. But it kind of reflects, I think, the sentiment of the market as well. You know, we don't really know where we want to go. We're just a bit reacting to whatever comes from Trump, to whatever the geopolitical situation does at the moment. Although I have to say, it's also like what Trump is doing there is slowly getting to be a blunt weapon, in my opinion. The market reacts less and less to this. If we would have had a situation like this in the beginning of the war, markets would have like gone crazy to the upside and downside. Now it's like, oh yeah, okay, we're going to do a little bit of gap opening, you know, in indices and in dollar pairs in the morning, but we're going to sell or buy that to close the gap again, basically during the Asian session. So exactly what you were trading earlier today. And then we are waiting through London until New York comes in again. Such rare days that we had like really nice movements during the London session, in my opinion.
Yeah, it has been. It's been quite slow. Because, yeah, I guess the other part, like, you know, all the economic data has gone out the window because it's all skewed because of the war. And so hence the data itself can't read much from it. Hence then central banks can't either. So their commentary on, you know, direction also kind of out the window. Yeah, so we're in a weird state phase, which hence when you get those kind of periods of calm, you tend to go into some kind of volatile type event, right?
Yeah.
So yeah, that's definitely what watching out for. The next one I was going to bring up was dollar yen.
Yeah,
so
definitely something we should talk about it, because I think quite interesting the situation right now. For me, the question is now, and this is what I'm going to base my trade. So let me delete maybe first the old trades here from last week that are still in there, what worked out beautifully. So what I would like to see is actually a situation like this again, that we somehow try to push up to those highs we saw basically last week. Yeah, last week it was. And then I would love to do something like this. So like a risk reward of 3.3. So bet on that we're not going higher than the last highs. Of course, not exactly going to place my stop loss there, and that we are going further down. I would love to see that. On the other hand, if we decide to immediately go further down, then for me, the next area of interest would be this one. Somewhere down here, but that's of course still some way, but just judging by the daily chart, I know you're probably looking at 15 minutes at a more granular level there, but this is what I would like to see, because where we are sitting right now is the same like with other dollar pairs, in my opinion, a little bit like in no man's land. Now, that being said, of course, we need to look at where are we yield-wise. So somewhat stable situation for 10-year US dollar yields. The Japanese yields going further up, which probably also led to this kind of mini sell-off we saw there because the gap is closing. It's closing further. The leverage, especially the leverage, but in general, the carry trade, so being long US dollar, being short the yen and harvesting the interest rate differential between that gets more and more unattractive. What's your play on this one this week? You're muted.
There we go. Pretty much exactly the same, actually. So,
yeah.
Similar deal. So, looking at the 100-day moving average coming down here, we've got the 10 moving average about to intersect that. And I always love that, pull back into the 10. Obviously, you use the 8, similar deal. And then hence that's just a touch below those heads. Maybe if we get rid of this stuff. That's all the trades that I've added from last week. They're all gone now. But yeah, so basically a slightly higher push towards there, and then look to get long, stops above last week's highs that we retraced to. And then it's a push down for me, first of all, to the 200-day moving average. I think we would probably kick over that a bit. 154 round number, 153.80 or so. And that also comes in line with this sort of, roughly with this approximate sort of channel thing that we've had. And then just a touch above, obviously, those prior lows back in Feb. So I think that's roughly where we go. And then from there, it's the question of if we can somehow get some deeper push and the market just pushes it the whole way through, or if we do actually hold this up, then the whole trade starts to get a little bit questionable. Because does that mean people are willing to come back in and take us right back up to 158? Tough.
Yeah, but it's the same tough like we had last year in July already, no? I mean, we were, especially I was expecting that we continue to the lower side, which we didn't, because of a lack of alternatives out there when it comes to looking for carry trades, at least between major currencies. A different story like in the second and especially third row, but if you're an institutional, you don't necessarily want to be long the South African rand or the Turkish lira. It's a probably losing trade, as we've seen over and over again. Just you can see this with a simple look at the chart, like dollar Turkey, for example. But interesting that you see it the same way. So we didn't talk about this prior, in case you think like, we kind of aligned on the narrative here during the live stream. We did not, came to the same conclusion here. So let's see them. I'm actually thinking of placing a limit trade for this already, because the likelihood that this is happening while I'm sleeping is also quite high. It would be super interesting, as we see now Kevin Walsh slowly taking over from Jerome Powell, if we would hint to something like, we are going to cut rates or something. I think we would dollar yen totally see crashing then.
Yes. So this is where it comes into things where I'm very much of the lean that he will ultimately reduce rates. So
I think so too.
The whole Middle East thing comes to a close, I think the US is in the best position to reduce rates. I think dollar comes right off, everything else goes up. And then, I mean, that's perfectly what the Bank of Japan wants as well. That fixes that problem. Trump now has a bit more leverage and positioning around China. Obviously, having the yen weaker was beneficial for them as far as trade flows in that region. So continuing to hold that up there, and hence they've had these talks. Scott Bessent is going to Japan this week, I believe. I think this is his 54th trip to Japan now.
Oh, yeah? Oh, wow.
Yeah. So he's been in and out many a time, right? So this is a very close relationship, right? And particularly going over there now, just ahead of the Trump-Xi meeting, and you've had intervention, you can only assume this is all wrapped together, right?
Probably, yeah.
So yeah, I'd say there's probably likely some kind of coordination there, trying to lay that out. So I would still want to net bet on that downside now that we've actually properly got the intervention ball rolling. So yeah.
Yeah, looking at a little bit over the chat here, I've been following it very much. Sorry, guys. We see you.
I don't think we have any giveaway announcements.
I was just about to say I don't know about a giveaway at the moment. Beside that, please don't spam into. We see your messages. Don't worry. We're just not, when we're in the flow, always able to answer every comment we see there. I saw you posting like this. I mean, this is something we cannot answer. There's no best time frame. Some people like the 1 minute, some people like the daily, like me. Some people like a combination, like multi-time frame. You gotta find your own there. In general, when it comes to trading, please, this is why I'm showing this. There is no this is the best, and this works for everybody. You have to find kind of your own way, what appeals to your eye, what you understand. You can learn that by monitoring charts. You'll kind of get a subconscious understanding very often. Like we just saw, LJ and I, we were looking at the same thing in dollar yen, as it seems this morning, And with time, you'll learn to spot something like this as well. Don't fall for things like, there is a best time frame, or things like, this strategy guarantees works on 1 minute time frames and it's going to make you a lot of money. It's not true. Not every strategy works under every market regime. That being said, I see Infinity saying he is short dollar yen myself. I hope it doesn't push over 158. Yeah, push over 158 like we just analyzed as well. I think that was kind of not completely invalidate. We always can see, of course, that spike to the upside that's going to push you out, can happen, c'est la vie. But if the market continues in a normal way, I think over 158, I'm almost tempted to say I think market structure is changing again, and we are more likely to try to attack 160, 161 again. But let's see how it plays out. I mean, with that much data coming out this week, economic data that is, with all the trips like we just heard to Japan, with and then the meeting obviously with Xi and Donald Trump, I'm sure the market is more going to be driven by these news events this week than by normal price action, if you want to. That's why I say I think at the moment dangerous to just rely on technical analysis. You can use that, of course, to kind of align what you're doing there, but it's not going to help you if you go short, for example, and then Kevin Walsh comes around the corner. Oh, you guys, surprise, we're going to cut interest rate by 1%, because then the next candle probably you're going to see on dollar yen is, at 150 or 145 or something like this. So be careful out there, guys. Maybe adjust your leverage this week a little bit. Take it more easy. Have tighter stops are not really going to help you, but instead of risking 1% or 2% or something like this, maybe you want to cut this in half. I say this very often at the moment. I'm aware of that. First of all, because I'm always leaning on the more conservative side. I think that comes a little bit with age, honestly speaking. And second of all, because I know how many of you out there are like utilizing 1 to 50 leverage, 1 to 100 leverage, and how dangerous it is in markets like this to be stopped out. And of course, I'm not talking precisely about you, Infinity, infinitive velocity 2.0. So that was just in general comment I wanted to do on this. LJ, can I quickly go and fetch another coffee?
Yeah, sure, go for it.
I'll be back
That's
in
right.
5.
No problem. No problem at all. Yeah, so the thing with dollar yen is with this push higher, I'd want to sell a touch higher from where we are. Now, if somehow we don't come into this higher cluster that Doug and I have been talking about, it's about 157.50 to 70, so long as we keep just below highs from last week, right? If we do somehow get a push beyond that, going beyond 158, either there's two scenarios. We get just a further punch right up to 159, basically the underside of this higher cluster that we broke through and then just capitulated. Or this becomes a longer lasting run back up to tempt 160 once again. Now, so depending on that, whatever catalyst somehow breaks us through 160, I would either decide to short this very heavily around that 159, or I would just stay out of it for the near term until we get back towards 160 or find somewhere at various levels, basically 50 pips apart, up above 159, to then short, right? So it'll very much depend on that catalyst as to why we actually pushed on from there. But we'll see, because we've got a number of bits to get through this week. Yeah, very hard to find direction to a degree. I mean, if you've been buying up the failure points with the drops, done pretty well, but you have to be quick. And also, obviously, it's pretty scary when the market's actually dumping that hard from the intervention. Very aggressive. We're pinging around 5-10 points every second, pips every second. And then today, okay, I'm going to stand in front of this and snap it back higher. Definitely a bit difficult. Same deal, sticking in that trade, because as you can see, we can just get another point of intervention, market rips back lower. So, bit difficult. Have to be very quick on the trigger, quick on the pulse, ready to jump out, ready to change your mind as soon as you see it. So, and yeah, in very small sizes, yeah, that's a good idea. Because often the temptation people have is when you're seeing these massive moves, they think if they just take a full size position and they capture one of these for several hundred pips, they will clean house, which yes, but typically what happens, unless you've managed to time it perfectly, that size will get you blown out too many times before it actually dumps. And then you can actually end up underwater, either blowing an account or being too far deep that when you do actually catch the move, all it's done is make up the difference of the losses that you picked up before. So yeah, if you want to be in it, definitely just reduce size, reduce volume, and see what we can get. But yeah, like Dirk and I said, definitely still pinging on that downside overall. Felix saying Trump rejected the response from Iran on the negotiations. This should push oil up, which is bullish for the dollar index. What are your opinions? Yeah, so if oil comes up, very much dollar comes up as well. That's how we've been sitting. And also, other part of that, obviously gold down, right? So that's how everything's correlated right now. So oil up, dollar up, and then gold down, majors down, stocks down. It's basically what we're seeing. So right now, however, obviously the market's not taking that full effect. Oil has started to disconnect. The correlation isn't holding 100% anymore, or not quite as much as it was. It's still very prominent, but it's definitely pulled back a touch from where we were earlier in the conflict. So we'll see if that actually reconnects to a full bar, and then hence the market starts actually caring about these headlines to the same degree that they did before, or if we just stick on the same trajectory. Japan reported Forex market intervention in the yen to support something. Can't read this. Dollar yen sharp movement. Yes. Okay. I think I largely get what you're saying. I can't understand all of that. My apologies. But yeah, they did. They did intervene in the FX market. The first Thursday when we had this dump through here. So initially we came off just by them warning of intervention and saying this is like kind of the last bar, and we're definitely looking to intervene. We started coming off from that, just from natural price action from the headline. And then they did actually punch the trigger and push the market right down through here. They spent about 35 billion US, if you check the banking reports, which is about 4.5 trillion yen or so. Then obviously we had these dips down through here. The following reports seem to suggest they spent another about 30 billion through here as well. So we're still now waiting to see what they might have spent through here on that Wednesday last week. But yeah, they're definitely in the market, not playing around. So the question is just how much will they pump? And if somehow the intervention starts to stop working, will they get in contact with the US and get them to also jump into the market as well? So they did talk about doing that before. Wondering if sell stops below last swing low is a good idea. Let's have a look. What time frame are we talking about? Possible rejection on UJ here. So I'm guessing you mean like through here, 156.94, 95? Okay, 157.20. Oh, okay. I see what you're saying. I don't mind that. Because this is basically this sort of band. We've got and this is the other difficult thing with dollar yen, because we do have that flux. Like the range is quite large to actually find that kind of sell zone. Like you've got a good 40 plus pips of where you could top out or cull early. Not so different to when we had this drop through here, which they seem to just come back in and smash the market. There was a further retracement level, which is a touch higher, about 46 or something, which would have been the natural retracement level. Fib retracement, there was also a cluster of moving averages, a couple of other bits and pieces with Ichimoku, blah, 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 as well as some options positioning. And they seemed to come in and decide to just whack it before we got there. Keep people off guard. Welcome back, Dirk.
Yeah, sorry it took a little bit longer. I had to pick up the phone and go to some other place.
Some other place. In the wilderness.
In the wilderness, exactly. Sorry, but I don't know what language this is. So I saw you posting this before. Please post in English or German.
Yeah. I was trying to make sense of it before as well. I kind of got the question above, like implied from the rest of it, but yeah, my apologies.
Okay, yeah. Apologies. Yeah,
I do not speak. I'm not sure what language is that.
Is it anyway. Tagalog maybe? Or?
I'm not sure.
Me neither. So, excuse me if that was like deadly wrong. Yeah, I mean, I don't know what you were talking about. For me, I'm not looking that much on other stuff at the moment. It's Hindi. Okay, thank you. What do you say about Aussie dollar? I mean, last week I got sadly stopped out of my trade there, my long trade.
Yeah, I ended up jumping out of it. Where was the long that we had?
Must have been Wednesday, I think. No.
Oh, it's through here. Yeah.
Yeah.
Yeah. So once we stopped, like we were just failing through here, and we're starting to build up this sort of just sloping trend line. Or rather, it's like a channel. If I can actually.
See, that one time I start touching Aussie dollar, it's like the trade.
Yeah, when it happened, like I was thinking about this, I was like, "Oh, this is such bad fortune."
It's okay, man.
And then I was going to message you and say like, oh, I've jumped out and like TP. But then we were running up through here, and I was like, oh, if I tell you to jump out now, and then we come higher, then it'll be like, why'd you tell me to jump out? But then,
and of course, I mean, that was my own idea. I just, had like moral backup from you on that one, but it's like I risk it, like risk 0.25%, so all's good, don't worry. And it was on my gamble evaluation account anyway, so whatever. But it's, this is, everybody knows that feeling sometimes, you know somebody who's like very good on a specific pair, like LJ obviously is on Aussie dollar, like he's proven over and over again. And when you kind of look at it and, I get this idea too, I should get like, moral confirmation from the expert, so to say. And when you hear maybe yes there too, it says like, oh, I'm taking the same trade at the moment, and you feel like very confident, and this is the trade that doesn't work out. And this is why I personally, like when I have friends, for example, asking me for suggestions on certain pairs or certain stocks they like to do, for example, also, I'm very hesitant always to give advice, because like 8 times you're correct when you're the hero, and the 2 times you're not correct, you are the a-hole, they suddenly hate you. It's very important for me, like to have business and family and friends separated from each other because of things like this. But I had to think this morning that, it to a certain extent, it looks for me like it wants to go higher further, no?
Yeah, indeed. So, with this, we end up getting the headlines, and then we drove right down, so jumped out of that. Rallied back through, coming into the Friday, rallied the whole way up. I did actually have some trades in here. I jumped out through this top level there, so I didn't hold it anywhere near the whole distance. But where we are now, I do think so. I think there might be one last push. I'm not 100% sure. This is what I'm trying to toss up. So when I look at it technically and then checking across to, say, euro dollar and the like, I would prefer to see one final push for us to go higher. Now, that's also kind of in conflict with dollar yen, where we are just now.
Yeah,
dollar yen push higher.
Thinking that also,
therefore they're backwards. So hence what I'm wondering is, do we see another leg higher first and then come off? This is where I'm very conflicted at the moment with the majors across the board. Because that dollar yen intervention is massive, right? It's a massive portion of the market. So on the other side, we do have everything else going on, which is also massive portion of the market, especially with stocks at all-time highs. So talking about the geopolitical situation, Trump G, everything else going on. So you've got 2 very heavy weights on either side and kind of moving in opposite directions at the same time. So, very much I feel like I'm going to be playing it, again, going back to that like day-by-day situation, just like we had earlier in the year with Trump and with the war in general, until we actually get that clarity overall. Because right now, when I look at euro dollar, Aussie dollar, not considering anything else, I would say we want to move higher from here. So some further attempt back towards 118 on the euro. Aussie, similar deal towards the highs. I think we would cap out on there pretty quick. 72.60. Now, the question is, do we get there, or is this move sort of fizzle out and we just trail off? I'm very torn, personally.
I think it's like you say, it's like kind of a day-to-day situation, which I personally don't like very much as being somebody more long-term in the game, but it is like this. On the other hand, it also offers chances, if you are good, like on the 50-minute chart, aligning that a bit with 4-hour daily charts, seeing the gaps, knowing this is what happens usually. There are also chances, it proves like how flexible you really, again, as a trader, you need to be. Yeah, we got that translated. So thank you for your translation. Great question, in my opinion. What separates consistently profitable traders from average traders? Usually not strategy they are using.
You mean one sector?
Yeah, sure. So in my opinion, it's almost never the strategy they are using. So, everybody's always aiming, what is the strategy? What is the strategy? What is the strategy? That's not the important part, in my opinion. Like finding a strategy that gives you the chance to be profitable is, I don't want to say the easy part of things, but the easier part of things. What really separates like really year over year over year over year traders that are profitable from traders that lose their money or lose their accounts is risk management. To really, first of all, not over leverage, like I was showing you at the beginning of this, my section of the stream with Bitcoin, for example, but also like sticking to your guns, defining where is your stop loss, defining how much am I going to lose on my account if my stop loss is hit. Am I risking more than 1 or 2 or 3%? If I risk 3% on trade, does that fit into my success rate also? How often do I take profit? What would happen if I lose 5 trades in a row, which is eventually going to happen even if you are like 95% of the time successful, which is not possible over the course of 1,000 trades. At least not if you don't do some kind of martingale game or something like this. So work primarily on your risk management. As boring as that sounds, nobody like on YouTube wants to watch a video on risk management, but those people who do and who really put thought in there and that like backtest, for example, their strategy in line with risk management, that are usually the ones that survive the markets. Why? Because they are going to survive, first of all, drawdown phases. So phases where your strategy, for whatever reason, doesn't work well. Maybe you're a trend follower, but markets are going sideways at the moment. So trend following is obviously not going to work. And vice versa, if markets are ranging, you probably need like mean reversion strategies and not trend following strategies. But that being said, you need to have risk management applied. Don't go into an evaluation phase, for example, with a mindset, I want to pass this evaluation and get a funded account in the next 2 weeks. Yeah, some people can do that, but it's maybe 1 in 1,000 people, honestly speaking. But more like, if I have this set of risk management with my strategy, what is going to happen? And with AI tools nowadays, you can so beautifully backtest that. Take your strategy, tell something like ChatGPT or especially Claude, this is my strategy. I want to see on this data set what happened, would I have earned money with it? And then you can try to tune all these knobs. 9 out of 10 times, you're going to eventually come to the conclusion, well, it just doesn't work. My strategy might have high hit rates, but it's not going to survive because there's no proper risk management on to handle the 10% where the strategy fails. Or you'll come to conclusions like, wow, this actually works, but I need to trade it with a much lower risk, probably resulting in that it's going to take like 3 months or 6 months or even a year or more to pass the evaluation phase. It doesn't really matter. The important thing is that you find something that works and have a proper risk management. And that takes a lot of discipline, no matter on what time frame you are trading. I hope, that answers a little bit your question. Let me go into this. We talked about this earlier already, Jimmy. Maybe later, scroll a little bit back, maybe like 20, 30 minutes in this live stream. We were extensively talking about EU and the dollar in general there. So so you might address to this. I don't want to repeat everything, obviously, now, because for the people that have been in the stream already, it gets a little bit boring otherwise. By the way, guys, I always tend to forget this. Leave us a like, subscribe to the channel. I see we have 157 viewers right now. Let's bump that up to 200. How many likes do we have, actually? That's the other question. Need to refresh it quickly here to see how many these are. 65 likes. Let's see if we can bump them up to 80 during this live stream. So give us a like, subscribe to the channel, leave us a comment here. More than happy to answer your questions, of course. And so yeah, this ties into what I was saying earlier, just now. We can just, of course, provide our own insights. And we purposely, like when Richard or before Jonathan chose, like, who does he want to have for these live streams, on purpose, there is a range of traders selected with different approaches to trading. You have something like LJ, who's coming back in a moment, where you always have a feeling, hey, this comes more natural for him. It's not the reason. There's a lot of like research and trial and error, of course, for LJ also involved, but he's one of the example where it clicked rather quickly. Then you'll have something like me or like others also who are very, very data driven. I like to dive deep into data science and test everything from different angles, go into statistics to find my edge. This comes because at heart, I'm an option trader, and this is how you work when it comes to option trading. You're not looking at charts so much, you're looking at data and draw your conclusions from data. And but what, like everybody that is successful here as hosts on the live streams, no matter if you are LJ, welcome back by the way, or Ashley, or Victor, or Samir, or Richard, or the other Richard, or Dirk, we all have very strict discipline when it comes to risk management. This is really, like I said earlier, what sets unsuccessful traders apart from successful traders. The most boring part of it all. I don't think personally it's boring because I like math, I like statistics, but of course I understand that like people that maybe start trading and that kind of have the impression of, from all this Forex broker and especially crypto brokers out there that have a marketing angle designed of, trading's easy. You just install our app, you put in like 1 to 500 leverage, and then you go on every time. And by the way, this influencer here can show you the strategy, that's like very successful. Or you have like influencers streaming like, look at this, I made $1 million on this trade. When in reality, that probably was first of all on a demo account, and second of all, I can guarantee you he has 2 demo accounts, one where he went long, one where he went short, and he's showing you the one that survived and that has a large profit. So of course, being like dragged into trading by advertisement like this sets a certain expectation on outcome, and I see it also as our job, by the way, to kind of draw you guys back into, hey, this is what you realistically can expect. The 5ers is called the 5ers for a reason, because out of 100 traders, only 5 traders consistently become successful on average. Now it's up to you to become one of those 5 traders. And yeah, that takes a lot of discipline. We can only inspire you and show you different angles, how different hosts here work, what they are looking at, what they're not looking at. Sometimes you see an overlap. Like with LJ and me, we have totally different approaches, but like you saw with a dollar-yen trade, there is often an overlap, but we come maybe from different angles, although the two of us actually don't come from that many different angles because we heavily rely also on sentiment, fundamentals, and so on and so forth. But I bet like somebody like Jonathan, if he still were here, would have come to equal conclusions, but basically just relying on technicals, maybe with a little dripping of fundamentals. And that's the interesting part, you sometimes 1 + 3 = 2.
Yeah. But that's also good, like a good thing where it's where it's good to basically branch out and expand your learning as well, going from text to macro to positioning, options, data, that kind of stuff, and trying to build that holistic catalog, I guess, to actually frame your trades.
By the way, I'm getting out of my Bitcoin long from this morning now.
Yeah. Where are we at now?
Here we go. That was nice.
Oh yeah, this is similar to where I had my TP from the weekend.
Exactly.
Yeah.
Again.
Yeah.
Here we go again.
Yeah. Hi, LJ. Can you explain how you place SNR and determine entry and exit stop loss TP? What's SNR?
Support and resistance, I would assume.
Support and resistance. Yeah, probably. Yeah. Sure thing. So now it'll depend what kind of trade I'm taking. So typically, when I'm going to take a certain trade, I'll try and map out, or I'll have an idea of how long roughly I intend to hold this. Right? Is it sort of a intraday through the trading session, whether it's London, New York? Do I intend to hold it over multiple trading sessions throughout the day, or get in and out within the same session? Or say if it's more of a scalpy type trade, that might be anywhere between 5 and 40 minutes, right? The final one is obviously a swing trade. Now, typically, I don't swing trade so much on my prop accounts, typically only on my personal accounts with brokers and that sort of thing. Just more control, differences with swaps, that kind of thing. And obviously with how the equity balance rules work, right? If I am carrying that trade over, but it takes a bit more time to mature, say I might see some other trades that I want to trade intraday, but now I've got to be conscious of that equity exposure from the existing trade there. So with that said, most of my support resistance stuff is pretty simple. It's basically things to the left, each of the shoulders. I will take into account things like angular momentum, which aka kind of like your trend lines, if you want to put it that way, which basically just forms, your good old triangle structures, that kind of thing. All you're really observing with that, it's not like a trend line is some hard fixed level or anything like that. You're just observing price momentum in a certain direction, and is that continuing to expand? Are you getting higher lows with higher highs? And then at what point does that stop? And then you get price consolidating into a thinner and thinner point, which you tend to then see a breakout, right? Price doesn't just stay level indefinitely. It always tends to then shift one way or the other. So that's basically what you're observing with that stuff. So that's your typical technical chart patterns. They're just part of the framework overall. However, the other portions I'll take into account are moving averages. So if I'm looking for, say, as far as the support and resistance, I'll look for a cluster of confluence with some of those shoulder levels to the left, plus, say, a moving average 10, 50, 100, 200, depending on the time frame. Try and match up these guys together. And then once I find those points, I'll then often also match that with something surrounded by the ATR. Now, often I'll use pivot points. Other times I'll look at the actual ATR itself. Other times I'll use things like standard deviation channel and kind of map all of them together and find at what point on the chart do we get XXX where they're all stacking up on each other. Once you find that, now you've got either your target level as well as your kill level, which is where you'll put your stop, which would invalidate the trade. The invalidation of the trade will be that point that if you started pressing that, you're clearly turning the other way and you're going the other side of that mountain. So nothing too complex on sort of the basics of it. It sounds like a lot, but they're all just a couple simple bits and pieces scrapped together. Outside of that, obviously I do the macro stuff. I look at options levels, that kind of thing. That makes it a bit more difficult, but to keep it as simple as possible, that's what I primarily look at.
And I think it's like the core message for me in this is the confluence. You don't just want to see one thing triggering. You want to see like layers. I think you called them aligning. Maybe a moving average with standard deviation in reversal or sigma, or a trend line that you manually draw there, like putting layers upon layers to kind of either to see like where are levels that make sense, where either a reversal is happening, or in a trend continuation where trend is going to continue. And like you said, this can be easy it's not, it's trial and error for you to find something. Sometimes things work out or not, but on top of that comes risk management. You're not seeing any of LJ's trades here. You always notice there is a stop loss, and the take profit is usually multiple times of that stop loss, at least like 1.5, 2, maybe 3. On top of that, I know you like to work with layered take profit zones also. Yeah. But I think if, like you guys out there, just get that nailed already or start working on, I'm looking at the chart, I'm going to draw some stuff on there, be trend lines. I'm going to put some moving average. I'm putting the standard deviation channel, which is a great tool, maybe some pivots also, and then see where does that all align, and then have a look if price really moves to these levels, what happens after this? And maybe take note of that, actually, and have a trading journal or a market structure journal. You can take note, at that time this happens, and over the next 2 hours, 3, 5, 8 hours, this is usually how I try to map out in an automated way then my back test, what happened 2, 4, 8, 16, 24 hours after I got a signal. And then I can do like a heat map where I can very quickly see like where's, so to say, the optimum, like of where's the farthest move on average from that signal, for example. And did this point align with other stuff again, moving averages and so on and so forth? But I'm getting ahead of myself. I don't want to overcomplicate things here. But of course, what LJ says, that sounds easy. But it takes practice. Like we said over and over again, it's like learning a language. In the beginning, you are stumbling. You don't feel like you don't really know what you're doing. But 3 months down the line, if you practice every day, you are probably already able to order some food in that language, maybe have like a basic conversation, not in German if you're learning that maybe, or if you're learning Chinese, but maybe in a language, that's close to your native tongue. And it's all about, by the end of the day, discipline. We always like to talk about talent. This guy is so talented. This gentleman there, LJ, is such a talented trader, which is true, of course, but talent is just like a small piece in the equation that leads to success. My opinion, maybe that's the German speaking out of me, I don't know, correct me if I'm wrong, discipline, is like the greatest factor, getting better by practice. And you can see this with LJ. I mean, how many hours a day are you looking at charts? Now, I mentioned he lives in Australia and is up already while we are still sleeping. Very often he is still up when I go to bed and sleep. So, yeah.
I've always got a chart around me somewhere,
Yeah.
whatever I'm doing, jumping in, jumping out. And yeah, like you're saying, like you look at this on the screen, it looks kind of, there's a bunch of stuff going on, but it's actually pretty simple. We had the drive higher through here, pulled back on euro dollar. We started to come down into kind of a lull type of a range. This is where we had rollover, crossed over into the next day. This was during Asia. We then cracked through these smaller highs here. We came up, met the same high. We pulled back. We're still creating higher lows through here. So I decided to take a partial trade in through here. That's the first portion, and hence with that I always leave room to actually draw the stop well below where I first place it, in case we've got that flux, and then I can always like add to the trade as we go. So hence we did basically pull back a little bit further. At the time, the other portion I forgot to mention, I always check cross confluence. So I'll look at euro dollar, pound dollar, Aussie dollar, dollar yen, and the dollar index, and then typically check like gold and the NASDAQ as like a risk sentiment as well. And I'll look where they're all moving together at once, looking at them all side by side on a 1 minute chart, right? And so long as I see everything actually moving in sync in the way that I want to see it, then I'll start to enter. That, or sometimes if you're seeing the rest move in one way, something else is lagging, I'll start to incrementally get in, even though the asset I might want to trade is not quite picking up yet, in case all of a sudden that push comes through, the others are pumping, it gets driven up. So that was the case here. Jumped into the euro. The Aussie and the pound were already pushing up. Euro took a little bit longer. Eventually came through here. I think we got some other pound data or something else coming through. Did push us higher. That was my TP1. this took a bit longer than I wanted to see it actually take. So I jumped out of there, waited for things to come up. We did come up to TP2. We pulled back to the TP1 again and basically just re-entered at that same level. Now, I wanted to see us push higher once again. Similarly, it was taking too long. Whenever stuff takes longer than I expect, this gives me like a little warning flag, like a little yellow triangle to say, okay, is this actually going to pop through, or is the market starting to reject this, right? So it came back up to...
Sorry. Go ahead first. I have a question, but please finish first.
Sure. So we came back up to the TP2 level. So basically caught that other portion of that, decided to jump out because we weren't really kicking on. We met these highs again and basically created a triple top. Then after that, we did actually start coming right off. But yeah, so basically it was the confluence of the moving averages coming up through here. We had pound dollar, Aussie dollar, everything else doing the same. Obviously, I can't show you the standard deviation channel from back there now. It'll only update to where we are. But yeah, all in all, pretty simple. You got the bottoms created through here that we held, high lows, high highs. Then we had a triple top failure, jump out, eject button. Then we came off.
Interesting what you're just saying about, it took too long, to reach that breakout. This is something I over and over am seeing also again, especially in my backtest. Like if you have like higher take profits, I measure that always in ATR ranges. So if let's say I have like at the one ATR, usually like that happens like in 85% of the time. In order for the 2.0 or 3.0 ATR to be hit, usually you need a lot of momentum right in the beginning after you jump into the trade. The longer it takes, the less likely is it that you're going to see the breakout to the upside, which doesn't mean you're immediately going to see it to the downside. Market can, of course, continue in a low volatility setting. But it's interesting that you for yourself have like decided if that doesn't matter, if I have a feeling, probably in this case, it's taking too long. There's not a lot of momentum in the market. I'm going to jump out earlier from this. Very often I see that's the correct decision you're making there. Do you have like for yourself some rule set where you decide like, oh, this is taking too long, or is that like the discretionary part, so to say, like the gut feeling?
Yeah, kind of. I mean, as far as the mechanics of what I'm actually thinking about and deciding whether it is taking too long, typically I'll look at, the prior momentum, prior movement that we've had. What was the volatility? What was the range? If the ATR is way, way compressed after a massive push up, that's telling me, despite we've had this big push, no one wants to further commit following the slight pullback. So normally when you see a lot of momentum, you get that small pullback, then people go, okay, great, now I've got a cheaper level to buy in. Thus, you would expect that people, if they do want to confirm that move, market, would then jump in on that pretty hot, right? So hence, once you do see us coming up, but it's very slow, then I'd start to get out. Now, you can say it's not a feeling per se. Like I'm watching the pip range and that kind of thing, and I go, okay, it's been this many hours. Normally, this kind of a trade should have taken 2. It's now been 6. We're at the highs, jump out. That or else, if I'm slightly in drawdown, I might go the other way sometimes and go, okay, this is a trade that's going to take longer time to mature. I might actually have to hold it to the next day because we're not actually breaking down yet. We're just consolidating those highs, and the market needs more digestion before the next move. Now, sometimes that could be because there's upcoming data or something like that. Hence, people are sitting on their hands, want to wait for that next catalyst. If I still believe that catalyst, if I have to hold the trade longer, will be running in favor of the trade, I'll stick onto it. If I go, not so sure, 50-50, I might just jump out for flat or small loss, then reassess.
I think,
like you were saying, the other portion that I forgot to mention is when I look for the targets and things, I do typically split it up into 1, 2, 3, 4, 5. Right, as depending on 5 is normally only for really big swing trades, even 4 typically only for larger intraday trades. But then hence I've got those levels. I'm happy to take it there. I've mapped everything out. If we don't push, that's fine. I don't get stuck in going, oh, okay, the trade's going well. I'm going to hold it all the way to the top TP. Then it pulls back on me. Then you get stopped out. Right? I can always take profit at like 1 or 2, then re-enter if I really want to.
Are you hedging trades? Like in a scenario where you say like, oh, maybe this one needs like a longer term to play out. We are first going a little bit lower maybe, you know, and so I might want to play the short just to hedge my trade to kind of artificial get my entry down by the end of the day, you know, because maybe my timing was a little bit off, or I think that's pretty good way to do it as well, because it leaves you in that comfortable spot of, you know, I know I was maybe a little bit off with my timing, but I still have a chance, you know, to artificially pull my entry a little bit lower with the winnings I, for example, if it concerns a long trade, I make with a short trade. And this clustering, by the way, of take profit zones, I do for crypto trading strategy as well. Like, for example, this in Bitcoin, I've automatically calculated like where are the ATR levels, and then I can decide on, because I know like what is the percentage within the next 1.5 to 24 hours, depending on the crypto pair, of reaching those ATR levels. I set my stops there. And like you, when I don't see like a lot of momentum, like in this case, you know, I saw a snapping back after my third TP was reached. I closed the trade out, and as well. Of course, in hindsight, you know, I could have held on longer to this one, but in hindsight, of course, it's always easy to say like, oh, you know, I could have done that.
Yeah, in hindsight, it's always easy, right? Hence, I'm never worried about jumping out too early. Like I said, I can always re-enter if I'm still convicted with it. Still see everything moving into the direction I wanted. I was trying to find there was a trade from a little while back where I did hedge. Normally, I don't lay out all the hedging trades at the same time on TradingView, because one, it gets all cluttered. I've already got enough clutter as it is. So it gets difficult, and then trying to explain to people why I've got like a long and a short, and you know, you never hear the end of it. But yeah, so I will hedge regularly. That especially in my personal accounts, I'm constantly doing that, both sides, all the time. And then prop sometimes, but a little bit less, and it depends on when or why. Because sometimes instead of dragging the stop, like I'll just go take the stop off altogether, hedge through here. Say if we did come down to this support level, hedge through there, remove the stop that's made up that profit portion. Then we start to turn around. So it's like that. Start to turn around, come up.
Schlong trade.
Then I'll replace the stop. And then as this comes up, I'll gradually like drag the stop back up to where it originally was. Right.
But I mean, if you're beginning your trading journey, honestly, I wouldn't recommend
it. It will be, which is why I don't tend to like put them on everywhere, because people are going to get confused.
I personally don't do that, but you know, you have to be really confident already in what you're doing there, because there's always the danger, obviously, that you eventually have this one trade, you know, that's a loss that you're dragging on for eternity until you finally can trade your way out of this. So be careful with this. Brokers will like this, you know, because you end up paying a lot of commission eventually. But
yes, yeah. Fortunately, I get a very healthy rebate from my broker. So
self rebate, nice.
Yeah.
Okay.
Yeah. So otherwise, it would be very, very extra expensive with how much I do it quite often. But it all works out. And the other portion why I do it is when you do that, it gives you a moment to think as well.
Yeah.
Like if you're not sure, do I want to drag the stops? Do I want to close the position? Okay, just hedge it. Now I can pause. The P&L is locked up. It's going to stay stable. I can go look at other assets, look at gold, look at NASDAQ, check news, do whatever it is, reassess, and then decide which side I want to stick in, right? Because it will lock out my P&L from there. Sometimes I might just remove the original trade altogether and stick with the hedge as the new trade, or vice versa. or find out whatever levels I want to hedge to. Then I'm happy clearing that and then seeing us come back up.
True.
Yeah. So yeah, hopefully all of that, what I was saying, made sense. I feel like I'm not snappy articulate today. Sorry,
No,
guys.
you're totally fine. All good. Don't
Felt
worry.
like I was running around a bit too much, but yeah.
All good. Don't worry, really. No. Makes a lot of sense. But I understand you. I also always am afraid that I make things sounding too complex.
Yeah, like I was saying, it's a lot of like small bits that are very simple but all added together. So to try and convey them all starts to sound like very messy, even though it's very simple. But if you convey half of it, then people are like, huh? Because you're leaving out the other half and don't see how it all adds together. So.
But I mean, for those, I regularly see like the viewers that are regular with us on the stream. You know, I can see like that over time they gained an understanding of how you do things.
Yeah.
Like also Richard, like last week, said like, hey, you know, when LJ is coming on, I bet he did this trade, and exactly what you did. So there's an understanding, you know, of things. The beginning might be like, you know, what is this guy talking about there? But over time, you kind of understand, you know, okay, this is how things work. I might not adapt this altogether, you know, for myself, but hey, you know, some bits and pieces here that make sense that I maybe should add to my own trading strategy or to my risk management, like the take profit zones 1, 2, 3, because it's also nice then to let a trade mature a little bit more and not like take profit too early, because the most money you usually earn on the ones that had a nice momentum and then really into your direction. And of course, if you always cut your profit short, it's a bit of a shame as well, because you know you don't get those massive trades that hit like TP 4 and 5, especially that often.
Yeah, and one of the best ways to stick to that is by locking in a little bit of profit. Like
Yeah.
it always feels good to just, you know, your account's up, you're in positive, right?
True.
Having a good day, it's fine.
Especially if it's the first trade of the day.
Yeah.
That always,
Never want to come into the office with a drawdown. You're like, oh god, damn, you know, right? It sucks. Come into the office, bit of sprinkles on top, feels great. So
what is that? The yen is dying. What is dying in the yen? I don't see anything.
I don't think it's dying. I think it's moved to like,
if you look at the dailies, it's
4
like
points or something.
nothing. You're probably trading the 1 minute, yeah.
Because we're not going anywhere. We're actually right by the highs of today, right? I can see my charts starting to lag again. Sorry, guys. I might have to reset it shortly, but chat-wise, just catching up on chat. Any of you guys asking about payout delays? This has been addressed a million times by now. There's also a video from Saul talking about it in the Discord. You can find the link in there to that as well, with him talking directly about it. Outside of that, we've addressed it a number of times. Lots to do with the payout distributor. Since then, we've got like a backlog that's all getting processed. So people are already getting their payout. We've had a bunch of guys come in here and go, no, chill, I've already got mine. So anyone that is still waiting, you're probably just in that back portion of the massive number of people having to go through. So, but yeah, if you want anything else, check the video. Should be able to find in the Discord about it.
Yeah.
What else do we have?
I saw earlier somebody asking if I'm still in the gold trade. So cannot find it anymore. But yeah, I'm not in the gold trade anymore. The long term, my swing gold trade, so to say, I exited last week because we are like in the mix of things there. I didn't really see. I see volatility compressing. I wasn't that patient anymore to wait really for the breakout potentially to the upside. That being said, I mean it's probably going to end up being my trade of the year. Honestly speaking, earned me what I normally aim to do in a quarter of a year. So that's very comfortable for the rest of this quarter of Q2. And but yeah, nice trade, and I'm very happy, that I kind of could walk you along it, like from the very entry or shortly after the entry, actually, until I exited the trade. So that's nice. It's, hopefully you got something out of it as well. And that trade also, that there wasn't a lot of strategy behind it. That was like opportunity based. Okay, we're going too much to the downside. 4 sigma, -4 sigma. Come on, let's enter there now and fire and forget, because that's what gold likes to do. If on on really a daily chart, too much exaggeration to the downside or also upside, you have pretty solid turnarounds then at these sigma levels.
Yeah, which again is one of those things. If you've been trading for long enough, you can see that a million miles away, and you're just like, bang. Again, similar with the so-called feeling kind of thing. When a certain time has gone by, you're like, okay, I probably just want to get out of this trade, or just take the small profit I have, jump out. Because yeah, when you do have those massive drops, it's always the hard part is catching the knife and actually catching it, not having it run through you, right?
Because it always feels like the world is ending,
Yeah.
It's like this doom and gloom kind of feeling.
Let me jump over to your chart. I'm going to clean up this because it's quite messy now, and then I might actually reset my thing so it stops lagging.
Yeah, do that. So guys, anything else you want us to look at? Because I'm like, for myself, what I'm looking at today, I'm pretty much done. Primarily when it comes to Forex pairs, it's the dollar-yen one. So after the stream, I'm probably heading out for lunch. I'm going to leave a limit order here. Entry for me somewhere around this zone. I have to precisely nail it down on the lower time frame still, but probably somewhere slightly underneath 157.50. Stop loss somewhere in the area of 158.30, and then you can play around. Probably I also would do something like a 1-to-1 R as a first take profit, and then get that down. Yeah, get your stuff first going. So what we could do here, maybe we can mark that also, is like risk reward ratio. Probably we could start with something like 1. Put a horizontal line there as the first one. Then let's take that down to maybe something like 2. Put a line there, the line just, to visualize where my take profit zones. Then I would go to 2.5. Round about here. And with 2.5, we are already in the mix of things. Why 2.5 here? Why not 3? Because that puts us already within this area of wicks here from the last. So this is, many people probably would call this an order block or whatever. For me, it's just a natural zone. Last time we bounced off there somewhere in the mix. Of course, you could add now further take profits. So there is absolutely no reason from keeping you like going to 3 or 4 or even putting stop loss down here and then move your stop loss or something like this. But probably overall, this is how I would play it out. I'm going to leave this on the screen. As I said, I'm going to place my limit order there on my actual account, and then let's see, like, until Wednesday when I'm next online with the stream, how this one played out. I'm leaving this on here just that we can remember, that I was in this trade. Otherwise, going to draw too much. When we talk about euro dollar, I'm not too sure. I see whatever, you know your name, I cannot pronounce it, sorry, and said I potentially also see more to the upside right now. Looks like if I look at the shorter time frame, like really compare like where are the scalping opportunities at the moment, also a little bit of up trajectory. However, I would be careful with this one because it looks on the lower time frame also as if we could flip to the upside, to the downside very soon. Again, like we said earlier, the thing with euro dollars at the moment, or with the dollar in general, we are going to heavily rely on, whatever comes out of that meeting with Xi, the narrative, what is going on in Iran, the meetings in Japan taking place, all the numbers, for example, CPI inflation data coming out tomorrow, and housing starts, I think, or is it housing sales? No. It's retail sales, sorry, coming out on Thursday. That's, for me personally, always an important one because the US economy is driven by consumptions of retail majority. So that gives you always an indication on overall where is GDP growth, for example, going to be the next quarters. What is the job market probably going to do the next quarters? How's the general sentiment of the consumers out there? Are they sitting on their hands saving up money, or are they willing to spend money? That being of course, it's more complex like this, but I can give you a general assumption, a general hypothesis of where the economy might be heading. It doesn't naturally like one-to-one translate to what currency rates are doing or what the stock markets are going to do. Is just, again, another puzzle piece in your whole puzzle of things. So that's going to be important. I think I'm really leaning towards the thesis here that anywhere above 118.50 in euro dollar, the air is becoming very thin. I would be super surprised if, like, within the next 2 weeks or 3 weeks, we see suddenly trading at 121 or something like this. I mean, it naturally would make sense in this kind of flow of stock market environment, but maybe it shows you also, the reality of geopolitical things more than the stock markets and gold are doing at the moment.
Yeah, it's really tough with the dollar positioning, right? Because I can see it happening with dollar yen taking another dump. It pushes us above key levels, and then we hit those those stops. You get the triggers like CTAs. Okay, we start running. I don't like it. I wouldn't want to be buying it. I would prefer to short tops right now, but I can definitely see both sides of direction right now because we do have that mixed picture, which is I'm definitely going to be doing it day by day, and probably for now, after trades earlier today, probably waiting till good old Trump is away.
Yeah, for me, I'm really only putting on this limit order in dollar yen, and then I'll see where that goes. I marked it down, so on Wednesday, should that be executed, we can have a look at it, how it developed, but of course it needs to be triggered first. Richard Butler is back.
Hello.
Did you have your lunch already?
I did. And now I'm having water.
Sehr gut. Likewise, vodka.
It's water with a V.
Yeah.
Now just good old water.
New stream setup, Rich, as well.
Yeah.
Yeah, looks different. You're right.
It is blue.
You're in the ocean.
Nice.
I have a whole blue wall that requires paintings to be put up. So I first need to hammer in some nails and then get to put all of the wife's painting up. I do have one of her drawings, one of her doodles up over there, and then obviously this one. And then I painted this. I
admire everybody. I admire everybody who can paint, because my drawing capabilities really are still. Basically, they plateaued in second grade, I think, in elementary school.
Dirk, you and I, we're the musical people with the bass.
Yeah, I wish I still were. I haven't touched my bass probably also in like 8 years or something.
Maybe I should just hang my bass there. I don't know. Maybe I should do that.
Definitely.
Do it.
William
I'm
also
just gonna
back.
grab it.
Hello there. That's literally what I've done in my bedroom. I used to play acoustic and electric guitar, and then I sold my electric, but I've still got my acoustic. I just hung it up on my wall because I don't play it anymore. So it's
They,
decoration now.
they also call him the Ed Sheeran of Wales.
Not because of his guitar ability, but because of his gingerness.
Because I'm ginger.
Nice.
That's good.
Oh man. I tell
I
you.
gotta
say
get
that
my
now.
I gotta get my new office set up. I actually did a bunch of that today. I was looking up desks, like a standing desk, like trying to figure out what kind of do I want, just like a standard one or like an L shape, or get some other bits and pieces. So I think I've got it roughly mapped out.
Should it be in gold or platinum?
Diamond
Filled with
plated.
ducks. A bunch of ducks.
Nothing better than a diamond desk. You don't have those pesky scratches all the time.
No indentations. It is so hard.
Yeah.
Scratch resistant.
Diamond coated.
Yeah. If anything,
Yeah.
it'll scratch everything else.
Yeah.
I was gonna, it cuts
It
your
does,
hand.
yes.
You like, you nick your hand on the table, and it slices you.
Oh man. Good guys. I have to get out. I need to get home for lunch, and I'm going to see you again on Wednesday. Have fun. Thanks
Yes,
for
please.
being with us for the past 2 hours, and hope you enjoy the next 2 hours with the gentlemen Richard and William. Take care, everybody, and bye bye.
Y'all
Thank you,
later.
Dirk.
See you later.
Have a good one. I was about to say, everything just went blue, and I was like, no. Dude, price action today is horseshit.
Yes, it is.
100%.
It's very blue.
It's
There we go.
absolute garbage. There's nothing
Yeah.
going on.
Like
Very
I was
much
saying
absolute
to
blocky
Dirk, like outside of the trades I caught earlier today, I don't know if I want to take anything. Kind of thinking like
I'm with
might
you.
have dinner. I don't know, watch a TV show and go to bed tonight for a change. Just like,
Just have a chill one.
Yeah.
yeah, exactly.
I wanted to say, today is like that not so typical Monday movements where there isn't really red folder news driving it. Everybody had news last week. There's kind of like still dissecting. We're still deciding. There were some tweets. So everybody is just like, should we be trading today? Or should we be sitting on our hands? I do think that it's
Yeah.
I do think it's a sit on hand day.
Especially when it's really hard. Like you've got NASDAQ by the all-time highs. Like if you're sitting here looking at this, do I keep going long? Do I like you'd just be like, no trade. What?
No, there's nothing here. NASDAQ is flat. NASDAQ is flat this whole morning. I wanted a deep pullback. I wanted to push lower. Pretty much to
What's the level today?
28,860. That's where I would have loved a pullback towards. 28,860, which was like just before the New York Open. It's basically the high of Thursday, which is 28,827. So 28,860 to 28,750 was pretty much what I wanted. Yeah, that area right there. That's what I would have wanted for a pullback. If it happens, if it doesn't, We did have unexpected red folder news on pound. So Labour MP Catherine West will press ahead with her challenge to the Prime Minister. She will email all Labour MPs about it later today. And then as that happened, pound started to drift a little bit lower.
With Starmer.
Yeah. With Keir Starmer.
Starmageddon, bro. Yeah, we've had a new government come into Wales as well. So we had the we had the Welsh elections, the Senedd elections, day before yesterday, and we've got a potential new government. So now we just need to wait to see what happens there. So that'll be fun.
Lovely.
Fun times, mate. Fun times.
Scott Besant is talking with Takaichi tomorrow at 4 p.m. Japan time. So that would be roughly start of stream. So like 2 hours behind me. So when you guys open tomorrow.
Yeah.
Interesting. Interesting.
Yes.
So probably no Japan intervention until after that chat.
I mean, that's going to be what, tomorrow?
Yeah. And then do they do it before Thursday, Friday with Trump and Xi? Or is this like a next week situation? That's the only main piece that I can really find outside of everything else going on to try and get some kind of general drift direction with the current knowledge we have now.
I'm not really seeing any trades right now. This is probably going to end up being one of those boring little, what do we do? What do we do?
Yeah.
So
This
the
is where
question
we
what
need
do
the
do?
trigger.
Yes. Yes, we do. We will have trivia though.
Yes.
Should we do it today or Thursday?
I'd have to put together some stuff.
I was gonna say, do we even have anything prepared for trivia?
Well, no questions, no. But
Fair.
I could try to scrap them up, but it'll take me a minute.
yeah. But I mean, we will have the giveaway associated with it as well. So I don't know if you heard that earlier, LJ, but we will be giving away 3 bootcamp accounts for position numero 1, 2, and 3 on Thursday for the trivia. So yeah, got the go ahead basically. And then we're still prepping for that massive event of June.
Yes. Yes.
She's going to be big.
She's going to be a big one.
Yes. Biggest event in 5ers history.
Ooh la la.
You got it. Have you got it fully fleshed out, Rich?
Yes, we do.
Okay, because I just had
we do have it fleshed out.
Add. Yeah, it's probably too late then.
Well,
it's never too late, LJ.
Throw it my way, because
squeeze it in there, like squeeze it in.
I'll send you a message later, and then you can read through it. But yes,
yeah, okay.
Just throw one my way, and then we can always see where it can be slotted in.
Okay. I'll think
be
out
the
my way
easiest,
as
I
well,
think.
because it just popped into my head. So.
Yeah. No. So it's
LJ, you want to write it down then, just in case you forget.
Yeah, like type it quickly in WhatsApp.
I was going to say, like,
I won't
just
forget.
straight away direct message Rich, just in case.
That's
Yeah.
right. I got it.
The idea that we have is fleshed out, like, let's say 98%. There's like 2% that is open to, let's call it interpretation. So yeah.
Okay.
Fair.
What did I say earlier? Audience participation. Audience participation. That's the 2% that still needs to kind of be. Are you sure you want to do that?
Combed out.
Are you sure you want to do that? Yeah, it's that basically. So yeah, that event is going to have prizes, giveaways, a whole bunch of stuff. Not just accounts. Not just hub credits.
Yeah, we're giving one night with Richard Butler away as well.
Dude, what did I tell you about telling the crowd about what's going to
Sorry.
happen.
I just spoiled
Is
it.
that
You
the
know,
audience
Will is great at so many
participation?
things, but keeping a freaking secret, man.
Yeah. My bad, guys. I just got really excited because, I kind of was hoping that I was going to win it. So
I already said no one from the stream.
I know. So
None of the
I just
hosts.
got jealous and I thought I'd spoil it. I'm so sorry.
We need new blood. We need new blood. It's going to be a guest.
Oh boy.
Oh dear.
Speaking of watching shows, LJ, what is the current flavor of the month for LJ?
What's trending in LJ's books right now?
I mean, there's not much out right now. It's pretty dry in general. But I've been watching The Boys and
As they come out.
Friends and Neighbors.
Ah,
Those two. Yeah.
I've been watching The Boys, obviously,
Yeah.
and
So what's the
Yellowstone.
boys?
What was that?
What's the boys?
Do you not know what The Boys is?
Hold on a second. Will you being serious right now, yeah?
Yeah.
What's The Boys?
Yeah. What's it on?
It's on Prime.
Yeah, you can get it on Prime.
Why is everyone laughing at that? I don't understand.
It's like
where
this.
people-
It's when Game of Thrones
it's like
was
Superman.
when Game of Thrones was really big, and somebody asked, "What's Game of Thrones?"
Okay. Well,
the
I mean,
equivalent
even then, I've still
of-
not watched Game of Thrones. So
Yeah.
I don't watch much TV, to be fair.
True. Fair enough. But yeah, the Boys is a universe, basically Earth, where people have superpowers, and they are treated like celebrities, basically.
Okay. I feel like I've seen maybe a trailer. I recognize the guy in the Superman suit.
Yeah, it is. He's an Australian actor. A New Zealand actor. Sorry, not Australian. New Zealand. Yeah, and it is very, very gory, very, very on the nose, I would say.
Yeah.
Like every season and everything that happens there is very political. It's very social media.
So
very,
it's like.
very on the nose.
Okay. Well, that sounds sick. I'll try and watch the trailer or something.
Go
good.
ahead and do that. It is very entertaining.
Is it? Yeah. Look.
Yeah.
I'll try.
Yeah.
From what I'm looking at, anyway, it seems alright.
Yeah, I don't want to.
Oh, it's not a movie; it's seasons. Oh yeah, you just
It's
said
seasons,
Yeah, of course. Yeah, fair.
So I don't want to give away anything of it. However,
Yeah.
the latest season, LJ, doesn't seem so far-fetched given the current political climate of our actual world. Now, does it?
No, and the writers were like, "Dude, you can't make this up. Like, we wrote this ages ago, and then
But
one
they
by
did
one,
that.
and
They were
especially
like,
as
okay,
each episode is
no-
coming out, it's always happening in sync."
No universe. This was something that could happen. When they were in the
Yeah.
writers' room, they were like, no. They decided what's the most far-fetched thing that can happen, and they just wrote that. And now it's like
Because
idiocracy. I don't know.
Yeah, at the time they didn't even know if he'd actually win, right?
Yeah.
Because we were still going through the whole election period and
Yeah.
everything, right? So
So yeah, Will is like, what are they talking about?
Yeah.
But yeah, no, it's crazy. Honestly, it's just ridiculous. Honestly,
Felix Road doesn't know The Boys. Oh my god.
Yeah.
Fair. Well, watch it on your phone, Will. That isn't a TV.
Not according to the classification in South Africa. Everything that can display something is considered a TV.
Dude,
Your microwave
reckon
can
you
be a
need-
TV.
So I don't know if they have this in South Africa, but obviously in the UK, the whole thing with TV license.
Yeah, we've got TV licenses.
Okay, so do you need a TV license for a phone
No.
or an iPad?
Well, at least
Where do
in
they
the
dr-
beginning you didn't. So
Where do they draw the
Um,
line?
there was basically they were trying to determine what was a television, what constitutes something being a television. All right. And then it's the national broadcasting versus streaming. So national broadcasting, you need a license in order to watch something from the national broadcasting. Okay. But you pay a subscription fee for streaming. So the idea of a license is basically for the National Broadcasting Commission to receive income that they then pay, actors and actresses and whatnot for movies and shows and stuff like that made in South Africa. However, now streaming came in and became way more popular. Now it's like you need a PC screen, like a regular PC screen, because theoretically, you can watch TV on my computer.
Yeah, exactly.
So I need a license to do that. So it's that what classifies as a TV, and your
fair.
phone, even though it has the capabilities to do that kind of like stuff, it's not classified as a TV.
Interesting. I remember finding out about that because I tried to watch something on BBC or whatever. I think it was like Industry. I don't know if you guys have heard of that. It's like a
I've heard of it. I have
finance, banking, trading.
Yeah,
show.
I feel like you've spoken about it before.
Yeah, it's kind of like imagine, finance trading kind of show mixed with like skins almost.
Dude, that sounds interesting. Like that actually sounds good.
That's literally what it's like. Yeah. But yeah, I was trying to watch on there, and then it said I needed a TV license. I was like, what the heck is this?
Really?
I literally had to message like a UK mate and be like, dude, what is a TV license? How do I get it? Like, what do I need to do? What does this mean?
Give us the TV license number, like.
It's like, do you have one? Can I use it? He's
Dude,
like,
it sucks. Because if you want to buy a TV, even if it's on lease or whatever, you have to, on credit, you have to, at the same time, pay for a TV license, which is a yearly fee, and you can never cancel it.
That's ridiculous.
Even if you get rid of the TV, you cannot cancel it.
Yeah,
they make it impossible.
There's the whole thing in the UK about,
that sounds like racketeering.
Yeah, dude, it pretty.
I mean, if the government does it, it's not
pretty
illegal.
Yeah, it's governmental racketeering. That's legitimately what it is. You hit the nail on the head. It's broken, man. It's because like there's obviously the whole controversy with people going to prison, refusing to pay TV licenses and stuff like that. And then they'll imprison you for it. Like it's not like a slap on the wrist. Here's a fine. You're going to jail.
Yep.
For not pay, and you got to pay to own a TV.
Yep.
Dude, what?
Like even if you like, because obviously, like back in the day when that was a big thing, it was you'd only have a select few channels, and those channels would be government controlled, and so that was their way of basically being like, well, look, if you're watching our program, so you pay us to have the privilege of that. Now that streaming's, like you said, Rich, streaming's about. Why are we paying for a TV license though?
Yeah, it's ridiculous.
You could say, no, I don't want anything. I don't want BBC. I don't want the mainstream media news. I don't want anything. I just want Netflix, TV. That is all. Nope, still got to pay for TV license.
Yeah.
Do you know? You probably won't, but for the hell of it, try and guess. What do you think is the slogan of the South African TV license?
God, I don't know.
You watch it, we watch you.
Pay your TV license. It's the right thing to do.
No way.
That's the slogan. It's the right thing to do.
I mean,
Actually, good point though. That why does the UK even need a TV license?
we
Right?
don't anymore. That's what I mean.
No,
It's
but even
outdated
beyond that,
now.
like they don't need money, right? So in Australia, like we've got like ABC, like the national sort of one. It's like taxpayer funded, so they just get it from there. Comes out of your taxes, I guess. So we kind of pay it through that. The rest of them are the free to air channels, like private companies. So most of them are private. So you just plug it in, watch TV. But back to the UK thing, why do they need a TV license? Because what we did, which was really silly. So ABC, the government broadcasting channel, with Bluey, right? They needed investment for Bluey a while back, and ended up signing over all the rights to the BBC. So the BBC paid 30%, and as part of the contract, the BBC got all rights to merchandise, toys, this, that, the other, all the other extra stuff that comes with it. And so the biggest bag fumble ever for the Australian government and for the free-to-air broadcasting channel, because the BBC has made 2.7 billion off of Bluey since then. And it's probably high now. That number was from like 2 years ago. So you guys should have
one
free TV.
key aspect. You're missing one key aspect of it.
British government.
Just because you've made $2.whatever billion or something doesn't mean you don't want more. That's the thing.
But the government
always want more. It's like telling Elon Musk, dude, you don't need another $200 billion. He's not going to turn around and say, "You're right. I'm not going to go ahead and just continue to be the richest man on earth." No, he's going to be like, "Oh, okay, I'm going to end up being the first person to pay $1 trillion in taxes." That's probably what he's going to say, and it's just like, okay,
yeah. And the government's like, "Oh, 40% tax? Ooh, what about 45? 50?
Yeah, literally.
Can we get 60? Ooh." Ooh.
They were talking about lowering the taxes by 1% for the higher tax bracket in the UK, and it would have gone from like 40 to like, oh, is it 45 to 44? I'm like, bro, careful, you know. Oh, it's like, wow, you big savers, you.
Yeah,
you
generous people.
Yeah. I'm not gonna step into that trap with the whole taxes thing. It is an absolute shit show when it comes to taxes. It is. Look, I think taxes, if used the correct way, is great. Look at the Scandinavian countries where, like for argument's sake, Denmark, yes, they do pay a lot in taxes, but they actually get something for their taxes.
Yeah.
You know, free healthcare, free schooling, all of that kind of like stuff. It's important to understand that paying a lot of taxes and actually getting something for that taxes is a completely different thing. That's why in America, people are paying a crap ton of taxes, but they're getting nothing for it.
Yeah. When I was in Hong Kong, I was looking around, and it's tax-free up to like 50 grand. And I was looking on, like, that's 50 GBP as well. So that's like, 500,000, something like that. And I was
500,000.
Yeah, so $500,000 or something like that. I don't know. It's 50,000 GBP, like 50,000 sterling.
Should be about what, like 65 to 75,000 USD.
USD, give or take. Yeah, something like that. And I was looking around, and, you know, you'd walk through, and, you know, you start looking around, and you're thinking, this place, you'd happily pay tax. Like, if I was to pay UK tax in Hong Kong, I wouldn't moan. I'd be pretty happy. There's people jet washing the street on the daily. Brushing, jet washing, picking up stuff. There's no litter in sight. The MTR, which is like the subway, I've never felt so safe. And, you know, like my missus would walk down to the MTR, take an MTR 2 minutes, go to the shops, come back while I'm streaming like 10 p.m. at night. I felt completely comfortable letting her go do that. In the UK, I'd hire a bodyguard for her. I'd send her with like...
We can't do that here.
I'd give her 3 bodyguards to go, and even then I'd be like, oh shit, you know, I wouldn't want to send her to the subway at 10 p.m. at night, certainly not on her own. Whereas like Hong Kong is so safe, so clean, and just everything about, like, everyone is just so proud of their city or of their country. There's like many little cities in a big city. It's really weird. Whereas the UK is and you know, you're taxed in the UK a decent chunk. And I'm not going to go too much into it because I'm back in the UK now, so I don't want the police at my door. So
be careful what you say now. Remember,
be careful what I say now.
They have a right to watch you.
Yeah, exactly. Whereas the UK, you pay so much, and it's without getting into it, it's not worth it. Whereas, like I said, Hong Kong, if Hong Kong was to tax the UK taxable amount, no one would moan. Everyone would be so happy about that because you would see what you're getting for your money. But when you're seeing a country that's so low in tax, like it's completely tax free up to a certain bracket, it's so low in tax, and you're seeing what they're doing for the country and how amazing it is and how well looked after it is. You're like, what the hell are we paying taxes on?
Yeah.
Like, where's it going? It's not going to the upkeep and the preservation of the country, because I've seen what non-tax countries are doing. They look cleaner, they're better, they're safer.
Yeah.
Anyway, should we jump out of this rabbit hole?
I think that might be a good plan.
Yeah.
Yeah, let's go for it. So it's just lesson some trades. I think I'm just going to jump into this. It looks as though we are going higher. Aussie's running higher. Euro dollar's running higher.
What did you jump in on?
Split
Euro.
between Aussie dollar and Euro dollar long.
Yeah, no, 100%.
I'm in a euro long.
Yeah.
Euro dollar long's nice up to as soon as we get the close above on the 5 minute. If we can get a close above, I think I'd be in euro dollar long with you. Gold, however, I'm liking the look of gold. If we can pull back a little bit further to, I don't know, 4,666, I think I'd be looking at long in that.
Because I was looking at Dixie earlier while we were talking. It seems as though we just want to wander lower. So given pretty quiet. I mean, there's always Trump risk, but
yeah, that's what's worrying me, and it's getting close as well.
As far as remaining trades, yeah. So we're in that now.
Yeah. Trump's going to be waking up for his 8th pee of the night. He's going to be getting ready to jump into the war room.
Be mourning for him.
Yeah.
So I might aiming for Friday's highs.
Aiming for Friday's highs. Yeah, nice.
Yeah, on EU.
EU, yeah.
Nice. I'd be looking to close the gap on EU potentially.
Yeah, that's pretty much the gap that I'm referring to.
Yeah, same on gold. I'd like to see gold fill that gap as well, which is again Friday highs.
Yeah, that is what I am looking for.
Also, guys, we've just had comment of the day come in. World's best stream. Thank you very much.
Thank you.
We do like that.
All right, guys. I might head off, get some food, since we're not moving too much. There's not heaps else to report on that Dirk and I didn't cover already, which is coming up later in the week. So see you guys tomorrow.
Yeah, awesome stuff, man. See you later, LJ. Go enjoy the boys.
Yeah, a bit of dinner. Gonna chill out. Just nurse these trades in the background.
Yeah, nice.
Watch some shows. Maybe play Need for Speed for a bit and then go to bed.
Oh, nice.
Okay, so.
Which Need for Speed?
PC or console?
Underground 2.
Oh, cool.
Nice.
Yeah.
I was more of a Forza guy than a Need for Speed guy. A friend of mine was a Need for Speed, and I played it.
Anyway, don't need that kind of negativity in our life.
Ouch. Wow, what's wrong with Forza, man?
Forza was a PlayStation exclusive, mate. Forza was a PlayStation exclusive when it came out, and nobody but the most richest elite of people could own a PlayStation to play Forza.
I've never had a PlayStation. I was always on Xbox. But...
All right, mate, go in.
Guys.
We'll probably have another repo session later in the week.
Yeah, 100%. Dude, I love those. They're good fun.
Yeah, it was good. All right, guys. See you tomorrow. Stay safe, everyone in chat, and hope you guys just find something, because we're pretty quiet.
So do I. I don't think I'm going to hear anything on Monday.
Whatever we do today is probably going to just end up being, I don't know, flat. So my current trade is sitting, I think, something like this. It is split into two.
Yeah, nice.
So the first TP is going to be roughly around this area up over here. Wait, what did I have the... Here we go. So the first one's TP is 1R, and then the second one should be 2R. There we go. So that is exactly the EU trade at the moment. I don't expect this to run for the hills. I mean, if you consider... wait, what was that take profit on the second one? Was 873. Okay. So 873 is right there. If you consider the whole London range is 17.5 pips. So a little bit lower than that, basically. But the time that it took for it to reach that whole section is 1 hour and 45 minutes to go from the bottom end to the highest point, basically. Well, actually.
Yeah. I'm starting to think I may have missed.
Hour 20. So this should play out for an hour 20 as well, if it had the same conviction.
Yeah, I'm starting to think I may have missed gold.
Gold.
Yeah, I was looking at long in gold around 4,666. We can get a pull back
I don't
into
know.
that consolidation on the 5 minute, but I think we missed it now. I'm not trading my my live 100k account today anyway.
No.
I may trade my boob account. I may trade my 5k that you gave me, but yeah.
I mean,
yeah.
I have zero confidence in this trade whatsoever. This is just the play around account in anyway, but
Yeah, exactly.
I have zero confidence in this. But it's because of how we've been running like the whole day today. We created the low of the day, reacted off of it, broke a new high. Oh, misclicked. Broke the high of the day with that same movement, had a pullback into this base area over here. There we go.
Dude, my computer is... I need to send my computer to the nursing home, man. It's getting old.
Into that base area there, and then we need to start pushing up, but I have zero confidence in the strength of the move. Let's put it like that. Just very
Yeah,
whatever.
I'll show you what I'm looking at real quick, and then I'm gonna drop my screen and I'll leave you take your MT up because it's probably more interesting. Just looking at this, we had this low here, failure to come down and break this low, pulls back up, fails to break low again, so we've got that sort of higher low, and then we get the higher high just over here, consolidation, big move off of it. I wanted to pull back into this area here before continuing up. It hasn't come. We had this consolidation here with a lot of rejection to the downside. I suppose I could have executed there, but it just wasn't according to my strategy. And I think I may have missed this move now. And then I'm pretty sure I got bang on identical to you on EU. But again, I don't...
117,745.
I got 117.73.
Free will.
Yeah. Let's have a look.
That's a good question. Yeah. Hi guys. I always see you guys trading with those fun account. Why is that? Manu, it's very, very simple. So recently, the price action has been very
crap.
Yeah, I wouldn't say crap, but let me rephrase that. Price action has not been in line with my strategy specifically. All right. I am more of a trend following trader, and days like today where it's very flat. We would like to take trades, but I'm not going to take a trade on one of my either broker accounts or one of my prop accounts that is not according to my plan. All right? That's not according to my Trumpy. That's actually really good. The markets recently have been very Trumpy. So I'm not going to take a trade on my accounts purely for the sake of entertainment. And on top of that, I'm not going to take a trade on those accounts if they do not fall in line with my strategy, because that is the opposite of being a consistent or profitable trader, is taking willy-nilly trades. However, I do still want to participate. I want to be engaging. I want to be entertaining. I want to still provide value of sorts.
Yeah, exactly.
Right? So the play around accounts is purely for that. It's so that we can see whether or not there's a strategy that we can maybe incorporate in days like this, where it is either very choppy or it is very slow, that is outside of where we would normally trade. And that was the general idea, the general gist of these play around accounts. So recently, price action has not really been going my way in terms of my strategy on stream, because you can't. I can't guess when my strategy is going to start playing out on stream. So I can tell you, oh, okay, this in half an hour we're going to have my stream direction, that kind of like thing. So to satisfy my need to still be in the market and still want to play around a little bit without actual risk, we do it on the play accounts.
Yeah, do you remember when I said a couple of weeks ago, and you guys in chat will probably, especially you guys in chat who are here often, will definitely remember me saying this. When we need to scratch that itch, in fact, I'm gonna bring your screen up now. I'm gonna drop my screen because
so that you can stop lagging.
Oh,
You're Mr. McLagan.
Yeah, literally. So you'll remember when I was talking on stream a few weeks ago, and we were talking about just trying to scratch that itch, trying to, when we had that urge to be in the market and nothing was happening, and we would potentially, you guys would come up to us and be like, I've blown an account, I shouldn't have taken the trade, I wanted to be in the market. And you almost want to scratch that almost addictive feeling. It's almost like that, I really want to be in the market right now, but my strategy isn't playing, but I must click buy or sell. And I'm like, look, guys, there's a really easy way to satisfy this feeling. And that is keep away from your live account. Keep away from the account that you cherish and are trying to look after. And then what you have is a demo account. In effect, this would be our demo account, except it's not a demo account. It's actually going to do things for us. But what we recommend you guys would do is use a demo account. And that demo account is scratch the itch trades. And that scratch the itch trades is where you place your I must trade feeling, and where you can display all of the potentially the habits that you're trying to get rid of. But sometimes if you're gonna let it slip, you're gonna let it slip on the correct account. So it's almost like we can't all be perfect. Sometimes if you're an ex-smoker, or sometimes if you're trying to give up smoking, now and then we're gonna have a cigarette. Now and then we're gonna smoke. However, this is smoking the low nicotine, less addictive, thinner, easier to give up sort of cigarette, instead of smoking the full nicotine, full absolute guns blazing. It's probably a bad example. Guns blazing tobacco. So you have your different strengths and your different levels. With my 100k account that I trade live on stream, you guys watch me. I went down to like 93k equity, and I was like, oh, dude, I may blow this account. I was like, Rich, I can't be trading this account right now on stream. I was like, look, I don't want to blow this account. I was like, I'm not going to blow this account because I've worked too hard on this account on stream to pass phase 1, phase 2, get out of drawdown to go back into drawdown. I'm not going to blow it now just because Trump's been an idiot. And therefore, I was going to bring up a demo account. However, we use this account. So this is the account that, like Rich said, we can use to... Trades may not be trading. Things may not be in line with what we want to see. However, therefore, we're not going to trade our live, legitimate accounts that are actually going to pay our career. So therefore, what we're going to do, just have a bit of a mess about account, guys. Yeah, this is a this is a B trade, this is a C trade, this is an A trade. We're not quite got conviction in this, but let's just be entertaining with it. Let's see what we can do with it. And that's exactly what these accounts are. However, last week, I had some beautiful trading conditions. I got this account out of drawdown back into profit, and I actually made just over around about 2% gain last week alone on my 100k account. So I'm back up to 95k equity, which is 5% down.
So I like that. And the thing is, at the end of the day, you have to do whatever you need to do in order to ensure that you follow your plan. So if this play around account ends up being nothing but it's just a nothing burger. It's just, okay, you're participating a little bit, but there's no actual risk or anything like that. If this helps you stay focused on your specific account and how you trade your specific account, then do that. So like Dubakor is saying, like, so having an account for gambling, that's what you're saying. Not entirely, no. So consider this as a different way of looking at it. When you're trading a personal account or you're trading an evaluation account, how does the psychology impact you while you're trading? If you go through losses, are you afraid to take the next trade because you took a massive loss or anything like that? Like, consider the emotional impact, the psychological impact of trading. And then you go and look at how easy it is for you as an individual to go and just place a trade that is not within your rule set. The brain doesn't like pain. The brain is trying to avoid pain. However, at the same time, we all have that little voice that's like, oh, FOMO, which is the fear of missing out. I see something's happening, but it's not quite according to my plan, but I have a theory, and I want to play it out. That's this. That is what these accounts are. It's not gambling, because there's nothing on the table. I'm not winning anything by doing this. I'm not losing anything by doing this. But what I am doing is I'm learning about myself and my own proclivities within trading. So if I see, okay, I'm a bit hasty, I can do this in a risk-free manner and address it now. And then when I get to my regular account, let's put it like that, I don't feel that like FOMO. It's like, you know what? I see what FOMO is doing, and I don't really like this. This doesn't really work for me. So it's that first dip of your toe into cold water to realize, oh, this water is really cold.
It's almost like it's a way of keeping yourself in check, almost.
I like this. A satisfied trading envy account. I like that.
Yeah, dude, that's sick. I like that.
I like that because you're trying to emulate good habits, but sometimes the market does not provide you with what you want for your strategy. So in this case, this is a F around and find out account, basically. We're playing around and we see what happens with it, but there's no intention of trying to pass this. This is also not a trade that I'm going to be like, hey, everybody join my trade. I have an inkling and I'm just going to go with it without risking anything on my actual accounts.
Exactly. Like when you see me trade my live account, if I'm like, guys, like usually I'll tell you a little bit after I've entered the live account, because I don't, you guys copy my trade, and then next to me, we're both banned for copy trading, so like I'll usually tell you after I've entered the trade, and I'll be like, guys, I'm in on this on my 100k account. That's usually, or if I tell you I'm in on both accounts, that's usually when it's like, oh, okay, well, actually, Will's got conviction in this, like he's actually taking this trade seriously. Whereas this account, it's
sorry.
That's right.
We both clicked the same one because we
same comment as well. At least we were aligned on the comments that time. This account is, like Abdullah Flinkler just said, better than staring at us blank in the eye. Literally that. This is an opportunity for you guys to join stream. We still analyze the markets and we take a trade anyway, instead of us looking at because like when Rich was on his account and I was on my account, we'd be like, I'm not trading this. You trading this? Can't trade this. You seen anything? Not seen anything. We not trading? Nah, none of us are trading. And that's all the conversation would be. The rest of the time, it'd just be, banter, or it would be forced market analysis, which sometimes isn't fun and it's not enjoyable to listen to and watch either. Whereas what we're able to do is be like, oh, you wouldn't go chuck 2 lots on NAS. You wouldn't go chuck 5 lots on the US 30. Why would I do that? Yeah, but there's a sell coming. How do you know there's a sell coming? Go check it out. Oh, there may be a sell coming. We don't trade the US 30, or we don't trade the Dow Jones. So therefore, or like Euro JPY, you know, if you're like, oh, go check out Euro JPY, go long that. Like, Will, I want you to place a trade on USD CAD today. So therefore, I've got to then try and find a trade for USD CAD. Even though I may not have a trade for USD CAD and it's not something I trade, I wouldn't do that on my 100K account. So therefore, we can do that on this account, and it's a little bit more entertaining. You guys can actually watch us do an analysis and take a trade on something that potentially we've never even traded before. But I thought we all took opposites to Will. You'd probably be Q1
safest bet, mate. Safest bet.
Q1, you'd probably
Will.
You probably would have come close to passing your account if you opposed all my positions in Q1.
I wanted to say this. Sure, risk management, me, subset, common, mistake, Kia, hottie, high. I have no idea what that last section is, but common mistakes of risk management we can definitely have a look at.
Yeah,
so, to give you an example, over leveraging. So, you have a trade idea. I'm going to go through Euro NZD because Mr. Singh asked for it. So I will check Euro NZD for you, but I will explain then also a common risk management mistake that I think people make, and then Will, if you wish, you can add on to with your own idea.
You're talking about my passion now as well. You know, psychology and risk management. I could talk to you all day about.
I do like risk management and talking about risk management.
Dude, I'm almost tempted to give up the passion seat and give it to you when it comes to risk management, because I
wouldn't say passionate about it. I would just say nail it. Just nail it down. Risk management, just nail it down.
Yeah, because I
don't have to be passionate about it.
The way you look at risk management, it's super awesome to see.
Thank you, appreciate that. So, with Euro NZD, we were in a clear downtrend on the 4-hourly, basically starting all the way from the 7th of April. Very clear downward trending. You're getting lower highs and lower lows generally across this section, even though over here you basically had a little bit of consolidation. But sort of a semblance of a downward channel. All right, so downward trending over the last, how many days is that since the 7th of April? So a month and a bit. All right. So since then, you haven't really shown any sort of like propensity to want to break this downward channel on EU, or not EU, EU NZD. However, recently you have made this triple low effectively. So if I were to have a box be drawn through this area, you can effectively see that we came down while trending downwards. We came down and effectively bounced off of this area more than once. This is on the 4-hourly. If we go down, obviously there's going to be roundings. There's going to be different price action on the lower time frame. But on the 4-hourly, this seems to me to look like a little bit of a point of interest. So it acted as a level of support. We eventually broke through, when was this? Last week, Wednesday. We broke through, and now we're going to see whether or not it's going to act as a level of resistance. So we want to see whether or not it's going to break through and disrespect this area that clearly on more than one occasion acted as a level of support. Okay, so if I were to drag this box all the way back, you can probably find some sort of price action that is going to align with it in some way, shape, or form. I mean, this looks to me like a very clear level of support. There you have a lot of reactions off of it. You have a break, You have a failure to push back through it again, so resisted going higher. Again, resisted against it, resisted a fair few times. There's one as well. Eventually broke through, retested, and continued higher. So definite area of interest. There we go. So where are we currently trading around? We're currently trading around this area. Now, once again, we had a new low that was created last week, Wednesday, after this strong downward push. We just wicked a new low, and since then we have created this lower time frame upper channel. It's a very small channel in comparison to how large this downward channel was. Okay, so a small little channel on the way down. I just want to get rid of these last. Okay, there we go. So clearly we're trying to push back into this area of interest here. Okay, so if I go down to the lower time frame on the 1 hourly, I can start looking for areas where there was more momentous reactions around this area specifically. So slightly above it, we do have this small little area here where price struggled to choose a side and then started pushing through. So there's merit in having some sort of reaction above this area, even though the area itself in general, remember 4-hour time frame, 4-hour time frame had reactions, but you have different price action on lower time frames as well. On the hourly, we are at this area right now. Maybe I should just remove these two drawings as well. This is where we had a failure by the bulls to take this higher. So considering that you had the establishment of the area and then a push up, a retest of the area, and then you pushed up again, breaking that previous high with this price action that you have up here off of this move that you had down here below. When you came back down to it again, you re-attempted to have the same move as what you did over here, but failed, signaling that the bull pressure is subsiding. The bulls don't really have the control anymore. And the last moment where they absolutely failed was at this point over here, where you can see with this massive wick in relation to the candle body, price trying to push higher and then just absolutely failing. So you had a systematic failure of bullish pressure in this case. Now, this was the area where that happened. So to me, that is definitely an area of interest as well, because that was the last line of defense for the bulls that failed before we started breaking through what is considered a higher area, or not a higher area, a larger area of interest. Okay. Since then, price has attempted to push lower, but kind of flattened out, kind of struggled just after this initial reaction. We made a new low. We're trending a little bit up. So here's what I'm thinking. I'm thinking that we need to first see how we're going to react in this area where we are right now. I don't think it's deep enough into the zone to say, yes, we're getting liquidity and we're going to push lower. Okay? Because if you have to look at what was the last swing points, this is a whole area, but it's the recent swing points that you always need to take into consideration as well, because it was the actual point of reversal. So if we just take the last candle, there we go, and we see we're almost there. We're getting closer. So that is what 198.054 is the bottom end of that last swing point, and then the top end is 198.19. So it's a fair few pips distance. So from where we are right now to the top of that range is about 29 pips. Okay, so that's the first area where you want to see whether or not there is a reaction to try and push it lower. Should this whole area fail, you want to see the last line of defense for the bulls to try and push it up and for the bears to continuously take over. You want to see whether or not this area over here, how it reacts there. Because area of resistance or area of support gets broken, but what led to that being broken is the question that you need to ask yourself. And it was this. This movement led to that complete failure of the support level, which now became a resistance point. Okay, so in that case, I would then wait for a reaction off of this initial low point, which happens to be in the area of support / resistance in this case now, so point of interest. I want to see whether or not it can respect it as an area of resistance to try and push price lower. And then if it does, it slows down, it starts curving around that area, and then it starts printing on the lower time frame a new downward trajectory, a new downward trend. So lower highs, lower lows. And then I would then decide to get in on a sell. Okay. That is option number 1. Option number 2 is we disrespect the zone completely and we start pushing up to the last line of defense, which is this box at 198.36 to 198.69. So let's say 198.40 to 198.70, give or take, all right? Then I would want to see whether or not we have a reaction off of this point, because that was the last time that we had that volumetric reaction breaking through the level of support. So I want to see if price then starts pushing lower. That is where I would then start looking for sells. So that's the 2 sell bias that I would be looking for. Okay. However, if both of these get completely disrespected, we start pushing through both of them, and then we start coming back, then this area, this one once again becomes a level of support, and I want to see price react off of it again. Okay, so where does risk management come into play in all of this? Simple. If I am going to enter on a short, which one am I going to take? Am I going to take the reaction off of that initial level there? That's one area. Am I going to take a short at the higher end of the secondary one? So let's move this towards the left just to distinguish between the two of them. Where do I put my stop loss? Or am I going to look at a short from this area over here and having my... It doesn't matter where the take profit is, because that's not what I'm looking at. Looking at risk management in this case, you need to realize that you have 3 possible entry points. Just based on what I've just said now, you could have more, but just 3 possible entry points and 3 different stop loss areas where you can potentially gauge for. If I'm entering at the top end of this zone, if my stop loss was up there, I need to have my take profit be a lot lower so that I can have a positive risk to reward ratio, which would be in line with how I would normally trade. However, if I had this entry point down here, I would probably not need to have my stop loss all that high, because the next area is just above the zone. So you have 3 different zones with 3 areas where you can have your stop loss basically be put down. So risk management in this case is going to determine whether or not which one of these is which kind of setup, A plus, B, however you want to classify it. And that's going to be determined by your back testing to see how specifically that trade style has a propensity to play out in hindsight. Okay. And then I will say, okay, if it is a B+, let's say hypothetically, the one that has the highest chance of being a successful trade is the one that has the highest entry point. This one would be my A setup. And in this case, I would probably increase my risk. Let's say I normally take 0.25%, I will go up to 1%. All right? And that 1% would then basically be like, I have the highest confidence in this ability of this trade to go into my direction. The first trade, this one down here, I will probably go, there is a chance that it can break through this area. I am going to risk a little bit less. That to me is the risk management idea of this. And I think that's one of the biggest mistakes that people have is when they consider taking a trade, they over leverage. They over consider the value of that specific trade. So instead of saying, okay, it's a trade idea, it's a B, I'm going to go 100% with my B. So they over leverage what that trade can do for them. And then they lose, and then they lost a larger chunk of their account or a larger portion of their equity that they had. And then they get frustrated, and then the psychological impact starts coming in, and emotional trading follows suit. To me, If you're going to trade something and you're not quite sure of it, but it's within your plan, drop your risk. Don't over leverage. Don't over trade. Don't pick up risk when you're less convinced of the direction of the trade. And then on top of that, I would say wait for what I would consider confirmation of the direction. Don't just go in blindly. Oh, well, if it hits this point over here, I'm definitely entering. What's the volume? What is the momentum of that trade? How big are the candles in relation? Was it a impulsive move? That kind of like stuff. Think of how you're going to enter the trade prior to and what it is exactly that you're looking for. Does it need to slow down? Does it need to curve? Do you need to start seeing lower lows, lower highs, that kind of like stuff before you get confirmation to enter? That's it. That's how I would look at risk management in this case, without going into specifics like, oh, I would, I'll have a 3 pip stop loss and then I would start adjusting it as we go into 10. I'm not talking about trailing. I'm not talking about that kind of like stuff. I'm just purely talking about over leveraging.
Dude, I'm just gonna interrupt you real quick. Can you see me okay? Like, am
I have glasses on. I can see you.
My whole screen is just frozen.
It is
I can't see a thing.
freezing. It is freezing every now and then. But yeah.
Is it? I mean, I'm not in the most... Oh, no, I'm back. Okay. Whew, that was close. I was going to say, I'm not in the most flattering position either. Also, let me bring up my chart real quick. There it is.
We'll just see if your stuff is freezing. Because your camera, it seems a little bit...
my whole screen... I think it's my PC. Everything is just frozen. It's back now, but it was frozen a second ago. Right, let me just bring this up real quick. There we go. So, gold is doing a little bit of something. It's had that pullback back into this area here. It'll be interesting now. This is the area. It should, in theory, hit TP from here. You know, we've double wicked, pulled back. We've had a nice bullish close as well on this candle. At this point now, this should be the area that price moves up from. So hopefully, it's frozen again.
EU ended up eating up my stop loss.
Yeah, EU just munched, mate. Honestly, yeah. It went up like a lead balloon.
Yeah, it is what it is. Once again,
exactly that. CC. I'm not going to bring that comment up. I can see CC is trolling me,
as always.
As always.
Oh, I wanted to address this. Sorry, where is this? Louis. So, hi, Rich. I still haven't received an account for a couple of Wednesdays where I correctly guessed the gold price on LJ's chart. Let me talk to LJ about that. Was this on while we were on the live stream?
Mm-hmm.
I'll have to go and talk to LJ about that. I didn't know that we had a
wager on
an account giveaway for that. But let me talk to LJ and just hear that, because I have no knowledge of this whatsoever. I'll talk to LJ and just hear what was that about, and then I'll get back to you, Louis.
Yes. Also, we had a nice little question here a second ago. I'm assuming you're an ICT trader. Order block versus fair value gap. Who is most important?
Order blocks or fair value gaps?
Yeah, I don't trade order blocks, and I wouldn't know where to start. However, I will say I don't see, ironically, value in a fair value gap. I won't enter on a fair value gap. It's a confluence model, and I'll never look at a fair value gap. In fact, no, I'm not going to bother.
Are you going to try and share your screen? No, or shall
I'm not. I'm not going to bother. I'm going to leave your screen up, mate. In fact, could you do me a favor? Could you try and find a fair value gap for me? Legend, top man. So here we have a fair value, a generical, stereotypical fair value gap. In my opinion, fair value gaps can vary and you can trade them differently. However, standardly that would be a fair value gap. Now, that to me isn't an entry model. That is not enough to be a strong entry model, and it's not enough either to be something traded on its own. It is, however, a confluential area. So what that means is you can add a fair value gap, or as I like to call them, an imbalance, to help guide you. Okay, now if I was trading gold right now, by the way, I would have closed. It's just hit. It's gone back to a 1-to-1, and we've had a really bearish close and a failure to break higher. So I would, in theory, if I was trading this live, be closed. Anyway, so I would use a fair value gap as an area that I can use to stack confluences and confidence into my trade. I'd never actually use it as an entry point. So to me, fair value gaps are more important, answering that question. And the reason I say that is because I use them personally as confluence, and confluence equals confidence. Order blocks, I don't trade them. I don't know how to trade them. I'd possibly even struggle to mark a valid one out. I'm sure I could if I really tried. So yeah, when it comes to order blocks, I don't know. I don't know. So therefore, my answer is going to be pretty weighted towards fair value gaps.
If you want to talk order blocks, you need to speak to Victor, because he is
Isn't that part?
God when it comes to order blocks.
Quasimodo.
Yes. So
you know what?
He trades a combination of Quasimodos with order block movements. So a Quasimodo that builds or comes back down into an order block is like his perfect setup.
Okay. So so an order block, if I'm not wrong, it's the last candle before an opposing candle move.
So I think everybody has their own definitions.
And that's why I said when it comes to fair value gaps, mate, you know?
Yeah. But I think generally an order block is a large volumetric movement away from a specific area, and the candles have a very specific characteristic. They have to be engulfing, or they have to be an outside bar. So they can be one of the two. So it must be an engulfing candle, engulfing the previous bearish candle. So this would be close to a order block.
Okay, yeah. So that I would have marked that out as an order block then.
However, the full move of the previous candle, this is almost an outside bar, but it is engulfing. It engulfs the candle body open and close of the previous one. So the full candle size envelops the previous one. Okay. An outside bar, you would have a where's the drawing tool? You would have a wick that also is lower than the previous low, and then the candle body would close above the previous one as well. So it would need to be an outside bar. And anyway, so what's important about these, or order blocks in this case, is that you need to have some sort of structure shift followed by this movement. So a strong, momentous movement out of an area engulfing. And then the idea is that if price were to come back down to this area, so let me mark up this one as if it was an order block. So it is just like that. If price were to come back to this area, you're supposed to see some sort of reaction similar to what happened previously. So in this case, if this were to be an order block and price pushed up from it, if price were to come back down to it, you should theoretically see a similar reaction, or you should see it completely be disrespected. So in this case, that ended up being an order block that had a similar reaction. And then you can start adding confluences, like for argument's sake saying, okay, we have a fair value gap that created just after a reaction off of a previous order block. And then you can say this is confluence enough that the direction has now changed from in this case, bearish Tokyo to a now potential bullish end of Tokyo going into London. So they can both act as confluences, and I don't think one is necessarily better than the other one. I feel like they're both being used for different things. Kind of. Where, personally me, I do not trade fair value gaps at all. Yeah. I don't look at them. I don't trade them. What I do is I wait for an area to be established, this would be an established area. So you have a low of day, high of day, low of session, high of session, low of week, high of week, that kind of like stuff. So looking for potential areas where price either slowed down or completely reversed off of. And then I would say, okay, if price were to come back down to that area, let's see if we're going to have a similar reaction. So a similar idea to what the order block is, but to me, I just call them established areas. Okay, so price reacted off of here. We had a recent, the most recent lower high swing down here, and we have a low all the way down there. So the most recent attempt to try and push price up was broken, and then we had a follow-up attempt to try and push price lower with this candle over here. And I would look for a buy on that candle. To me, it's a established area reaction, break of structure. So we're breaking, or change of character. I don't care, whichever you want to call it. But in this case, price started breaking the previous most recent swing point. Now I need to see whether or not it's going to make a higher low. It did make a higher low on that one. This then classifies it as a base, in my opinion. We have a change in the direction. We have an attempt for price to try and break this newly established directional, and it failed. And then this candle here is the confirmation, this bullish candle is the confirmation that this was the most recent new low swing. So on the closure of that candle, I would look for an entry. Obviously, this being euro, it would have a different take profit and stop loss point to what I would normally do on, for argument's sake, NASDAQ. But the idea stays the same. Establishment off of a established area. The condition, the directional change happens. So from bearish to now a bullish one, just with this move alone. And then wait for a rally-based rally or a drop-based drop. In this case, we have the rally, we have the base, we have another rally. And then I would enter that as a trade. And then conversely, I would actually wait for a secondary one. So there's another rally, there's another base, there's another rally. I would enter here. Obviously, however I manage it would be how I manage it. That's another area. Here is another rally, another base, another rally. There's another one to take as a trade. So whenever I enter, it's going to be off of these rally-based rallies and drop-based drops. And you get multiples of them. And it is a 3-candle, 2-candle, or 3-candle, 1-candle movement, effectively, within a trend.
Yeah. Yeah, nice one. I do love your rally-based rally, drop-based drop strategy. Like I said, I've implemented it into my own little way, but obviously, like I say all the time, you'll never see me talking about strategy when it comes to an event, because I could teach you my strategy for 1,000 years and you'll never truly get it because you don't see the markets how I do. That's why I like that. I've pulled bits of your strategy and made it my own. And when it sort of aligns with confluences like consolidation, when it aligns with confluences like imbalances, fair value gaps, breaking closes, breaking retest, they are ever so sweet. They are very, very nice. Albert Linkler, do you guys like Victor? I do. We love Victor. I love Victor anyway. Victor's an absolute legend.
Yeah, I love Victor. I think Victor is
awesome. It's almost impossible to not like Victor. Okay, like, you know.
Do you guys trade like Victor?
Oh yeah.
So let's say, Will, where's your glasses, mate?
Where are my glasses actually?
No. So I think the person that is the closest to trading like Victor, I think, is Pedro. Because I think Pedro also uses the Quasimodos, and he also uses swing points within his trading as well. And he also uses order blocks. So I think Pedro is the closest in terms of his trading style to that of Victor. I cannot emulate what Victor or how Victor trades because
I have no idea.
He has specific rules that he always takes into consideration before he takes a trade. And I'm not privy to those rules. So you'll see an order block, and then I'll be like, oh yeah, there's an order block, I should take this trade. And then Victor is like, no, according to his strategy, he would not enter this. And it's like, why not? And then he's like, well, that's proprietary. And it's like, okay, fair enough. So
yeah, that, my friend, is on a need-to-know basis, and you do not need to know. I was just thinking, how embarrassing would it be if I read that wrong and said, do you guys like Victor? And then turns out we were like, nah, not really. Turns out it was trade like Victor. Oh, could you imagine? How
you answered the question, but not the same question.
Yeah. Yeah, could you imagine? That would have been awkward in about 15 minutes' time.
Actually, I don't think Victor is here today. I think...
Is he not?
I think Victor is with Dave today on the futures platform.
Then never mind. I don't like Victor. Victor's betraying us. Screw Victor, man.
Craig is saying fair value gaps support expansions on the higher time frame candles. So, sure.
I could, sure. What you said, sure. I have no data backing that. I haven't tested that, but so yeah, I'm gonna take your word for it. I'm gonna believe you because why not? But I have no data backing that. Like I said, I just use it as a confirmation. I like confluence for my entries.
Oh, dude.
Could you give me 2 seconds, mate? I gotta dart real quick. I'll be back in like 2 seconds.
Yeah, dude, no problem.
Sweet.
Was it euro or was it pound NZD? Which one did I... Oh, it was. Yeah, it was. I think I just deleted the... All right, so let me do it again. Sorry, sure, I accidentally deleted it. But the same area is going to play out. Something like that. Anyway, so 4 hourly reactionary points. Okay, so the question is this. Sorry for the extra question, Richard. Dude, it's no problem, Mr. Singh. If that sell zone fails, do you see 2.58 and 2.59 on euro or in euro NZD? Whereas 2.5, it is very high. On euro NZD, I mean, let's look at the daily. $2.58 is very high. It's like somewhere up over here. Seeing a daily cup handle, a large... Are you sure it's 2.58? Seeing a daily cup handle. Okay, so that we're on the daily right now. Daily cup handle and a large higher time frame W formation. No worries if you're out of time. No, dude, we're still here until like what do we still have? Another almost 2 hours. So don't worry, mate. Like there's enough time. You can ask your questions. We'll get to it. Okay, so you're seeing a cup and handle and you're seeing a bit of a W. So the W that I can see that basically has already played out is, where's that other drawing tool? It's the path. There we go. So there you had an attempt at a bit of a W already. So effectively an equal high up to this area over here. Come on, here we go. Up to this area over here, and effectively equal lows down at this area down here. If this is the W. Now, the assumption would then be that this would be a completely new structure from here on out. So from this section here, this is a new structure because a W structure has already played out in this case on the daily. I don't know how much higher we can go on the weekly. On the weekly, sort of the same, though not a very clear W here. What we could be looking at is a potential M. So this could be the midpoint of a new M, and then you need to kind of have that. So if I can just get rid of that, you'd kind of need to have that. Anyway, So I'm not really seeing a new M being formed on the daily. The M had already been formed, in my opinion. But that's just my opinion. So
when you're looking
one
for an
thing you need-
M pattern, do you want to look for that sort of that right hand side of the M to be like a lower low, or do you not care if it's equal?
it can be a lower one, it can be equal, it can be slightly higher. The idea that I look for is I look for a clear, if this was the one leg of the W, that the midpoint, this movement here, there either needs to have a clear attempt to try and push higher and then come back down to form the last leg and then start pushing up, or you need to see this kind of flat, indecisive, and then a run off.
Yeah,
I
fair.
don't want to see a third where the head kind of like peaks out here at the bottom and then tries to get back in and then a little bit more and then start pushing up. That to me is not a W at all.
Yeah, you want clear indication.
Yeah, I want to see it slow down, create a bit of a range, because that's effectively what the mid portion of a W is. It's just a range.
Yeah,
So
makes sense. Yeah.
this whole section here is effectively just a range, and this is coming into the range, breaking out of the range, effectively. So that's exactly what you have here between these 2 points is a W. So initial, a bit of a faff around, and then a breakout. But yeah, anyway, so where was the rest of the question was, so the 2.58 and 2.59, I'm not quite sure if I know where the 2.58 is. Or are you, wait. You are saying 19258 and 198,259. So you're saying up over here, 258. So somewhere around here is what you're saying. 258 to 259. So just this little section here.
I've just checked gold as well, by the way. Even though when like live,
W on the weekly and monthly. Okay.
I would have taken out. It has just hit a 2R, which is quite cool. Eventually hit TP.
And I don't have the monthly up. Let's put the monthly up as well. So you're probably referring to this now. Sorry, this. Sorry if the drawing is a little bit wonky, but you're taking the high of this leg up here with the low of that leg. This is the mid leg with a bit of a pullback, and now you want a continuation up. That does make a lot of sense on the monthly. Once again, I don't trade the monthly and the weekly. I'm much more of a lower time frame, but what I see is from the daily down to the 4 hourly. So you have a volumetric week pushing price lower, but you're coming into an area where there was some consolidation. Now, if you were to pull this area, this whole section that you have here back, you'll see some semblance of a reaction on the weekly in this case.
Dude, we just had news on gold. Check out the gold chart on the 5 minute. Five.
Wait, let's have a quick look at energy.
It's still going as well.
We've had a bit of a dip on WTI and Brent. Let's look at the DXY. DXY is also dropping ever so slightly. This may have been news.
Yeah, I think so. I'll just bring my chart up real quick. Check this out. So I'm going to break down and be super open about what I was discussing with gold. We had, my entry was here. We didn't get tapped in, so it's missed us no matter what anyway. Then we came up, hit a 1-to-1, pulled back, wicked, came up, came back down. We failed to break higher. I would have manually closed this at a 1-to-1. I would have said, you know what, 1%, that's good enough for me. We pulled back into almost what would have been a break-even bounce before then absolutely savaging up.
I
in
think
this,
it's this news, Will. So Saudi Aramco CEO Nasser said if the current disruptions continue at this rate, market will lose around 100 million barrels of oil every week. The strait remains closed. This was at 14:21 my time, which was basically a minute ago.
Yeah,
And
that would
then
be it
the
then.
follow-up is demand rationing is to continue as long as it remains disrupted. So that is probably...
That
yeah.
sounds more likely what that is.
Yeah, because we are seeing, we did see a bit of a reaction on Brent, but then again, it's not like massive. It's not like this reaction over here.
It's not an overly huge candle, but it didn't move overly fast either. It didn't just go to infinity and beyond. But it moved with more conviction than the entire day.
Yeah. This could be a front runner for like the fear of the strait remaining closed, because now it's rationing.
Yeah.
And rationing is not a good idea. That's a supply and demand issue. And supply and demand is a driver of the market. So in this case, no.
Interesting.
My cutie patootie is not here today. I think Victor is joining Dave today. Samir and Victor have an agreement with Dave on the futures channel. Every Monday they swap out. So one day it's Victor, the other time it's Samir, and then yeah. Check the 3-month time frame. Wow, dude. Like that
damn.
was on Euro NZD.
Okay, I was gonna say. I've never even looked at a 3-month time frame.
I mean,
I can drop my chart again now.
From here, that is clearly a upward trending. We're in the upper echelon of this 3-month time frame. So there is a lot of space, let's put it like that, for Euro NZD to come down, to even remotely come down, even to the, let's call it the 25 percentile point, which is in this case going to be in this area here, which would make sense for us to continue lower, to try and pick up some orders in this area here. Like even the EMA is struggling. It's only got this little section here. Anyway, so basically you can see that if price were to follow suit, what it's been doing since, since April 2015, we should be at least coming back down over the next few years down to this point. Let's say two or whatever years down to this area here, and then react off of that and start picking up. Because by the time that it reaches this area down here, it's going to be within this 25 percentile to 0 percentile section. So the bottom portion of the channel and the 25 percentile portion of the channel. So in this case, it does look like it's a potential to come down. But I don't trade currencies for buy and holds or sell and holds. I think there is a potential for it to come down. I mean, if I were to look at the 3-month lead, that's way too far, mate. Like it might.
Yeah, especially for an intraday. Anyway, for an intraday trader to try and.
What was the last one? Oh, actually, never mind the last one, Richard. It's a bit too much to explain in the chat. Thanks again for the help today. Cheers. Yeah, dude, no problem, Mr. Singh. It's no problem. Just remember, myself, I am an intraday trader. I can have a look at it. I'm just going to tell you the same thing that I see on the lower time frame for the higher time frame. I don't use higher time frame confluence to say, yes, we definitely have to go down or here. The highest I would go is the 4-hour time frame. And that is, like, I predominantly trade NASDAQ. So for me, if I go up to the 4-hourly, I get the directional movement as much as I need. I don't hold trades for much longer than a few hours, so I don't really need to go up to the day. So do take what I have to say with a pinch of salt, mate, with as much salt as you want as well.
Yeah, fair. I'm just gonna go with tube because I can't. Yeah, tube. Is gold's movement valid? Yeah, yes.
What do you mean?
Yeah,
Movement.
What do you call? What do you call? Yeah, what do you call valid?
It's an impulsive move,
Because
but
it's not a fictional move. It has happened.
yeah, I mean, you can consider it a front runner, basically. So there's fear that the Strait of Hormuz is going to stay closed, or at least let's say that there's not going to be conflict resolution between the Iran and the US, which is going to lead to more disruptions in oil flow. So this is a fear response. We fear that this is definitely not going to happen in the near term. So if it were to continue like this, we're going to have to do rationing. So the reaction that you're seeing on gold is that, well, this is just in case. This is that, oh shit, if it is going to be blocked off and we have to go into rationing, we're going to have to try and hold something else. Oil is going to drop, gold is going to pick up. So that's kind of the idea. Or gold is, not gold, oil is going to go down, oil is going to go up because now you're rationing. But then at the same time,
the supply is going down, the demand's going up, increasing that price.
But not only that, the supply itself is a lot more than usual because the strait is closed, or because of the fact that the strait is closed, there's oil. It's just not being sent out. So they need to cut back production because they've got nowhere to store it. And then the flow as well is also being impacted. So there's a demand for it, but the demand itself is not the driving force at this point in time behind the oil price. It's the supply. The supply at this point in time is being restricted, even though there's a high supply. So it's kind of like this limbo point where the supply is high, but it's not really going anywhere. But the demand is also still high. So there's a blockade. There's a blockage in the middle.
It's like that bottleneck almost.
Bottlenecking is a good way of looking at it. Oil is bottlenecked at the moment. And this reaction that you're seeing here is that, well, if this is going to continue, this is what is in our future, we may as well start trading at this. So I think gold is the direction valid? Probably.
Yeah. I've had a buy bias anyway, but I wanted to come down a bit lower first. It's a shame. This wouldn't even look. I wouldn't have taken this anyway. It's annoying, but this wouldn't have even tapped me in. Like this trade I'm talking about now is like, oh, I've hit 2% TP. I've now moved my TP up to the gap fill, which is now a 7.3 R trade, and I truly believe that this will hit it. However, even if I was to open this order, it wouldn't have tapped me in because it would have. It just wouldn't have hit my entry zone. So. This is all not. It's not even hindsight trading. It's all foresighted analysis. It's just missed.
Personally, myself, I don't participate in impulsive moves because it's an emotional response.
Yeah, 100%. If I saw this, let's say I was live and I hadn't, because like I told you, I would have taken out a 1R trade. Had I have not taken out a 1R trade and it hit a full TP at 2%, so be it. Had I have waited and had my TP all the way up at a 7R trade, at 7%, then I would have seen this move and instantly closed out at like 1.5%, 2%. I wouldn't have allowed this to keep on running up because, like Rich has just said, it's impulsive and it's clearly in reaction to something that's been said geopolitically, which I suppose so is all trading, but this is something, it's an immediate reaction to something that's been said. So to me, like Rich has just explained, this is almost an emotional move, not a planned out strategic gold supply and demand move.
Yeah, if I'm going to participate in gold, I want to confirm that this is the intended direction, meaning we are going to have some sort of momentum pushing price higher. You can see that from the London Open to the low of London is roughly 29 pips, or in this case, it's 290 pips. Well, technically, it doesn't work in pips. Gold is in points. It's 295 points of movement. So it's $29. Okay? Whereas that took 2.5 hours. Where this movement was also $29 of price movements, 290 points. And it did so in 15 minutes. So I want to see whether or not this is actually the direction, and if it's not just like an emotional reaction. However, I am going to take a trade on the Funsies account, because why not? What are we going to do? We're going to take a buy, and we are going to ensure that stop loss is at 4682.
I'm sorry, you're taking a what?
No, I'm taking a buy.
Oh, I thought you said you. You know what? When you said that your stop loss is at that level, I don't know why I hear TP. I thought, are you selling this? I was like, are you shorting gold right now?
I'm going to just buy it. Once again, I'm not taking this as an actual trade on any of my accounts. I am purely just playing with this one.
Why not up the risk?
I have no intention of trading gold right now at all on any of my personal accounts or whatnot. Where am I going to aim for?
Why don't you up the risk of it? Gap close. Got to be gap close.
So,
well, I suppose it could be Monday high. Monday high or gap close. It's got to be.
Well, I'm already close to it. 4715 is right there, so I'll make it slightly lower. So right there. And this is a 0.03. I think this is pretty much the maximum that I can go. This is 1%.
Oh, really? Oh, fair. Oh, so you are... Okay. I was going to say max risk.
Thanks, Mr. Aberdorf Linkler. Risk disclosure. This content is for educational purposes only and is not financial advice.
I wouldn't even call this part educational purposes. I'd call this entertainment purposes. So don't learn from this. Oh, I suppose you could take a lesson from this. Don't do what Rich is doing.
Look. Okay, I'm going to be dead honest with you. From an educational point of view, there is quite a bit that you can take out of this. It's what not to do.
Yeah, literally.
First and foremost, what not to do. Secondly, you can always look at this kind of stuff and you can say, okay, I've always wondered whether or not a willy-nilly trade would work. We'll see the evidence now. The question is this going to be a willy-nilly success or is this going to be a willy-nilly failure? And if it's a willy-nilly success, you need to ask yourself, how often do you think this kind of trading would be successful? What's the success rate in the long run of this? And I can guarantee you it's not very good.
I disagree. I'm gonna trigger you here, I think. Because I think a willy-nilly trades will work when it's got conviction following it.
Yeah, but then it's not a willy-nilly trade.
Is it not?
No, dude, a willy-nilly is just looking at the chart going, buy.
Okay, yeah, okay. Let's tell me.
Let's call it a YOLO trade.
Tell me what this trade would be then. I want to buy. I've got conviction in buys. It's at an area of interest, but I'm nervous, and I think, screw it, I'm going to buy.
What does your plan say? Should you be buying right now? Do all of your confluences align?
60 to 70% says I need to follow this.
Okay, so what is your barrier for entry?
What do you mean?
What is preventing you?
Okay, what percent? Yeah, fair. Okay, you need 80% minimum. You need 80% minimum. You're at 60, 70%. You're up. The following 60, 70, or the following what would it be? 10, 20% is going to be sort of psychology and nerves, etc.
Okay.
And you're looking at it and you're thinking, screw it, I'm going to do it. And it's almost like that YOLO attitude. Now, this isn't a confident trade. It's yes, okay, it's got bias. Yes, it's following strategy, but you've not executed it the way you should execute it, with conviction and confidence and that sort of, You don't care. You're like, yep, you know what? I followed this with that nonchalant attitude that you should when it comes to trading. Instead, you've made that emotional decision, correct emotional decision, but nonetheless, you've allowed emotion to take over, and you think, just F it, I'm going to do it. What would you call that trade?
Okay, so that is just straight up just an emotional trade. It is one that, yes, on the
So
surface,
would you call that willy-nilly trading?
on the surface, it would seem like a willy-nilly trade, but a willy-nilly trade is without bias. It's without.
Okay,
like,
fair. Yeah, okay.
It's literally just I'm looking at the chart and I feel like buying. I've not done analysis. I've not done any confluence stacking. I'm just looking at it and going like, I'm going to buy. That's a willy-nilly trade. Whereas what you're explaining there as a YOLO trade is, like you said, it's 60 to 65% there.
Yeah.
But it's not following your plan. And like you said, your barrier for entry is like, let's say 80%. And that would be what, a B plus kind of setup.
Maybe, yeah.
And you'll say, I'm willing to enter, but I'm going to reduce my risk. So you're still going in. It's still not a YOLO trade. You're still entering with a margin of risk that is acceptable to the grade of trade that it is for you. In this case, it's a B. So in that case, it means that as a B setup, you have certain characteristics that need to be in place, and you're only willing to take them if they're there. You're YOLOing if you go against that.
I rate that.
Pretty much.
Okay, yeah, no, I rate that. I'm just going to bring this up real quick because there's clearly someone with a big issue that needs to be nipped in the bud real quick. Put some respect on Victor's name. You said, who even likes Victor? I don't like Victor. Screw Victor. He sucks. Meanwhile, he's not the clown you two are. Well, if you had two brain cells to rub together, you could actually go back and realize that we were joking because I misread a comment. I have got the utmost love for Victor. He's an absolute legend. I wish I was half the trader that Victor is. So do us a favor and pipe down before I personally give you a timeout. Because, you know, before you come into the comments like this, sort your facts out. And before you come atting us as well.
So this is an emotional response.
Victor is an awesome guy. And, you know, to actually have that sort of response and out us and call us those sorts of things without knowing the facts makes you look like the clown. So just nip that in the bud real quick.
Yeah. This is what I would call an emotional response to not having all of the facts. You heard something.
Yeah, exactly.
And you jumped to the first conclusion, and that is that we think that Victor sucks. When the reality of the matter is that myself and Will have the utmost respect for him.
Yeah, literally. Dude, I've been I've been for dinner with Victor as well. You know, me, Victor, and a few other guys at the 5ers, we all went out for food together as well. So, yeah, dude, shut up.
But
man.
Once again, you are entitled to your opinion. If you believe that we rant all day and that we have zero, value to give to the stream, you are entitled to your opinion.
Yeah, of course.
But you can't say that we are clowns because we don't like Victor, because you misheard or you misunderstood what we were talking about.
Yeah, absolutely. Yeah, so get a life. Victor isn't even on your level. Victor isn't. No, we're not on Victor's level. Just to clarify that, Victor is an awesome, awesome trader.
Have you seen his face? We have. We've seen Victor's face.
We have seen Victor's face. Like I said, I've been out for dinner with Victor. You know, Victor is a seriously awesome guy. So, get a life. I have a fantastic life. A fantastic life. So don't worry about me, son. My life is good. Yeah, I got a great life.
Yo, Samir, what's up?
Yo, Samir, how you doing, bro?
Hello. Can you hear me now?
We can hear you, but you're very robotic.
Yeah, a bit crackly.
Yeah. We'll see. We'll see if.
Oh, there you go.
Here we go.
Yeah, you're back.
Much better.
All right. So I was seeing you guys was talking about Victor, and he's an awesome guy.
Yeah, we love Victor.
And I think this guy was a new on stream because I haven't seen him on the on this time. Anyways, so I can see a trade running on gold, and it is going very decent right now.
It's drifting around take profit, not take profit, break even. This is what we were talking about, a
Oh,
willy-nilly
you haven't
trade.
buy.
Yeah.
I
Do you
was
think it's a
assuming
sell?
I was assuming it's a sell.
No.
I was like, it's going
Same as our
down, it's
friend in
good.
chat, your assumptions are a little bit misplaced. No,
Sound is low.
my sound.
People are saying sound is low. Delay in Samir's voice. I don't know. Maybe now. Now it's good.
Yeah, you seem fine. Yeah, I can hear you perfectly.
All right.
Yeah, I
Maybe
can
we
hear you
should-
perfectly as well. Let's hear. No, I think your
think-
volume is fine.
Yeah, I've just switched on the microphone. In the chat, people are saying volume is low. I don't know. Maybe I can switch to this microphone.
No, I think it's good.
Yeah, you're all good, man.
Right.
Oh, yes.
So it's a new
Louis.
week, new opportunities, and Louis, our regular viewer. First of all, I would like to thank you, man, because you are showing up regularly. It really means a lot to us. And now, okay, still we are having some trouble in my sound.
No,
Here it
I
is
think
fine.
it's
Okay.
I think it's only one person that's struggling with your sound. I think
Yeah,
pretty
I
much
think
everyone
so.
else is saying that they can hear you.
Okay. Maybe you can
Yeah.
turn up the volume a little bit, so that will be fine. So, all right, you are long on gold, and let me see what gold is trying to do.
Before you get to that, Samir, let me just quickly answer this. So, Louis, I remember I had a talk with LJ about it. It's when we were doing the predictions on that Monday and then on the Wednesday, and then I said I was going to try and get something for the people that guessed correctly. Unfortunately, I could not get let's call it a prize. But Louis, don't fret. We're going to look at potentially doing some more stuff like that where we actually can have giveaways with that. That was just for the fun of it, just to have a trade. So unfortunately, I could not get a prize for anybody on that one. It was just for the funs of it. I'm sorry if I brought up your hope for an account. But yeah, that unfortunately I could not get anything from that one.
God damn it, Rich.
I'm useless, mate. Useless.
Useless, man, useless. Just real quick as well,
Sean.
I'll put Abradov link there. Victor is calm and all, but I feel like you guys is bagging millions. Oh man.
Yeah. And then Unbiased Trader saying he's pulling your leg.
Yeah.
Well, I don't know, mate. Like he's
Hopefully.
he seemed quite serious there.
Yeah, you seem quite so. Oh well, look, my thing is, no offense to him, but I don't know who he is, but he knows who I am, so there's a reason for that.
You have created a villain.
You have created an enemy, actually.
Yeah.
Yeah, literally.
Okay.
All right. Do we have any
Samir.
news today? No news. Okay.
I was about to tell you. Not about to tell you. About to ask you. Your US30 trading of recently. How's that been going?
Actually, now it's good. I think if I share the stats, this was a winning day for me. This I didn't manage to get the trade because I wanted price to go a little bit higher, and it is Wednesday, and Tuesday was. Let me put on 200 EMA so that I can see. Okay, session started. Oh, it is not. I think Tuesday was a losing day for me. Yes, because I shorted here and then saw a little bit of profit and price went to the upside. So it has been decent, I think it's normal, but back in this time, I was really struggling, and I blew the account. I'm not gonna lie. In this market condition, I managed to make 35-ish%, and then I withdrew, slowly that profit. But then that account that I was having with 5ers, it came to an end So it happened right here. I was losing continuously. I was trying to, when 200 EMA was bullish, I was trying to buy, but then I was getting, stopped out below. I was trying to sell, then again stopped out. So here I lost the account, but I got my confidence back when we was moving actually right from here, which was 29th of April. From here I got my confidence back, and yeah, now we are here. And yes, I think as I mentioned, the confidence back thing, I really want to discuss about this. If you guys take multiple losses, I know we are not robots. Of course, we have trust in the system, but I think somewhere there is still that human nature where there is some kind of loss of confidence. Oh, I don't know. Maybe I should change something. Maybe I'm hitting some losses here and there. I want to know: are you in that phase when you feel this thing? Maybe, of course, not the loss of the confidence, but let's say your confidence is 90%, and when these type of things happen, maybe it can get to 50%, or you are still like, yes, I can do this, I have the confidence. I want to know this part from you both, because as I mentioned, then this question got in my mind. I want to know about this thing.
Do you want to go first, Will?
No, I was just looking at my statistics. Sorry, mate.
Okay, I'll go. Confidence.
Confidence, yes.
I think when it comes to confidence, I've fallen into the exact same trap that I believe a lot of people have, and that is in the sense of I've allowed the outcome to dictate my confidence. So if I've taken a few losing trades in a row, then I've allowed my confidence to kind of like get bruised a little bit. And it's the sense that you put your value not on your trading as a whole, but you put it on individual events. So if this trade does not go in my way, I'm a horrible trader. And then that small little voice in the back of your mind just kind of keeps on becoming louder and louder and louder until it is a scream in your ears that you're not a good trader because look at your results. And if you have a solely results-orientated viewpoint, it's very easy for your confidence to be fickle. Your confidence itself can very easily be impacted by that outcome. So, in my mind, I've followed what Richard Wells has suggested a lot of people do, and that is when you, instead of looking at your results as winning day or losing day, look at whether or not you have followed your plan, and that would dictate if you've had a winning day or a losing day. So whenever he journals, he takes even if it was a green day in terms of P&L, if he didn't follow his plan, it would become a red day. So it's trying to break the idea of where your confidence is coming from. Is your confidence going to be process orientated, or is it going to be results orientated? If it's going to be the second option, you're always going to have roller coasters in your confidence. You're going to have a few winning days, your confidence is going to peak. Your confidence will go down as your P&L goes down. Whereas if you followed your process, it's I'm confident that I followed my process up until I don't, and then it goes into negative. And then you're going to have negative confidence for that. But it will be, you'll still have ups and downs with your confidence. It'll still look like a chart, but it would look more like the monthly chart versus the 1 minute chart. If you're going to be focusing on P&L only, then it's going to be up and down, up and down, up and down, you know?
Yeah, absolutely. I think if you focus on, and that's why we talk about confidence. That's why we talk about process over P&L. When I was in Hong Kong, I went through. I was, and someone earlier on said that it's like, oh, you've been in drawdown for the past 2 years on your accounts, guys. We haven't. I hit break even just before leaving to Hong Kong, so I climbed out of 7% drawdown. And then, back into when I was back in Hong Kong, obviously, things were different, things had changed. My confidence just dropped completely because my strategy, not only with the Trump situation, my confidence dropped in the chart, in the analysis, And it got to the point where there was so much changing in the markets and when it comes to my personal life that it was difficult to even follow the process. And when I was getting to that point, I was like, damn. And I was like, I'm struggling to follow my own strategy here. And I started looking at the P&L, and I was like, and my P&L is going down. I hit like 5% drawdown. I was like, I feel crap. I was like, I just got back to bloody break even. I was like, I feel crap now. How am I going back down into drawdown? And it was because so many factors, including the time zone that I was trading, was negatively affecting me, that I was looking at my sort of the process of everything overall and thinking, what does this look like as a streamer and as a trader live on stream? So my other accounts were doing okay. I probably placed 2 or 3 trades a month, so I didn't really trade my other accounts. I acknowledged that the market conditions weren't optimal. I left them alone.
Okay.
I actually carried on trading these 100k account, the live account, and instead of
guys.
yeah, no worries, mate. So instead of actually following the confidence of my strategy, I actually started looking at what does this look like for me? I've managed to do this on stream, and now am I a losing trader? Am I losing my edge? Got back from Hong Kong. I'm back into my home setup where I feel comfortable and most optimal. Last week alone, I made 2%, or just over
That's
2%
awesome.
in 1 week. And that's my monthly goal. That's like my monthly average quota. And I thought, when you feel back on sort of in your comfort zone, back in the swing of things, back in, somewhere that you feel comfortable, I was able to follow my strategy and follow the process over the profit. And when you start following that, you're able to build that confidence. And even if you hit stop loss, even if like I haven't lost a funded account since beginning of last year, since like February last year. All those other accounts, I've managed to go into drawdown, claw back out of drawdown, head back up into the profit. Same goes with my stream account, all because I'm able to follow and watch the process and have comfort and confidence in my own strategy and in my own discipline for what I see forecasting in the future with my trading.
Yes, you guys really mentioned a good point. When you are process driven, I think then, of course, your results are also going to get better. So I think somewhere that losses was breaking my confidence, but of course not that much. I knew I have done it before. I can do it. I think as a human, this slight self-talk can be there sometimes, but yes, I think the main focus should always be, am I following the plan or not? So yes,
But
that
like
is a
you
really good
mentioned as
practice.
well, like you mentioned, Samir, you're gonna feel it. We're all
Yeah.
humans, and just because I think us especially, we put a lot of pressure on ourselves as streamers to actually perform well. Whereas, potentially guys in chat or guys at home who maybe don't even watch the stream, they're just traders, and that is who they are, and they don't care about who's, no one's watching them and judging them, no one's talking about them. They can perform how they want. Whereas Samir, like you're potentially looking at yourself, because I've almost done it, and it's almost like that sort of, that sort of self-doubt that you must
Yeah.
perform, and if you're not performing, you're going to lose confidence at a faster rate than anyone who's not being watched. So you're going to feel that more so because you're human. But you've also got to reassure yourself, and I say this to my partner all the time, because she has this self-negativity, and if something goes wrong for her, she's like, oh, this, that, and the other, and she almost creates this psychological domino effect. And I say you've got to reassure yourself and re-embed that confidence that you are following a process, and you've got to be proud of yourself, because you're doing things that not only 95% of people can't do, and that's become a profitable trader. You are a profitable trader. You're within that 5% of people. Now, not only that, you're also a trader on stream. You're a live streamer where there's extended pressure, where there's people potentially going to troll you, going to follow you, going to be a fan of you, going to have an expectation of you. So you've got to almost conduct yourself in a way that have that sort of level of professionalism as well. And I think that what's the there's a word for it. That syndrome that I'm thinking of.
Buster.
Imposter. Thank you. So you're gonna have that imposter syndrome, like maybe I don't deserve this because I'm losing. And like my one thing to you, Samir, it would be remember that you're only human. You are only human, and you're doing the best possible job that you can, and the best possible sort of input that you can in pretty crappy markets as well.
Yeah, exactly. So I think these psychological battles are with yourself are hard, but at the same time, you should remember like you have done it before, and if anyone is new and if he hasn't made the money, so I think the focus should always be on process driven. Like I have to follow my plan. I have to, I think then you can get to the next stage, and these cycles continue to repeat. When you are having a couple of losing months here and there, then of course these things are gonna happen to you. So yeah, that's a really good point you guys mentioned, and thank you so much for that. So I think you was in gold longs. Maybe you have hit on the take profit already.
No, not yet. The
Yeah,
take
price is
profit
some
point
low.
is at the gap close, which is 715. So for 715.
You're very loud,
Alright.
Rich.
Am I?
I think you,
Oh, that's better. No, that's better.
Was I talking too deeply into my microphone?
You were a little bit loud.
My apologies. I will whisper for the rest of
Yeah.
the stream.
Okay.
I think you have changed the setup.
ASMR.
Have you changed the setup?
It is currently sitting around 4705 ish.
Yeah, looking at the momentum, I think we can fill the gap, and I have seen
Probably
quite
go
often
higher.
gold likes to. Yeah, gold can fill the gap. So let's see what we can trade today. I'm just gonna drop some analysis. I was looking for buys on Euro USD, at least till here, but I never got a entry pattern here. At least till here, we can go bullish, but the problem is that I never got the entry signal. Even if I tried to enter at the 70% retracement, price never got to that point. Still, if we manage to get here, I think that can be my entry signal. So I will be looking at this, but if he breaks this and already liquidated this high, then this analysis is invalidated, and then we have to reanalyze what we can do or how we can react to the market. Actually, this candle is having no wick, so there is a high possibility price is gonna at least continue till this point. So now I'm just waiting for a retracement. If we get it, that's good. If we just leave, then I think I'm not gonna get the trade here. And if I go way too lower, 30-minute, 15-minute, that will be tricky. The chances of price hitting your stop loss will increase. As the higher time frame, this is a good area to take buy from. Of course, it can continue, but I mean, my plan is, the way I was trading currencies before, that's what I'm sharing. But now US 30, I can share that also. So let's see if we get here, that will be good. GBP USD, we already got to this point, but we never broke the structure. But weekly candle and all the things was similar only, making a lower wick. Maybe we can breach this high or even continue at least till here, or we can even tap this resistance. Looking at the candles moving to the upside, so there is a high probability. I already have missed this trade. Actually, I wouldn't be able to take this trade because this was right at the market open. You saw a huge drop and then price tries to go up. I was sleeping at this point, so I was not able to capture this position. If you go to the 50-minute, yeah, there is no any convincing structure. I would have said we could have drawn Fibonacci from here, but the problem is that we don't have any solid market structure, so we still can tap this again and continue bullish at least till this area. So I'm keeping my buys bullish for major pairs, which is EU and GU. AU is also bullish, but I don't trade this that much. We don't have entry signal on this also. I think if we already
EU
have,
and GU has a tendency of, in the past when I used to trade it, used to give me very good London moves. Not so much recently.
Yeah, I have to see when we are getting the moves, but back in the days, London session and New York sessions, that was my entry sessions, or I used to trade that. So I never could have imagined or even take this trade around this area, and it was also at the market open, so it is very risky. But the USD CAD is looking good for longs actually from here. So let me share my breakdown on this pair. If you look at the weekly candle, closed very bullish. We have this fair value gap which was never tested, and look at these wicks, 1 2 3. Try to actually 1 2, and now this is going to be the third candle. Try to retest this area but failed. So this becomes some kind of a liquidity point for me. Going to the daily time frame, and daily time frame candlesticks are closing bullish. Of course there is a leg here, I am aware about that, but the major focus for me is this liquidity point, and we are coming from the support area. So now I wouldn't be interested in sells, at least if we reach there and then we show some kind of momentum, then definitely I can plan, maybe we can sweep these lows also. But for now I think this solid leg to the upside and pulling back in this area, creating some kind of very simple breakout and retest of this area, and we are also retracing at the 70% mark on the Fibonacci. So this to me looks very decent setup for today, and we are also having this liquidity pool, as I mentioned, the weekly candle fair value gap already.
Gold to profit.
Yeah, nice.
Oh, wow.
That doesn't surprise me.
1 2 3 4 5.
Gap close. Doof.
I fear
20
that
minutes.
I have just outed myself by saying, look, let's do this thing. I'm probably going to prove that it doesn't work. And it ends up working.
Yeah, oh my god, yeah. Imagine just taking a willy-nilly trade and it plans out. Like, it's probably not going to work next minute TP hit.
Anyway. Sorry, Samir.
I'll do some kind of a simulation here tomorrow, where I will be doing some coin flip tricks, and we will be buying and selling. I think if we do some kind of logical stuff, that thing should play out in our favor.
Yeah.
Like logical, what do I mean by that? Maybe we can place stop loss in a logical way, if let's stop loss should be here, because this is the high.
Well, yeah, forced.
So I think we
bias
should,
to the
I will do some kind of simulation here someday. Yeah, that will be good. We can also do on the 5K challenge. We'll see, but yeah, gold is now moving bullish. Actually, the bias was already bullish for me also on gold. Weekly candle, look at this, we closed really nicely, making a bottom wick. I think this should be the next area where gold can continue.
So
Alright, we also
4-7.
filled this fair value gap.
Oh, yeah.
So
Anyway,
6-3.
guys,
At
I'm
least
sorry,
this
Samir. I'm going to have
daily
to jump off real quick. I'm going to love you guys and leave you. I'll see you all tomorrow. Guys, make sure you do smash that thumbs up and subscribe to the channel. Make sure you look after Samir. Make sure you ask him all sorts of fantastic questions. Samir, I shall see you tomorrow, mate. Have a great session.
Take care, Will.
Cheers, K.
Thank you.
Have a good one, Will.
All right. So I think Victor is doing futures stream today.
Yeah, he's with Dave today.
All right.
Senior
So-
Dave.
Yeah, Dave is a good guy also. I have done a streaming with him. I have enjoyed streaming with him. Victor is also nice. I love to stream with him. And Richard, you also. I love to stream with you. And we actually
Why, thank you.
all of the guys are really great guys. I love to stream with all of them. So yeah.
There's a lot
Let's
of
see
love in the 5ers host
Yeah, when
room.
Yeah, when I was thinking about Victor, Dave, Rich, then I was like, everyone is good. So why I'm picking up names,
Because you
everyone is. Yeah, that's nice.
Everybody needs a favorite, mate. Everybody needs a favorite.
All right. I think TP 4715 it's already done. All right. There is no positive news on peace agreement. Why is DXY looking down? Looks down. I don't know. I'm a technical guy, so I can only give my perspective on the technicals. All right. We made a top wick. Now we are trying to go down. Liquidity point. So definitely we can continue to the downside. Yes. So that's why EUGU trying to go bullish. Inverse relationship, between DXY and these major pairs. So let's see what we get. USD JPY moving very,
Slowly.
like very crazy. Momentum, we don't know. This is a liquidity. Now this is again a momentum. Are we gonna see this type of crazy candle once again, or to the upside? We don't know. So right now
Yeah.
we're in a very tricky situation.
It's going to require intervention, I think. Intervention is going to make it move.
Technical point of view, we are retesting this area. We can continue to the downside. Gozira, thank you to you also. And then I saw, Charan from Hyderabad. We did an event there. So I don't know if you was there or not. So Charan,
No, I wasn't.
No, Charan Sagar. So I think if you manage to come in your city again, I think you should be there, man. It was amazing. People there. We discussed about prop firms, how you can pass it, and we discussed about strategy, mindset. It was really lovely session, and there was a lot of great speakers there. I think if not even in India actually. So if you guys are having opportunity, any event is happening in your area regarding trading, of course you should not go into some fancy event where they are promoting we can make you rich, this that. But when it comes to knowledge where there are good people, I think you should visit that place. Back in the days, event culture, it was not there, but now a lot of people are taking initiative. So I think you should show up into that kind of place, and we are also planning a lot of things, so make sure you are tuned. But a USD CAD trade, it's looking
Are you in this trade,
good to
Samir?
me. So
Are you currently
yeah,
in this trade,
I
Samir?
am in this trade. One
Can I
of
ask
my
you this?
account, I took
You're
a
known as
long here.
the
I placed
US
a
30 guy.
buy limit. I was doing a gym, so when I got back, so buy limit was already triggered. Yes, and that thing is happening.
I think
Okay, now it's
PMK1 is saying we're lagging a little bit. But it seems better now. You're known as the US 30 guy. What made you decide to go into into currencies again?
I was seeing this Fibonacci thing is playing too clean on these major pairs. So I was like, let me do this thing on one account. So that's why I have traded with the strategy. It is not like I'm completely trying a new thing. So I have traded this before, and I think when I had interview with Jonathan, like a trader's interview, a success story type of thing. So I was using this strategy back in the days. So this was really, it has given me decent results. So I was like, let me do this thing on one thing, because when I was in a losing period here on US 30, as I mentioned, let me
You
pull
felt
out the
like it
chart once
impacted
again.
your confidence a little bit.
Yeah. No, I was like, it. Of course, as a trader, once there is a period of 2-3 months you are losing here and there. There is some kind of psychological battles here and there. So I was like, what if I do this thing like Fibonacci thing on one account, and on my main account I can focus on US 30. Of course, I will be streaming here also. So I was like, I can place my buy limits and sell limits or whatever I get in the morning, and I can just leave that account whenever, if analysis is invalidated or the trade is invalidated, I can delete that sell limit or buy limit. I made a plan this way. So
I like that.
some kind of optimization here and there. I like to do this thing every 3-4 months here and there. So yeah, maybe in near future also, after 3-4 months, I'll be optimizing my thing here and there to just keep up with my performance. So that's what I do here and there. I have mentioned talked about this with Victor also. So yeah, I'm that kind of guy, a little bit dynamic. I have learned a couple of strategies here and there. So I do like to be a little bit dynamic sometimes, so that I can get the similar kind of performance. Like for an example, like I'm used to make, let's say, 3-4% a month, and maybe the next 2 months I am not making this returns here. So I was like, what can I do to get back to this point? And then comes the experience that I have in past. So that kind of thing, okay, this thing has given me results, so let me optimize my accounts in that way. So that's what I do, and that's how I managed to made a decent amount with the 5ers also. So right now also I'm in this trade USD CAD, looking very clean. Let's see, but on the main account US30, I think there is a problem in this chart. Okay, now it's fine.
It
Now
was
we
a
can
bit
discuss
slowed.
about, yeah, I think I am using some other chart here. Actually it's the same chart, but if I try to pull out from here, it is not working. But anyways, now you can see it. To me, this looks like a big consolidation, which I think will break to the upside at some point. It can also reject from here, but if we break out, I think this can be the next area. So the plan for US30, we are just 14 minutes away from the market open. So what can I do here? Let's go to the daily candle first. Okay, daily has taken out the lows. We have one piece of the puzzle right now. Taken out the lows, fill the fair value gap. What are the chances it can continue to the upside? Now 50-50 becomes 60-40. Okay, slowly we have to build the confidence so that we can take the trade in that side, bullish or bearish. So now we have one piece of the puzzle. Going to the 4-hour time frame. Okay, 4 hour, it is not letting me go. I will not waste any of your time. Let's just stick to the 2-hour time frame. So what other information we have? We have this trend line. This is the second piece of the puzzle right now. Okay, fair value gap filled, daily lows swept, trend line. Right now we are at the trend line. Okay, second piece. Going to the 30-minute. Okay, we are some kind of consolidating here, and we are also having this level right here, which is some kind of resistance area. So this is the third thing. Now comes to the entry time frame, which is 15-minute, where we can make couple of scenarios. If price did this, we will do this. If price did that, we will do that. Okay, so for me, trade idea number one can be, if 15-minute candle closed above this area, I am going to take a buy here. Stop loss will be below the current structure. Normal stop loss size for me is 200 points. If I can get 250 points, that is also fine. If I get way too large of a stop loss, like 400 points, 500 points, 300 points, then it will become a swing trade that I don't want to do. So I will try to keep my stop loss somewhere close to 200 points, because I am trading US30 for a decent amount of time, and I have noticed 200 points is a decent stop loss, 150 points, 200 points. So where the chances of trade playing out in my favor in one day, like intraday type of thing, it increases. So this type of move I can expect, and my TP is also making sense. It is not way too beyond the areas. I can also make 190 point stop loss for 190 points. So this will be the trade idea number one. What if we rejected like this, 15-minute never closed below, we got back in the range, back under the trend line, and then we did small consolidation on the 1 minute, and we break that consolidation. So this will be the trade idea number two for me. Okay, so this type of thing. So then I can place my stop loss like even 100 or I think 100 points are fine, because, or maybe we can execute here 150 points. So this will look decent. All right, will be the trade idea number two. I think for today's session, we are only having 2 trade ideas. Other than that, what if price, got here and impulsed way too much to the downside and never got a chance to maybe consolidation and never see a consolidation? Then what we can do? Yes, this can be the trade idea number 3. So then we can draw this trend line, and if price decide to get here, maybe break a little bit, that's also fine. And do we have any area that we can rely on? Going to the daily, 4 hour, 2 hour, 1 hour, 30 minute. Okay, we do have this small area which was never tested. So can we use this area as a reference? If price slow down here, and then we will take a buy. What will be the stop loss placement, which will be the most important thing? Stop loss placement can be below this wick, because this is the wick which was a liquidity wick, and price rejected from here and never came back here. So we don't want price to go below this area. I think 1-to-1 will be the target. So yes, I think that's it. We have 3 trade ideas for now, and let's see what we get. The most important thing is some kind of pause after these scenarios. So that is my entry signal. If I try to explain you, let me delete it. Let me go to the 15-minute time frame. So I took a sell here, I remember. So this was a trend line breakout, right? 15-minute close below the 200 EMA, and this was also some kind of supply area on the 30-minute. So this was the story behind the trade. Close below this, I need some kind of pause. As I mentioned, I got to the 1-minute time frame, and I was looking that pause on the 1-minute time frame. What do I get? I get a pause here. So I executed this trade, and my stop loss was 200 points. I think I discussed this trade on the with my friend. He invited me to his live stream. He's an Indian guy, some kind of influencer. So he invited me, but some kind of network issue was there, so didn't manage to complete the whole stream. It was on Friday, last Friday, last Friday. Yeah. So I discussed this trade right on the live stream. So this was a very beautiful trade, very picture perfect pattern. So this is what I would like to see in today's session also. Let's remove everything. Let's focus on today now. Let's go to the 1-hour time frame again. Let me draw my trend lines. All right. Am I missing anything? Let me recheck everything. Okay, 4 hour, we have liquidity this. Okay, we have small fair value gap here. Let me draw this also in case price rejected from here. So my TP should be below this area. Sharon, bhai, you are spamming. Thank you for that, but please don't spam. I have read your comment. Thank you so much for that, and I respect it. So yeah, once again, thank you, my boy. So yeah,
my boy.
This is also not having a wick.
So I've seen you, or at least I've watched you take these US30 trades, like very, 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 let's call it religiously. You have a very specific thing that you're looking for. You enter regardless. It's commendable, really. It is. It's very commendable. Looking at somebody that just, they have it back tested, they have a plan, they just enter and they let it be. You mentioned earlier that you lost an account, and you've, with US30s, stuff didn't particularly go your way for a little while on that account. It is what it is. I see there's some people saying, like, you guys talk too much about yourselves, talk about the market, it's freaking Monday morning.
Yeah.
When people like Samir come on here and he explains aspects of himself, that is talking about the market. I mean, free BD 3000, you're more than welcome to, mute us during that time and do your own analysis. But the stuff that Samir is talking about is very important as well, because the market is the market. It's price moving on a chart, and it's you analyzing that price. But it's what's happening up here and the emotional side of it that is going to determine whether or not you have profitability or not. So I'm not going to tell Samir to not talk about himself if what he's talking about has got something related to trading. And I will do the same for everybody else as well. So cool your heels, bro. We're talking about the market, but we're also talking about psychology. We're also talking about emotions within trading, because it's all part and parcel of trading. You are not going to become a successful trader if you are a robot. That's just the simple truth of it. If you're going to act with emotions, you can work against them. You can find ways to improve yourself. But if you're just saying, no, I'm just purely price action, I don't care about emotions, you're not going to be a profitable trader. And even if you were, you probably would not be sitting here watching us. You would be out there making bank. So, yeah.
Yeah, we all share our experiences, and of course it is somewhere linked with trading. If you try to listen, try to link it with trading, I think you will find your answer. So yeah, so again, I'm waiting 5 minutes here. I'm not gonna be taking any action at least for the 10 minutes after the market open. We need some kind of information, and we get that after 10 minutes at least, 10 to 15 minutes, and then we can make up our mind what I need to do. I have this trade idea also, now this I have a trend line. We may be testing this trend line, try to go below some kind of consolidation. Actually, I've discussed about this, but I have marked it like this. So what if we reject from here? So in my eyes, the way I see the market always give you signs what it is gonna do. I was being very ignorant. What do I mean by that? Suppose I take a trade. I was following this same strategy. Let's say I take a trade here at the breakout, and price was showing me price is slowing momentum and it is squeezing to the downside. I was still holding the trade in hoping that it will hit my TP, but then price was trying to reverse. So now I have to learn from my experience, like when price show me this kind of nature, I am supposed to either break even my trade, or maybe if it breaks here, I might can close my trade. So the point that I was trying to make here is market always give you signs, at least according to my strategy. Some people have some liquidity moves. If price breaks this high, there is your stop loss. It just hit your stop loss completely. But it is just my strategy, I have noticed. So market always gives you sign. Of course, not always. Again, I have said it wrong. Not always, but at least 50 to 70% of the time, market gives you sign what it is gonna do. For me, this is squeezing of the pattern, and if it breaks, then definitely there might be some kind of area which price is reacting to. Now it is time to close the trade. I was being ignorant here, so I took some losses because of this nature. Now I am aware about it. Now I have the experience. Now I am ready to utilize my learnings in live market. So for an example, if we get a breakout and my TP is here, for an example, so what if at this support price is trying to do this and it breaks? So instead of hoping, I was that kind of guy where I was like, TP or stop loss, I don't care what price does. But I think this information that I have noticed, couple of months, couple of years, I have spent with markets trying this kind of thing, this breakout type of thing. So it tells me, yes, market can pull back, and it can even break to the upside. Instead of taking a loss, I should have booked my some kind of profits in this area. It comes with experience. So I think your experience is the best teacher, and you can maybe learn from our experiences, and take steps according to you. So yes, I think market always give you signs, at least according to my strategy. That's what my plan
I agree.
was. Yeah.
Just want to get to chat quickly. Unbiased trader saying, Rich, you're planning a long on NQ. If it presents, then I will take a long. So the idea is we've been very, very bullish for the longest time now, like weeks.
Oh wow, still
on
pushing.
on NASDAQ. However, we've slowed down significantly over last week. Last week, we did have a lot of attempts to push price higher, but we had more often days where we also had some slowedness. So we had Friday was very bullish, Thursday was flat. Wednesday and Tuesday was bullish, Monday was negative. And then the week before, it was very, very slowed. So I'm looking for whatever the market's going to give me. If the market proves a buy, I'll take a buy, which is at least was more the direction I was aiming in. However, today has been very flat for a Monday, but I anticipate Mondays to have the least movement throughout the week in general. But flat, if I don't take a trade today, that would be fine as well. The thing that I would want to say is that we're going to have the New York Open now. DXY was... The DXY was bearish, meaning that the dollar index...
if you want to show something to our viewers.
Oh, it's nothing particularly like... it's more like the confluence.
Okay.
DXY, in this case, coming into the New York session, which just opened up now, was a little bit bearish. And generally, you will see the inverse on NASDAQ. So when the year... Well, let's do this. When the DAX... Oh, not the DAX. When the DXY is going down, generally the NASDAQ is going up. So you can see here... Is it completely? It's not entirely overlapped. Not all that much. Anyway, when the DXY goes down, you get more to buy because the NASDAQ stuff seems cheaper. So more buying when it goes down on DXY. You'll generally see that. So even though it doesn't overlap perfectly, there's low volume over the Tokyo session versus the dollar's index was picking up, but the dollar index here was picking up because of USJ. So when UJ is picking up, the dollar index picks up as well. So these are very correlated together. So in this case, it was showing dollar strength because UJ was picking up. At the same time, NASDAQ was trying to pick up, but it dipped down a little bit and then just sideways action. So I'm still looking at potentially bullish price action. But the question is how long? So like now, we have, this is the 5 minute, we have a strong bullish candle. What I would like to see is I would like to see a strong bullish close. It can be above the previous day high, not previous day, previous session high, which is still all-time highs. Have a bit of a pullback, and then prove that it wants to continue up. And then I will look at getting in on a buy, trying to push price up. But as it stands right now, same as you, Samir. I don't trade the New York Open for the first 15 minutes.
We are moving way too much. I think let me put on the VWAP because these type of markets VWAP can help me. I have noticed. Let me put on the VWAP. Okay. So now we are just breaking. It is a fresh breakout of the VWAP. So now I think we can continue more because this is the analogy, with VWAP. If price is way too away from the VWAP, we can pull back at least to the VWAP. We don't even know if it is gonna break or not. But now it is a fresh breakout. At least we can go away from the VWAP. So that can be the trade. So I think it makes sense. For me, the entry pattern will be price doing some kind of consolidation and then breaking out. I don't like to take the impulsive breakouts. I like to wait for small consolidations. On the 1 minute time frame, it's fine. And then I like to, trade that. So let me take a look at US 30. Okay, we are rejecting from that area. So let me do some analysis here. Okay, what if we break this trend line? Can we take a trade? Yes, there can be the possible scenario. This can be the take profit. Do we have enough range to target? Yes, we do have. Do we have entry pattern yet? No. Entry pattern will be something like this. I think if we get something like this, stop loss will be, yeah, it makes sense. So, but we need that pattern, because that confirms, yes, there are sellers. And some sellers took some profit. Now some sellers are trying to, make a decision, breakout. Some sellers made the decision. We got the information, and we also can make a decision here, So yeah, that's how I look at, Of course, this cannot be the exact analogy, but Everyone,
Close enough.
look at the charts in a different way. Yeah. All right. Let's see. We are getting some kind of rejection. We also filled the gap here. So looking promising for sells, US 30. But entry pattern, we need that. We don't have the entry pattern yet. So, and NAS also, we are not having, this is not the entry pattern for me. I want to see that consolidation. What if price do this, this? Then there is a tricky situation. We can come down and we can do this, this. So if you take a buy here, stop loss is somewhere around here, that will be
That's why I don't trade the impulse.
Let's go to the 1 hour, 4 hour, 2 hour. We are way too extended. It is making all-time highs. Yeah.
I like this. Smart Risk Trading Hub is saying, here is a psychological powerhouse or psychology powerhouse. The charts come last. Reason I'm always here. Thank you for being here, Smart Risk Trading. I appreciate you being here, mate.
Yep.
Unbiased Trader saying, unfortunately, no long trigger on NQ for me, so we'll call it a day. I love the pre-open on NASDAQ between 12 and 2:30 p.m. UK time. I like trading quite a bit earlier. By, let's say, by your time, 12 p.m., I'm already done trading NASDAQ. I'm waiting for New York to open up, and then I start trading New York. So, vastly different. Like, where's Martin when you need him? Martin I. I wanted to bring this up earlier as well. James saying, hi guys, I appreciate your help. I used to struggle with trading, revenge trading, sorry. But your advice to lower my lot size, lowering my lot size has helped me manage my emotions and stop revenge trading. Dude, happy to hear. Like, genuinely happy to hear. The thing is, whatever advice we give, it is majority of the time it's stuff that we've either done ourselves that have helped us, or in theory should be the thing that could help. Doesn't necessarily mean that's going to help for everybody. Trading is a very soloist endeavor. It's very much yourself against yourself. It's you looking into the mirror and experiencing like your own faults being reflected back at you while trading. So if something doesn't work for you, it's going to become a trial and error kind of thing. So if it worked for you, we are very happy, James. So all you need to do now is just continue. Just carry on. There's always going to be something for you to have to fight against. Anyway, back over to you, Samir.
Thank you. And there is Abhishek in Hindi is asking if higher time frame order block is important or higher time frame fair value gap is important. When I was trading back in 2022, I was strictly following order blocks, and then there was slightly shift in some kind of behavior in the market when I was seeing, it is just completely just my experience, I'm just gonna give you an example. Like for an example, this is a very beautiful order block or maybe demand area. I don't name it as order block. I name it as demand area because from here, we saw some kind of demand area. So back in the days, I used to use that, and for I think 6 to 8 months, it was really working well. As I have that kind of nature, where if I don't get the good performance, I like to see what I can do better. Of course, I don't tweak my whole, fundamental, like how I see the market structure, the way I see the market. I don't change it. The entry pattern might be different, in some kind of a market condition. So the point was that higher time frame order block is important or fair value gap is important. In my opinion, higher time frame liquidities are important and fair value gaps are important. If I have to answer it in just one statement, I will say liquidity points and fair value gaps are important. Like for an example, this was a liquidity point and this was a resistance. Tap that resistance, got down, and if I delete everything, if I delete the VWAP, we don't have a fair value gap here on the daily time frame, but on the 4 hour, 1 hour, we might be having some kind of fair value gap. So that should answer your question. So yeah. After watching y'all stream, that's amazing.
Big
That's
D
awesome.
guy 666 saying, "Hello guys, I used to struggle with my wait. I'm gonna do it in a voice. Hello guys, I used to struggle with my trading before. After watching y'all streams every day, Victor, Samir, and Richard, I can confidently say that my trading has become worse than before. Thank you guys. Is that good? Did you like that? You're a troll, mate. But thanks for being here. You miss Victor, now you're taking it out on us.
I think he knows us.
Yeah, he does. He knows us.
Yeah. Maybe I
What
know
are you seeing on the 1 minute now? Because we're busy going a little bit lower on
yes.
USD.
Let's see on the 1 minute time frame. All right, there is a
Yeah,
fresh
we've had the
breakout,
break.
and just one consolidation can be 10 candles, can be 5 candles. I need to see that consolidation, and once we break that, that will be my entry pattern. So I'm telling you guys live here, and if after the stream or while being in the stream we get that, expect me to be in the trade. Tomorrow I will share that. Win or lose, that is not the point. My plan is saying me I have to enter, so I will take the trade, regardless of the outcome. So that's what I have to do. If there is a
Do
V-shaped
you-
type of recovery, yeah.
Do you view rejections as candle closures or wicks?
It is, for an example, if I have marked this area, it should not close above the above that area. If the actually both actually it depends on the scenario. Like for an example, this is a trend line that I have on the 1 hour. If price closed above this is not the entry pattern for me. What if price came back? So the entry pattern for me is, once it get to my area, I want to see that consolidation. So that is the like it got to my area, it closed below the area. Now I want that consolidation to take the trade, which is just chart pattern. We see very basic traditional. So I have found this type of thing has worked amazing for me, and yes, I will take a trade here. Couple of candles here, and we can even do this breakout. Expect me to be in the trade. So yeah, if we
Okay.
just retest this
like that.
straight down, that is not the entry pattern I am looking for. So I'm happy to miss this. My strategy doesn't work like this. I need to see that pattern, that chart pattern.
If
And on the
you
1 minute
have a
time
look
frame.
at NAS, you will see that you've got that exact same on the 1 minute. So you have the push up higher, you have the bit of a pullback, and now you have the consolidation.
Yeah.
So what would you be
I think
looking
this will
for
be good.
here?
This is some kind of V-shaped recovery type of thing. So I think if we can consolidate and then break, that will be good. This angle is not good.
Okay.
This angle.
Yeah.
This angle is tricky right now. And even if I mark my 200 EMA on the 15 minute, let's see. Actually, this thing works on US 30. I don't know if it works on NAS or not. So on US 30, I like to see how much percentage we are away from the 200 EMA. If it is above the 0.60 or 0.70, then there is a chance we might can see a pullback at least to that 200 EMA. But as I am not trading NAS that much, so I haven't found out these type of characteristics. So this thing works in US 30, So if I give you an example, so okay, let me take this example. Okay, we was like down, we was away like 50% from the EMA, so that is not enough for me. And okay, let's take a look here. Okay, this is above 50%. We are at least 70% away from the 200 EMA. So definitely here we could have looked sells, and the nature was also corrective. We could have expected a pullback. So of course, combined with the way I build this story, that daily candles, fair value gap, trend lines here and there. If I get this type of confluence also above 70%, like away from the 200 EMA, that can be a added confluence. I think now we might, okay, now it's good. I'm seeing some kind of consolidation here. That will be
USD
good.
slowing down.
Yes. Just a break out of this.
NASDAQ slowing
Stop loss
down
can
as
be
well on the 1
170
minute.
points. All right.
I'm going to enter a NASDAQ long on the play account. Gonna have
Alright, let me
my...
see. That makes sense. We broke out of this area. This could have been the entry signal for me also, if I was trading US30, but I've taken the trade. Stop loss can be based on the 15-minute, which is below this area, 140, 135 points, going for 1-to-1. That would have made sense. So yeah, let's take a look at US30. You are in NAS longs, looks promising. Okay, not waiting for our rejection entry pattern here. That's what I was saying. So this can be the liquidity. What if we close above now? So we can consider that also,
A complete reversal on your idea.
Yeah. So that's why waiting for confirmations, extra confirmations, is very important according to my strategy. So I think even if we can go below, the analysis is still valid, but now it is not valid. Now this idea of sells are not valid. Now let's take a look at 15-minute. Yeah, we want 15-minute to close above this area to look for buys. But if we still manage to reject from here, some kind of liquidity, still reject, the idea of sells are still valid. But for now, that idea of sells that I was explaining to you guys, that is not valid. So now we have to wait again. So I think this is what real trading is. You make some ideas, you wait for the confirmations, don't take the trade.
Yeah.
And you
I
should
agree.
also not force the trade. Like, yeah, I can say this is a trend line breakout. I can get FOMO. Oh, that's a very big candle. Bullish candle. I take a buy here, but that will be you are breaking your plan. You are letting your FOMO thing get over you, and that is not good. I think in start you can write down the things. I think with slowly you can that thing will work on automation. So yeah. By the way, this USD CAD buys that I was in. Okay, we are. I'm in a little bit drawdown here on my other account.
Okay.
I was seeing that fundamental type of thing. They are saying oil prices hover above $100 after Trump rejected Iran peace deal response. So these oil fundamentals are inversely related to USD CAD. So if oil is going higher, USD CAD moves lower. Let's take a look at oil actually.
Yeah. It's not like moving like super strongly higher, but
right,
it is
like,
it's actually going a little bit lower.
Yeah, it is
on the lower time frame. Yeah, on the lower time frame, it's struggling. It looks like it wants to come and fill the gap, and then USD CAD.
This consolidation is looking good. I will take.
Is going a little bit lower.
So I will stick to this Fibonacci, and I will also monitor US30.
Nice.
That will be the
290.
main trade for me. All right, we are moving higher. Can we close above this trend line? If it did, the idea of buys will get activated. Small consolidation. The idea for buys, you can expect me in buy here. Stop loss can be below this. 225 points. Yeah, it is decent. What can I do if range is that big? I cannot force my own thoughts onto the charts. If charts are showing me some different thing, I have to take that information and use that. So yeah.
Yeah, let's see.
Let's
Definitely feel like there's a bit of a pullback on NAS that is coming into play, and then we will probably see what it's going to do afterwards. It's already swept new all-time highs quite convincingly.
We are above the VWAP. We broke the consolidation. On the 15-minute also, we closed above the consolidation. That is good point. Can we
Very
do
volumetric
this?
candle right now. Trying to push
Yeah,
price
if-
lower.
15-minute. On the 15-minute, to me, maybe we are making a lower wick. Of course, it should not engulf this whole candle. That will
If it
invalidate-
does, that's a problem. Because then
Yeah.
we are just sideways. And then I can't trade that.
Oh, okay. We have the wick here.
We have a new 5-minute candle that just opened up now. Could be a bit of a flag on the 5-minute that we're creating.
Yes, it is a clean flag to me on the 5-minute. And on the 1-minute, this is also very decent trend line type of thing. If we break this, I think we definitely are going to the upside. At least, can we use any information?
We are at all-time
Don't have any
highs.
information. We don't have any information yet. Yeah, let's just rely on the psychological numbers. 29,500 can be the next area. That is way too away, but let's just keep that,
Getting a bit
That
of a
is a
break
psychological
towards the
number.
bottom portion.
1-minute time frame.
Currently respecting the... Well, at that time, we were respecting the 50 EMA on the 1-minute. Still a little bit far
Right.
from the EMA on the 5, and I think this is
We can
going to come closer
also-
to a stop loss.
We can all test the VWAP because VWAP sometimes it acts as a support or resistance. So it is very good when it comes to indices. I've noticed that. We can also liquidate this. Still, we can continue bullish. Let
Yeah,
me
that's
delete
possible.
The 200 EMA. But if we close below the VWAP, then it is going to be risky. Gold was a really good trade here that you took.
Yeah, it ended up going all the way to 50. What is this?
I think we broke the daily
Almost 50. 47, 48.
Yes. We
It's very
almost
close.
touched the last day's highs. Yeah. How you guys trade indices? I never understood how they all move. Forex is easy.
Well, you need to understand
I
the
used to think that
underlying
also,
assets
but
within the
It is
asset.
very easy. Yes. Let me. Oh wow, we are going higher. Let me go to the 1-minute time frame. 15-minute.
You can get ready to do your entry there if you want to, Samir. And then I'll answer the indices question from my point of view. Like, yes, indices are also
I'll wait for the-
like... Oh, you're going to wait for your entry. Okay. Indices are very
Yeah, you
much
can
like currencies in the same regard that they also follow patterns. But what's the driving force behind them is the underlying company's stock prices. Like, for argument's sake, in indices like the NASDAQ, it is the, let's call it the tech companies, the 100 tech companies. So you have Microsoft, you have Facebook, you have Nvidia, you have these big tech companies that are the driving force behind the pricing. And the pricing that you're seeing on NASDAQ is a culmination of the 100 biggest stock on the NAS index, biggest stocks, their dollar value per stock. So if the stock of Nvidia goes up, NASDAQ picks up as well. So that's that 24,000 that you're seeing, or 29,000 that you're seeing is the actual culmination of all of the stock prices put together. So
Yeah, that would be perfect.
it's a
perfect
bit
example.
simpler. Yeah, it's a bit simpler than a currency as an example, because you look at all of the stocks, you see whether or not they are trending, if they're going up. You can base your trading around when they release data from the company itself, like Nvidia. If Nvidia sends out information, they themselves can try and push the stock up, and if that goes up, NASDAQ goes up as well. Because I think Nvidia is like 13% of the NASDAQ, which, considering there's 100 companies and it takes up the spot of about 13 companies is quite something.
Nvidia also broke the high, which,
the 1 week high.
which is a good sign actually. I think stocks moves in a good way. Like this was, to me, was a correction pattern. We broke that. We are pushing higher. Definitely there is a room we can go higher. I don't know why I have this arrow here. Why I have marked it like this? I don't know. Maybe in past I was doing something with Nvidia. Yeah, I only trade support and resistance on 4 hour, but it doesn't works on indices. Actually, every asset have their own characteristic, and you have to understand how it moves. So yes, like gold moves in a different way. Some people like to trade gold. Maybe they don't have a good win rate in currencies. Some people trade good in indices. I myself trade indices more. So yeah, you have to tweak things here and there. Of course, you should not change the fundamental of your strategy. The entry pattern can be different. So that's how I will put it. When it comes to switching from assets, your main part can be the same, your fundamentals. Your entry criteria can be different when it comes to different assets. Of course, you have to observe that particular market for a couple of months, and then only you will understand how it behaves in some kind of market. Like I was talking about price being away from the 200 EMA. If it is way too away from like 200 EMA, let's say more than 50% or 70%, there is chance we may can take a reversal trade. So this is the characteristic that I have noticed while I was trading the US30. I was not able to see this when I was trading Forex. So when you trade, a certain pair or asset, then slowly you get to know about that asset. But if you're doing good in Forex, I think there is no need to shift your asset. I think you should not do that. But
Yeah, and I
US30
think
we
it's
are
also
pushing higher.
important to
Yeah.
remember that just because one strategy works on one asset, that it doesn't mean that it is a universal strategy, that it's going to work on every other asset. So it's important to know how it operates and how it moves, but also knowing that some strategies are definitely more suited for specific assets. Like for argument's sake, by its very nature, a currency or a Forex pair, like any of the majors, should be trying to get to a mean. So mean reversions work really well on currency pairs. Unlike, for argument's sake, UJ or EJ or GJ, like the yen pairs, which are more of a trending currency because of the sheer difference between the yen currency and its counterpart within the asset. Stocks, by a definition, is generally appreciating. So they generally follow trending directions. They can have pullbacks and continuations. So it's just understand that just because it doesn't work on indices, that there isn't a strategy that will not work on it. So you can, like for me, like I like trending assets. So I generally trade trending assets. That's why I used to trade UJ. I tried doing that on GU and EU because it was the most stable of the Forex pairs, but they didn't always conform to my strategy. And then I was forced to move away from it because it's just how I saw the market and how I wanted to implement my strategy. GU and EU just didn't conform to it. So there's no point in trading it. Just move on to the next one.
Yeah, I think this is a misconception when people believe that every strategy works everywhere. I was having this conception also, but when I started to trade indices and I tried to trade gold here and there, I have seen like not every strategy works good in every asset. Like if you try to do my US30 strategy in Forex, I'm not sure you're gonna get at even 50% win rate with 1-to-1. I am not convinced, but in US30 it works good. So I'm sorry I interrupted you. You was about to say something.
No. I wasn't. I was going to just answer this quick one over here from Sadman Sakib saying, "Hey, do anyone facing payout delays?" There was some payout delays. It was due to a not liquidity provider, a payment provider that the 5ers is associated with. The payment provider unfortunately had some issues on their side, leading to quite a few payout delays. The payout delays has since been sorted out. Now there's just a backlog. So you will eventually get your payout. And then the real GCC asking, elaborate how to calculate an EMA. It's very easy. An EMA is a average of specific price over a set range. So if you have 100 EMA, it means that you're looking at the last 100 candles and averaging the price across the last 100 candles. But with EMA, it is exponential, meaning that it's weighed more towards the last few candles. So it'll take the pricing of the last few candles and weigh its importance way more than, for argument's sake, a simple or smoothed moving average would. Moving averages are exactly that. It's averaging the price over a data set. Big D guy saying, I sold my wife's wedding ring and blew the account. She found out about it. She told me she is going to divorce me if she ever see me trading. Any advice, guys? Yes, my advice would be find yourself an office and don't let her have the keys, and then move to the office when you do your trading. And if she asks you about trading or whatnot, you tell her, I don't know what that is. She must be thinking of her boyfriend that she was dreaming about. I think that would be the best way to approach that. Is just never bring up trading ever again and do it behind her back. That's sure to save your marriage. Anyway, Samir, it's we've come to the end of the stream. Is there anything that you would like to... my wife is sitting over there laughing at me after the advice that I've just given. Big D guy.
He's yeah, maybe I know you. Maybe. Anyways, so yeah, now US30 has broken to the upside. I have broke that trend line that I have marked. So this was a risky entry, but I think now you can look for buys. But for me, if I try to enter, I think I would have taken a risky buy here. Yeah, but I am not in yet, so I will wait for some kind of consolidation. Even a small consolidation breakout, that's fine. If you make that angle type of thing, that is also fine. So that will be my entry signal now on US30, unless we just straight came to the downside like a V-shape recovery type of thing. So that will not be ideal. I will not be interested in the trade. So that will only make me interested. I can also do it like this. You know, if we do this, that will be good. So only this is what I'm looking for in US30. If we impulse way too much to the downside, I think that I will not take the trade. Then it will mean we are pushing high, low. We don't know the direction yet. So I will just skip it. And that is it from my side, guys. So as we are at the end of the stream, I would like to thank every one of you. You tuned in, and some of our regular viewers. Big thank you to you also. And if you're new here, make sure you are liking the stream and you are subscribing to our channel so that you stay tuned for our future things. We do giveaways. We have a lot of community things here and there. You will get to know only if you are subscribed. So make sure you are doing that. And with that being said, I will see you guys tomorrow, same time. And thank you, guys.
Awesome. Thank you very much, Samir. Everybody that has joined us today, thank you very much for joining us. We appreciate every one of you being in here. Good and bad comments. We appreciate all of you. If you haven't already, drop us a like, drop us a subscribe, and hit that notification bell. You know when we'll go live. For everybody else that is trading today, do take care. The tangerine tweet terrorist Trump is awake, and he may just go and cause some unexpected, well, at this point it should be expected, volatility in the market. So do take care. For everybody that is joining us tomorrow, have a great day, and we'll see you all tomorrow. Enjoy. Cheers. I think Remy forgot to run the outro. I'll do it.